Alrighty. Can you hear me? I believe you can. Alrighty. Oh, that is bearish right there. Why isn't this thing working? It says I have a long on QQQ. Just go ahead and close that out. Now, why won't this let me enter a position? Logitech. Why aren't my hotkeys working, you piece of junk? Logitech. Piece of crap. Update available. Install and relaunch. Of course, that's why you're not working. Oh no, it's just the shitty paper trading software on TradingView. That's why it's not working. Lag Central. That's what they should rename paper trading. Okay. I originally had a bearish outlook on the day, but this right here was I was expecting it to drop to about here and bounce, or maybe come down to the first pullback and bounce, but it came much farther. And then it actually came back to my 50% mark and it bounced downward. So I'm shifting my bias to bearish on the day. Overnight, I saw what appeared to be a buildup of long positions. Right here, kind of got this little stair step, building up longs under these, and then they would come down and sweep it real quick. Like right here, building up longs, and then they swept them. They built up some more. They swept them really quick, right? However, they had massive short positions over here, and then they even added more short positions, over here, right? And then over here on this leg, they were actually starting to build out some longs. They swept those. Um, they were kind of doing both sides, but I saw over here they were doing like all this. They were building shorts and then sweeping them on the upside. You see that? Building shorts, sweeping them, building shorts, sweeping them. And they came down here and then they swept all those longs from there. And then this is more long building, and they've been long building. So I figured maybe they exited their long their short position, or maybe they're using these longs to exit their short position, but maybe they still have some of their short position left, and they need to drop the price more to fill it. Maybe, just a guess. I don't know. Or maybe I was right, and they're just wanting to add on to their long position down here, and then they're going to skyrocket up. But the fact that they're bouncing down off this 50%, that could be bearish, or it could just mean they want to reload their long position at a discounted price. Either way, they have some inclination, some desire to stay down here. I tried to enter a short up here, but it wasn't letting me do that. So I'm going to set my stop loss if Lag Central will let me. Right in the money. Come on. My gosh, TradingView paper trading sucks. There we go. Sheesh. All right, and then this right here is NQ, by the way. I'm going to have to reproject some new targets, some bearish targets, because all the targets I projected were bullish targets. I found it kind of odd that they were reverse course in one day, because I knew they had some deeper targets down below. So it makes sense that they're going bearish here. Whoop, 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 whoop. Let me lock that in place. I don't want to move that. I do, however, want to trail this. And I'm just going to pretend I entered this on a real trade. Unfortunately, I'm not making real money on this today. Let's see. I might find a good opportunity to get back in on a real trade. I do have Sierra chart open. Okay, so let me try this and see if this works. If I enter a short right here, nope, doesn't work. Dang. Now they did bounce right off here, so that could be where they go long. Oh my gosh, what is going on with this mouse? TradingView is missing from my hotkeys. Of course, Logitech Options software is the worst damn software they've ever made. It never remembers the settings. If you ever get it, always back up your settings, because every single update will erase all of your settings. Even if it doesn't erase all of them, it'll erase some of them. Like the last thing you saved, gone. Restore settings from backup. From this computer, obviously. Restore backup. Done. Now, I don't know if I actually backed up when I had TradingView on here. I do. Okay, good. It backs up every day. There we go. TradingView's on here now. Piece of junk. Okay. There we go. All right, I've got a short position. Don't know if I should. It's just paper trading. I'm feeling I probably shouldn't be short. I think my original hypothesis going long is decent. Well, let's say if we were short, what would our targets be? Well, our first target would be 127. Just based on yesterday. Yesterday's target will project 127. We just hit that. The target from, wait, nope, that's not how you do that. That's backwards. My bad. From here to here is how we would project that. Okay. From the low of the previous day to the most recent high. That swing high would put us around 161.8. Yeah, we went past that. All right, let's see this swing right here. What does this swing give us? Yes, that was a bearish target, 127 to 141. Looking good. I'm pretty sure that probably also aligns with this move right here. It does. That's a 127% target there. So now a pullback. What kind of pullback was this right here? 68%. All right. What would a 68% pullback? Oh, right here, huh? This would be a 68. Let's go ahead and enter another short right there. All right. We increased our short position there. Now, I actually was bullish on the day. I don't know if I really should have added to my short position. Let's see. If they were just trying to exit the rest of their longs or exit the rest of their shorts, they probably had the opportunity to do that. Or if they were just trying to add to their long position, I'm going to set my stop loss above the 50% mark. If they break the 50%, if they bounce over that, that means I'm wrong about going short. I'm going short because there was a big fair value gap right here. They came up into it at the 50% and then bounced down. The fact that they bounced here could just be a pullback, right? But if they break through this, that means they did indeed change bias, and I was originally correct in going long for the day. And should have just been more patient. Let's see what happens. I'm not just gonna flip flop though. I'm not gonna change my bias unless this breaks. And they barely broke into this. Oh, this liquidity cloud. That's old. That's old news. This isn't even valid right here. That's a cloud, not a pool. So I'm gonna say no extension on that. That got broke right there. I'll just put that right back here. I need to do new liquidity information here. Goodness, should have done this. Oh, this is the other. This is a different chart. That's why it has limited information. I don't know if any of you have noticed this, but I don't know. For the past week, it's like they did some update to TradingView that sucks. Okay. Every time I go and I click on one of these hot buttons, like half the time it doesn't click. Like I'm gonna do it again. I'm gonna go click up here. Okay, that worked. Okay, it's working now. But a lot of times I'll go click a button, right? If you click too fast, like it thinks you want to drag it, right? Like they should make it so you have to like click and hold for like, I don't know, at least 100 milliseconds or something before you can drag it. I don't know if that's something they did intentionally, but sometimes like I'll go click and then immediately move my mouse, and maybe I haven't let go of the button yet, and it does like maybe that's what it is. It's doing a drag thing, but it never used to have that issue before. So I think they changed something in their code, because I never had this issue before. All right, so right here I'm going to put a line. I'm just going to make this liquidity ocean just because that's a nice thick line, just so I could see. Oh, look at that. That was quite something right there. There's a lot of liquidity sitting there. That is liquidity ocean. And all right, then there's a bit of a pool right here. So I'm going to call this liquidity pool. All right, let's see where that lines up. Okay, they did hit that. All right, where's the next bit of liquidity? Put that right there. Bring this down. Gonna have some liquidity right here. Quite a bit right there. Where's gonna be some more? There's gonna be some more down in this region right here. A bit down in here. At the bottom of those candles, or some candle bottoms there. Let's go with that. Right down in here, we've got some more. And then down here, we've got a low resistance zone. It goes down to here. And then we've got some, this was fast developing right here. Like it took off right after. There is liquidity here, but I'm going to label this. Actually, that'd be like really bullish liquidity. They let it build up there. That's actually that's noon. I'm gonna rename this to premium noon liquidity pool. Right there. Beautiful. Okay. This one here is also noon time. Whatever. I'll just name this noon liquidity pool. This one I called a premium because that, you see the way it's stacked up there, like so close, in a tight little range right there. That's why I called that premium. You got 1, 2, 3, 4, 5 minutes of candles right there. This one, 1, 2, 3, 4, 5, 6, 7 minutes. This one has some bearish activity. This one swept those ones. I haven't done a volume profile analysis on those yet, so I don't know how they really compare, but there we go. Now we got some liquidity on the books, on the charts. All right, let's see what's going on over here in our 5-minute opening range. Okay, so we can see that we did tap this liquidity pool. So let's go ahead and update these ones. This one can come over to here, and then we'll set it to no extension. This one can come over to here, and then we'll set it to no extension. All right, now we've got that liquidity mapped out. Boop. Boop. All right. So they didn't push into this. What are they doing right now? That's the question. Oh, dang. They hit my damn target again? They went just above the 50% pullback. Bastards. I was up like 8,000 yesterday. Then they knocked me down to 6. Now I'm down to 5. Are you kidding me? The way they're pulling down like this really fast now tells me they're swiping this long liquidity. So I'm going to go long. They did break the 50%. I said that would be something that shifts my bias. So bias shifted. There we go. Now, generally, I don't like to trade inside this range. Ugh. I don't really have, I guess there's a fair value gap there. I don't know. We'll see how that plays out. In this case, I'm going to say if they seek out new liquidity, I'll shift my bias. I should have waited for this to close up. You know what? Let's actually close that. We're not gonna. I'm gonna wait for an actual valid buy signal. I'm not just gonna enter that. Like this right here. Let's see. If I was looking at this right here as something bullish, like on a 5-minute chart, this might actually appear bullish. Let's see. 5 minutes. On a 5-minute chart, this is a bullish thing right here. So in that case, I would have looked at it like this to this, and then I would have looked for a pullback to about here. Where? I would have looked for a pullback to right here to enter. So this actually is a valid entry place for a long position with my trading style. So it's not wrong to go long here, actually. from a 5-minute chart perspective if I do have a long bias. So, and in this situation, I would then put my stop loss right back here, below the low of either this candle or this one. Yeah. Now, if I was going short, let me see if there's any justification for a short, because I don't want to be unbought. You know, I want to. Rolo, how's it going, buddy? You're walking around a lot. You're walking around a whole lot. Sit. Okay. Drop back down to a 1 minute. Now, is there anything here? Rolo, how's it going, buddy? Yeah, good boy. It's right down here. We exited, barely, came back up, tapped into that pool. Small one, came back up. This did form a fair value gap. We closed that, coming back. I mean, it could be a bearish move, or they could just be trying to reload their long position down here. If that's the case, they could still want to tap into this pool. So, you know, I prefer to enter off a 1 minute bullish signal. That 5 minute one, I mean, I'm gonna be honest, I don't have a ton of confidence in it. Because I mean, if they want to go long, why wouldn't they come back and tap into this pool and leverage it, you know? But right now, let's see, it's 10:11. Right here, this was 9:55. Boom, 10 o'clock. 10 o'clock, they came down here, 10:10. Now they're, yeah, accumulating. Usually by 10 o'clock is when they kick off their move, but they're kind of going both ways here. So they're keeping me on my toes. I'm feeling like the bearish move is probably the move. It doesn't mean they don't want to go long. It just means they want to seek out more liquidity. Or they just want to add to their, they want to add to their long position. Today could be an accumulation day where they just kind of stay in a tight little range building up. You know, I suspect based on what I'm seeing, today is largely going to be a range bound day, at least for a while. I don't know if it's going to be like this all day, but they will probably stay in a range like this, potentially even trending down into these other pools. If they don't want to tap the pools, maybe they'll be range bound just underneath, for the most part, underneath this 50%. Because they also might want to save these pools for exiting a short position later, right? Like if they're planning to come up here, then they'll need longs to exit their shorts. So if they tap into these now, they won't be available for that later. And right now we're in the early morning hours after the market opens. There's a lot of participants. So why not just leverage all the participants to build their long position, and save this for later, right? You save this so you can leverage it when there aren't a lot of market participants. That's what I'm thinking right now. I got my long position. We'll stick it out and see. Okay, now this is looking good. What does this look like with Heikin Ashi? Yeah, that does look like it's going to reverse here. Reverse. Now, what are we looking at in terms of pullbacks? 68 to 78. 60, 62 to 78. Interesting. Interesting. I do still feel bullish on the day. In fact, they're bouncing here off a pullback. Man, it's not that they can't keep going lower. If they do want to go lower, they would be targeting this pool right here, you know. So, yeah. Which means if I don't want my stop loss to get hit, I could put it potentially down here because that'd be even past their 161 target. But that just means I'd go into drawdown. I'd rather they hit it, and then if they come down here, I enter a long. Ooh, whoopsie. So if they're going to go long from here, where would they be aiming? Back up at the top of the 5-minute range. But it looks like they're dying off. Like this is just a pullback. Candles kind of getting smaller bodies, smaller wicks. And that just looks like it's kind of stagnating right here, right? That's 38% pullback. So this is just it's looking like it's part of a move down. I'll have to see if we get some more momentum pushing through here. Okay. Oh, and also I could turn on my time cycles here. Start this at, what was it, 2:30? 2:30 until 10 a.m. If you're looking at this, wondering what I'm doing, I'm using the wrong layout. Or the wrong 2:30. The wrong template. So I've got a template over here. There we go. This kind of shows sorry, so I kind of know what phase we're in, where we're at during the day. This right here is the 10 o'clock hour. All right, that looks good. I'm going to bring my stop loss up. No need to risk that. And then I'll put it right here. I could bring it back to break even. Well, they are, a lot of times they do come back and test. The way they're moving away like this, I don't know if they will. I'll put it at break even. No need to risk money. I'm already down. I was already down today, so let's not add any more downness. But generally, this belongs here. This is where it goes, technically. You know what? I'll just stick to the books. I'll put it there. But they're coming up to that 78. It's like, let's see if they come. The best thing I could see right now is that they come back and they come right down basically to my entry, and they bounce off of that. That would be incredibly strong. If they come down, doop 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 doop, and then they bounce off of this purple candle, like that'll tell me I'm in the right position here. Or if they just keep going up, I'm perfectly fine with that too. Obviously. But this is you know what? I'm gonna take the no, I'm gonna stick to my guns. I'm not gonna keep flip flopping. Let's just stay in it and see what happens. See, what happens is if I move my stop loss up here in the money, like it's not protected, right? I feel safe that if I'm right about being in a long position, this won't get hit. But if I move it up here and I'm right about being in a long position, it will get hit. And then basically the moment it gets hit, it'll bounce. And then I'm right, but I'm not profitable. So why the hell would I do that? So I'm putting it here where it belongs. A lot of people they'll move it up here into the money. So they think, oh, that way I can't lose anything. But then it gets hit and then the price bounces and they're right. But now they're out of the trade. Because they weren't willing to take the risk. If that's the case, don't enter it until you get the confirmation, right? So just don't be in the trade. Recognize this as the candle that it needs to bounce from, and then wait for the bounce, and then buy in. So what I'm going to do is, if it bounces, I'm going to buy in with a second position. So like I've got my mouse clicked, like I've got like the like the forward and back buttons on your mouse. I got those set for buy and sell. So if I just click buy anywhere above the price, it's basically the equivalent of a market order. So I'm not buying on that right there. Like if it comes all the way down to here. Oh, actually, this one. So, I mean that I'm fine with one position. If it came all the way down to here and bounced, I would have gotten two. It still might. But I want to see that it can't break this level before I scale into my position. I don't want to add right here thinking, oh, well, it's bouncing off this candle. Technically this candle does have, oh, hold up. The opening range here, my 5-minute box, it was kind of covering up. Let's see. So we had, let's just drag that over to 10 o'clock. It actually bounced off the candle wick. Looked like the wicks barely crossed. That actually is a pretty good sign. Let's, it'll oftentimes come down to the candle body. But a lot of times when it does bounce from hitting that candle, it's usually pretty quick, it's pretty expansive move. And that's not what we saw right here, right? Like this did not engulf this candle. What I'd be looking for is the move where it comes down to here, and then you just get like a big candle, like this right here where it goes like 1, 2, 3, like that. Like these types of candles is what I'd be looking for. Like this right here is the type of move I'd be looking for to happen in the opposite direction. That's not what I'm seeing right now. So that's why I'm not adding to my position. Right, my position's gaining value, so I'm still benefiting from this. But I haven't seen the confirmation that I need to see to scale in. And if I scale in without that confirmation and I'm wrong, then I'm scaling into a losing trade. Because if I don't have that confirmation, it turns around. Now I lose twice as much. So see, we aren't breaking this. So if we can't break this level, that means that this right here is actually a bearish order position, and they're holding that. They're holding that. So in that case, I'm going to exit. Lock in that small win. Now that win came after 2 other losses totaling like $3,000 on this paper trading account. So it's not much. This right here, that was a big fair value gap. This is closing down. I want to see this candle close down big like this. This is exactly what I want to see. This came in here, respected this twice. So right here, I would say that this is most likely some type of order block where they're cementing their bearish position. In which case I want to be projecting the opposite direction now. So if that's true, and they couldn't break it twice, then what you want to look for is fair value gap, which we have right here, pull back into it, and then expansive move away, like this right here. So now with this, the ideal place to enter this trade would have been right here. I already missed that opportunity, so I'm going to enter live, and then I will look for another entry at my ideal location in case it comes back again. Right there. So maybe I'll get a better average entry, but that's my bearish position right now. And it's not that I'm necessarily bearish on the day, but I'm bearish into this next swing down here. So I'm going to set my take profit, aka profit target right here at 127, but I'm not actually aiming at 127, right? That'd be stupid. You don't want to aim at a number, you want to aim at what they're aiming at, and they're aiming at liquidity. So they engineer these moves so that way the profit targets will encompass the liquidity, and we can see the liquidity ends right here. There is some liquidity here, and they might tap it, but if they don't, do you want to miss out on cashing out? No. So just be a little conservative. Bring it right here. If you know there's a high draw to come here, put it right before it. They'll cross over. Boom. Odds are they will hit this. If I put it right here at the edge, will it get hit? If I'm right about this being a bearish move into this liquidity, yeah, they might even send a wick down to here. But I would prefer not to take those chances. I mean, look at that. That's 1255. That's 1360. Like, is an extra $100. You might make an extra $100, or you might not get filled, and then by the time you exit manually, you might have lost a few hundred, and maybe now you only get filled for 8 or 9. It's like I'll take the $1,200 fill, thank you. So now let's see if we get that move down into our target. Actually, now that's the kind of bullish move I would have been looking for. But this, because I'm bearish right now, the way I'm looking at this, now this stop loss goes back here behind this candle. Right now, my bias is short bias. So I'm not actually looking at that as a bearish move, as a bullish move. I'm looking at that as a liquidity sweep. Like a manipulation move. They're coming up really quick to sweep the liquidity. They didn't quite make it to this candle top yet. So they might try again right here. And remember, they play across time frames. So I mean, there's scalpers playing on the 10-second charts, 5-second charts even. There's algos playing on tick charts. So when you see this and you're like, why didn't they pull it up to that candle? You know, we as humans oftentimes use 1-minute charts, but The algorithms don't necessarily use 1-minute charts. They can look at things other ways. Now, also, they could just be laddering this for later. So that way, after the move down, they have short liquidity to come back into to close their long position. So this could be part of that, or they could just tap into it again later. We'll see. Oh, there they just went into it. Perfect. So we got higher highs. This is all spelling bullish. What? We'll see. And this right here also could have just been a liquidity sweep into a bullish move, right? This right here does look like more of an engineered. No, not really. I mean, it's just these ones are quick. Almost targeting that. The fact that it's not breaking this level is the key indication for me. You know, once it breaks that level, and particularly once it breaks my stop loss, and my stop loss is also up here, beginning of this bearish move is another, order block type thing. So, like, I could potentially look at this one as the same deal. I already have my stop the same place, so no need for another line. Now I want to see if this breaks here, or if it also gets rejected. So that got, let's see. Oh, nope. That's might hit my stop. Put it up right there, just past this candle body. I want to see if it breaks past that. So I didn't just move it up randomly. I want to see if this level right here can hold. So that was a calculated move. This is more of a short-term order block, potentially. This could have been, like, this one was developed before the market opened. So this one has potentially higher precedence of holding. So I want to give that an opportunity to protect my position. That's why I moved it back here inside this order block. Because if they are still wanting to just stay below this level, if they want to stay below this level and they're not pushing down, it's because they're either building a short position. No, they'd have to be building a long position. If they're wanting to hold the price below a level, that means they have a short position. They don't want you to trip their stop, or they're building a long position and they want to buy at a discount. And when I look at this, I'm not seeing really super clear structure either way in terms of whether they're loading up on shorts or longs. So I don't have a ton of directional information here. And typically in this case, shouldn't be trading inside this range anyways. But this right here, like this clear stair step up without sweeping hardly any of the candles below and then harvesting it, that does look like a bullish move. They moved down quickly, right? So like, I guess what you could say is like during uh, a bullish accumulation or a long accumulation, like right here, they accumulated longs. When they manipulate into it, the manipulation's quick, right? So during accumulation, if you can tell the bias is bullish, which I presumed from all the stuff back here, like you can see all the bearish moves are quick, right? Vroom, vroom, and they're still doing the same thing. The bearish moves are quick. They're quick, and they're getting smaller. So actually, everything I'm seeing tells me I was right about my initial bullish bias. And the fact that we're making higher highs now, they might come down and sweep them. I don't know. I believe this bearish position I'm in is definitely the wrong position to be in right now. They can pull back down here. If they do, that's when I'll close. I will bring up my take profit because I don't think they're actually going to be down there. But what I could look for is the level of a pullback or a move. So like right here, if they have a bearish move here, it would basically to sweep this liquidity. So by putting this like right here at just these lows or right here, I'm in the money with that. So if they do come down here, actually it's in the money right now. I can exit right now. Boom. Okay, so I did not take a loss on that. The fact that these bearish moves are quick shows that they're harvesting the bullish liquidity. I'm going to wait for it to break above this 5-minute range right here before I enter another trade. I'm not necessarily a huge fan of trend lines. Nothing really wrong with them, but liquidity sweeps can push past trend lines. So they don't tell the whole story. Now right here, we came back to the back of this candle body, came back to right around here. So the next push up from this one, there was the 127 target, right? So now a pullback here. From here, if they want to target, let's just see how far back they pull, right? Because we said that this bearish move right here, like if they wanted to do another liquidity sweep, they could target these lows. So, I mean, if they did target these lows, if that's where they went, the next target would be right up here at this level of liquidity. Right, so this could be a potential profit target right here. If they do the thing. We'll call that profit target question mark because it hasn't actually formed yet. All right, it all depends on where they go. And this right here, we'll make this a profit target question mark as well. Not that we're profiting on this down move, but right now, if you wanted to trade inside this, you could trade with the trend, but just realize that you will be in drawdown every once in a while when they do these things. I'd say if you're trading inside of an accumulation phase, you might want to trade two different instruments like NQ and micro NQ and have like on a decent pullback when they do a liquidity sweep like this where they come back to a low. That's where you can add to your real position like on NQ. So like right now, if I think they might come down here, so I'm going to put a long right here, right? This is actually below the range. So if they push down into this, that's where I could go long. And potentially if they were to push down into this one, I could also add to the position. This was the 127% target. So this is the one I'm actually aiming for. I don't think this one actually lines up with anything. Let's see. I mean, maybe. Like the bigger swing there. Like, but like the last swing doesn't really line up with anything. And this is like 2 swings ago. It's, I guess, I mean, if they want to push, they could justify it with some sort of math. But it's obvious to me they're coming down to this one right here. Now I'm going to put this right there because, oh, they tapped it already. I'm going to just get in. This candle right here is the one they hit. I saw that those were really close. A lot of times they won't go to the bottom. Sometimes they will. But if there's another candle right next to it, they'll just take that one and leave. And I didn't want to pass up that opportunity if that was the end of it. That's why I did that right there. Because if I kept it down here, like I was putting it just before the lows, right? Assuming they were going for the lows. But then I realized that I was in between these candles, this one and this one, and I thought they might only target this. So it should be just behind that. And then as soon as I thought about moving it there, I realized they had already bounced off that price. That's why I dragged it up. So if you were wondering why I did that, like that's exactly what I was thinking in that moment. So now seeing this, just if you didn't want to enter the trade right there, seeing this as the potential bounce location, like basically the profit target should be right there. And then you see the bounce and then the big engulfing. If this is your confirmation, the way to enter this trade for my system would be right here, and then entering right here on this price right here. And you see right there, it pulled back to that price. It's the 20%. It's hard to see it. I will change the color. That 21% right there. 21. And then I'm going to make it, I can't really adjust the line thickness or anything. I'm going to make it blue. I don't think I have blue for anything right now. Okay. So we got too much going on here. In terms of those Fibonacci's. Too many Fibonacci's. Okay. So right here, from the low of the candle that gave you your confirmation, particularly the low of the last bearish candle, if you're looking for an up move, this right here, the low of this candle to the high of the engulfing candle. And then you want to enter on a 21% pullback. So this would have been the ideal confirmation order entry target. So I actually already have a better position. So I didn't enter again because that would have actually brought up my price. I'd be looking for more premium entry, which is why I got in on this, and then yeah. So there we go. That's my position for the day. I really like, honestly, I'm regretting the fact that I didn't enter into that position on my cash account, like real money. What I can do is look for a 5-minute entry. So for a 5-minute entry, I mean, we're in consolidate. The 5-minute entry would basically look like this. Entering on the 5-minute chart would be this candle right here would need to engulf this whole thing. So it would need to close above this. So it would need to close somewhere like up here in the next 1.5 minutes. And then I would basically get my pullback right here at the blue. So I'm going to open Sierra chart. I've got it open actually. And then it's on a M1 right now. Now again, I think they're just going to be consolidating for quite a while. the next time for them to really move, like the next big move opportunity would be, I need to set this back to 3. This is a manipulation time period. Probably around, well, any manipulation distribution or when like the big directional plays come in. So right here when we hit manipulation, you see how it came down? They want people to think it's bearish. But now we get the actual move up. Distribution doesn't necessarily have to happen here, but generally the expansive move will happen here. But the time windows are, they're not necessarily broken down as cleanly in like higher time frame. You will often see the Fibonacci levels be more respected. But intraday, it's more like even time periods, like 30 minutes, 10 minutes, stuff like that. So I actually prefer on this to use, you know what, I should remake that, but I'm going to add an indicator. Was it like time cycles, I think is what it's called. I like I trade time or I trade size. Time cycles, Zusi 2.1 thousand. I think that's the one. Okay. Yeah, so right here, oh, I don't like those colors. Let me get the colors I use over here. Time cycles, copy. When I get this one, I'm going to remove it, and then I'm going to paste my other one. That way it has all my color codings that I like. Okay. So we got the red, yellow. So right here, 10:25. So that's to 10:30, 10. Yeah, so basically 30-minute increments. So for an hour and a half, that'd be like basically 33%. So if I come back here and I get this, I would want to change this to basically 0.33 and 0.66. And I don't really need this one. And then I can save this, save as, and I could call it AMD intraday macros, AMD3 intraday. Because just splits it into the 3. But intraday, so it's like more evenly split. So like right here's the manipulation, and then there's the distribution in 30-minute increments. Or rather, it breaks it down into even thirds. On a higher time frame, when you're looking across like 4-hour charts, daily charts, weekly, you will see it more align with the Fibonacci levels. But intraday, it tends to happen more in thirds. Seems more noticeable that way to me. And I'm assuming that's why they, I mean, this one does it too, and it just lines up really well. Now I can turn this off. It has a lot of useful information if you know how to use it. But it's a lot, and I map my own liquidity. So, like right here, like you'd basically be targeting the last, the morning, the New York AM open at 7 a.m. The buy side liquidity is sitting here, so basically you could use that as the next target. If you want just like an easy target, boom, right there, right? It's already spelled out for you. You could see that the AM distribution window that we're in right now, like that's where the buy side liquidity is, because that's where the current high is. That's the window we're in. But you can look up and see where the next target is, right? So you could like trail your stops up. Like you see it push past that, you basically know where the next place it's going to is. These are your intraday targets for liquidity that has built up on the day. So if you know you have a bullish bias, you can use this and you can see like, okay, it's coming up there. If you want to lock in your gains to here, you can just drag your stop loss to here. If it hits, oh well, you made money. But if it just keeps on pushing straight up to here, now you could set your take profit there. You can set your take profit here and just exit, right? But that's not really that much farther. So if it's gonna push up here, push up farther, you can move your stop loss wherever you want. I like to keep it behind an order block, and I find them on my 1 minute chart. And there are other indicators that can help identify order blocks too. I don't usually keep this on a lot because I have enough lines on my charts as it is, and that's just, it's a lot. Like when I'm in a trade or when I'm just looking to see where we are throughout the day, sometimes I'll turn it on, but then I turn it back off. So right here, we're up 1,300. That's not bad. And we broke out of this window. So other traders that trade like this 5 minute window, what they'd be looking for is for it to exit and leave a fair value gap, which we got right here. They would look for a retracement into the fair value gap. So this would be the next order entry. This is the one I'm going to take right now on my cash account. So they want it to move past, basically come down into this, and then they want to see an expansive move away. It's right here. That didn't completely close it. But basically you want to, generally you want it to come down here past the fair value gap and then expand away. So I'm kind of going to wait for that. The main thing is just the expansive move away from a bearish candle in this case. So like if this one were to just start shooting up, that would be my confirmation that basically this is the order block. And then I would enter on a retracement with the, and I'd enter it at the blue line, right? That's what I'm looking for. So right here, this is my Sierra chart, and I've got Fibonacci over here too. Somewhere here, there's a word fib right here. So, you know, like fib, and I can drag that out. And on this one, my 21% is the gray line. So I enter on the 21%. So I've just got that on my other screen. And as you can tell, it is a bit more responsive than TradingView. I drag this over, and then I drag this. I mean, if you notice over here, like this is kind of hard to see it because I have so many different levels showing. I can adjust these font sizes. They're actually, I think those are defaults. So it's kind of hard to read them all. I can also turn on a background where it shows the, you know, the order book, like you'd see in Bookmap. But it adds too much to the chart. This tells me what I need to know right here, right? So I don't really need the numbers, which is why I don't care to have them really big. I can see like there's a big order sitting right here and up here and up here, right? That's more than enough information for me right now. So right now they're basically trying to hold the price here. Now someone's trying to bolster the price here. Oh, nope, they're adding. Someone's adding to a long position. That's what I'm seeing. They are still trying to keep the price down. They're not ready for it to expand away yet. They're protecting this level right here, which if we look over here at this, like this is a distribution phase right here. That's what the green means. And we distributed from a high right here, and we had really fast movement away. So the fact that they're protecting basically this level where we got rejected from, like right here. Like, see how this one has a little bit of orders and this one has more? To me, like I see that as a buffer zone. This is the first line of defense. That's the second line of defense. It's like right here, if I draw a line there, just because I want to be able to zoom in and then I won't be able to see the DOM. We could say what's at that level, right? Well, two things we can see. This blue line right here, this is the midnight open, and they're keeping price below the midnight open. The reason that's significant is a lot of times they'll build buy orders, but below the midnight open. And then they'll sell them above the midnight open. It's sort of like a balance level. So right down here, if I'm bullish, right, I would look at this and I'm seeing a lot of bullish activity. Like right here, I mean, look at all these sweeps, right? Like this nice stair step, and then they sweep it, stair step, sweep it, right? A lot of bullish building down here, and right here, this is a bearish order block. They've got these, and then this big engulfing candle right here pushing down past it. You can see price moving up right back to that level, getting rejected again. Oh, it broke past. We're good. Now's the expand. Oh, I didn't enter the order. Damn, I'm over here explaining everything. I missed the pullback to enter. Oh, shoot. Dang it. It pulled back. It did. Oh, man. I said I was going to come over to Sierra Chart to get the entry. So let me show you. This right here is what I was looking for, right? Like this. So my entry. Oh, I'm getting another one. One. Okay, I got my order. Putting this back here. Now really it should probably come back here, but that's more than I'm willing to do, right? Oh wait, did that hit some profit target or something? Why are they dropping down so far? Income retested. See, like they retested this. Are they gonna break it? Are they gonna bounce? So now this is the difference. That's 15. So if I put it down here, I'd basically be risking like 45 bucks. Let's see, this is 753. That's 846. That's about 100 points. That's a $200 risk for me. Now this is the order right here. This is where I put it, behind this candle right here. So like if I'm this, let's see, the first expansive move. Now the low of this set of orders right here, if you want to look at these bearish candles, is right here. This is where I'm putting it. Now they could be coming down to sweep this. And the original order location is actually down here. So this is really the only guaranteed safe place to put my stop. I could look at this as an order block and then a push away. Like I could move it here. But if I'm going to move it here, I might as well just move it to the guaranteed safe spot for the long position. So, yeah, like I said, that's a $200 stop right there. And I try to get now on a bullish move. Let's see. I mean, that was actually from here, 753 to up here, 850. That was a 100-point move. I mean, that could have been. That's a pretty good move. Right here, that's over 161%. move right there. They moved up to here, and that they actually did that pretty quickly. Which this right here, the moves down were quick, so they're kind of low liquidity. Um, so that's kind of one of the reasons it can move up so quick. Up here, there was probably some shorts. Probably filled some more positions there. Let's see. Now on the day, the target for the day, way I calculate that, there's a couple ways. We have a new low for the day, right? So what I can do is I can look at the low of the day and then the swing high, like before that low. Like I could do that swing high, right? But like the next high, like for the bigger overall swing, and it takes us up into this range, right? So in this range here between 127 and 141, we can see that there's a peak right here, which is why I have that listed as profit target. And then this one right here, I lined it up with the peaks of this. So this would actually come down. I would probably actually put that more like right there, so it's just before the peak. So basically the top and bottom of the cloud is where I would aim for. So getting out this price level is 868. So my profit target right here, I could put it 868 and 894. So I'd want to move this to 894. I put it like, I could do 868, right? Like that. Or 894 would be around up here. Oh, you're not seeing Sierra chart. It's okay. I moved my Sierra chart. So I got that one up here. Now for the day, the profit target for the day, what I do is I just keep moving this back to other swing highs. Like these right here are all kind of in line. So if I just move that there, I can see that the 127% is also right here. So the fact that 127 and 141 of that other one are here makes this a higher probability target, right? So I'm actually going to come here. I'm going to increase the line thickness and make it dashes, right? Because this one's more significant to me now. Now we come up, drag it to the next high, and we could see that we're targeting sort of in the void. That's not really a target. And pushing past the void takes effort. Usually they'll consolidate in here. They might trend upwards in consolidation. But really the target would be this 141, right? Now they could push to it, right? They could push up real fast through it. But a lot of times they'll take the opportunity, since there's no liquidity, to build liquidity. So there's two things they can do. They can consolidate in here and create some new liquidity, or they can just push right past it into the liquidity. So basically the bottom of this next area is a profit target. Now, if we look for the daily target, right, from the high of the previous day, we're looking basically at new all-time highs, right? I wouldn't necessarily target new all-time highs, but within that range are the all-time highs. So I would target this liquidity area, right? So like around here, I put it below there, right? Because if they're going to send wicks up, maybe they might just send wicks up to this first level, or they might do all of them. But if you're getting to move that big, I'll just take the exit right there. I mean, we're talking about 20 points. I'll sacrifice 20 points for a guaranteed exit if they go up that high. You know what I mean? So that's how I look at that. So my next target after that would be how much? So that's that target. And then next target, this one, I just kind of lined up with the like the 120, like if you get this and you put it like to each different high, like I was saying, like if this is a profit target, that is going to end up being a high. So if you were to drag a low to a high type deal, um, we could drag it back here. We can see this is another profit target, 127, and it lines up with an area of liquidity. So I think this is probably where they would end the day, most likely, 29,940. So I'm going to, now, I'm not saying they can't push higher than that, but I mean, once it gets up here, they have moved quite a bit, like 200 points in the day. And they could do more than that if they want, but I'm not going to necessarily increase the boldness of it, but I am going to make it dashes so it stands out. Just to signify that that's the next likely target. But the most likely target that I'm looking for to get hit right now is just this 894 level, right? So right here we hit this twice. Push up a little more. So we hit this level right here. So I didn't put a cloud here. But if I would have, the cloud would have been from these right here up to about here. Right, this would have been a liquidity cloud. We'll put no extension because we know part of it got hit. It would come up to here. Let's see, where are the, so right here. And then this comes like right here. You got these right there, those candles right there. And there's sort of a gap down to here. And then this would be another cloud. Right, so this one right here I would do as a separate cloud. Boom, boom, boom. That would be a different cloud. And then we could see it moves away. So this will be one cloud. I'll put liquidity cloud, no extension. I know that one got hit. This one may not have been completely hit. We'll see. It was tapped into a little bit, right? But it wasn't really hit. And then there's this one. And this one, we came right to the top of it before we bounced down and hit this one. And now, oh, yeah, they tapped that one. And then as soon as they tapped, so this one really didn't even break this right here. I kind of like each peak to have its own cloud. That way I can kind of see them better. So let's do that. Like this peak right here, like I said, this would be the cloud from this peak. So you can see where the liquidity begins and ends, right? So right there. And then this peak over here is the next peak above it, and the liquidity for this one is basically located right here. And then this liquidity right here was already passed by this, so it's not really valid. So that's kind of how I do that. Start here and just work my way over like that. And then right here's where we're at now. We tapped into this one. Just barely. Just barely tapped into that one. All right, so yeah, if you wonder why I kind of stack liquidity clouds, so just having a big one, it's so you can see where each peak ends. I don't always do that when I'm in a hurry, but I try to. It's like this peak, and then where that liquidity basically ends. Like really, it would come down to here, 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 right? Like if I kind of include all these peaks as one, but I would be actually more inclined to do it like probably like this. And then I probably made those ones in a hurry. And then like these ones are more, this right here is more like a low liquidity. Like there's a little here, nothing here. This would be a low liquidity area or a low resistance zone. Down here is where you have stacked up liquidity, and then a lot of it right down here, like here, here, and here. You have liquidity that people move their stops to these highs. Um, and I don't think I've said it here on this stream, but I call these liquidity clouds, and then the ones below liquidity pools. You know, basically when you tap into a cloud, you trigger the rain, and then when you land in a pool, uh, you get a splash, right? See, look, we hit the pool, we got a splash. You hit the cloud, you get the rain, right? And also, once you go through it, like if I have them expand out, and then you go through it, like when you're coming back down, you don't mistakenly think it's a liquidity pool that's going to provide support. It can. A lot of times, key levels do work like that, because they build liquidity on both sides, but not always, right? So I want to know that that's a level that's already been broken, right? So by having them color coded and labeled like that, I know on the way down not to necessarily expect support here, because this was an area of short liquidity, not long liquidity. Now there could be some short, long liquidity here, and but you don't know that. In this case, there isn't, right? This is only at this point now we have short liquidity here from this. So that's why I do that. And we're kind of just consolidating up here. This could be the top. Feel like it's probably not the ultimate top, but it is a decent place to exit along. Um, Unfortunately, that's literally where I went long on my main account, and now I'm down like 20 bucks, and I should probably close the position and look for a pullback and enter on that. I think what I'm going to do is I'm going to just wait for the pullback and hold my position. So a pullback of this would be basically a 61% pullback on a bullish move right here. Be a pullback to like around 830. My current stop is down here, and that would be, I mean, a pullback to 38% would break that. But if we're still bullish, I don't think they'll break that. And it looks like they did not. I'm back in the money. Yay for me. Uh, and now is when we get a push through, because my order is basically right where it's at now is break even for my order. So I'm going to draw a level here, and I'm going to label this. I'm going to make it some other color. Let's do, I don't really have blue for much on my chart, so I'm going to do blue, and then I'm going to label it Sierra chart order, just so I know that when I'm looking at this, I can see that. Now I'm going to lock that for now, so I don't accidentally drag it around. I'm going to lock this. I don't want to accidentally drag that around. So this profit target was actually good. You saw that we did the profit target question mark, and it actually came right up here and consolidated. I mean, that we estimated that profit target based on another estimated profit target. And if you've seen any of my stuff in the past, you've seen where I've been able to map out the trajectory of price movement throughout the day, like before the day starts. That's kind of how I do it. I estimate the next move and then the move after that and the move after that based on Fibonacci. So there we go. I just locked in $1,400. Not massive, considering the fact that I already lost 3,000 a day, but I've earned back a third of what I lost on paper trading, that is. Because originally when I went long, like I went long here, and then I set my stop here, and then I was updating. I wanted to stream, so I updated my video drivers. This is why I didn't do real money, because I knew there was a potential for this to happen. So I couldn't stream because it said I had to update my video driver. So I did, and after I did that, everything was out of whack on my monitors. All my icons were in the wrong places. I tried to restore them from a backup of my desktop layout. Uh, Other things were weird. Other applications crashed that rely on video stuff. So I just restarted my computer. I came back, and they actually tapped into this pool by then, I believe, or something like that. And basically, my stop got hit. So, you know, that's. But I knew that could happen, so that's why I didn't trade real money in the morning. I won yesterday, so like I don't want to be too aggressive right now. I want to be conservative with my entries, take only the highest probability setups. Today, I just kind of want to live stream, talk about my trading, um, live while I'm doing it. Uh, so right now, I'm sim trading. I do have a live trade open. Um, as you can tell, it's currently in drawdown. As we consolidate right here, and my stop is basically in the exact same place as my current stop. Now, ideally, I would have gone long in my paper trading at the same place I went long here, or sorry, in my live trading, the same place I went live here. So if or when this gets hit, now I think there's a chance they might hit it, but if they just send a wick down here, they won't. And I guess you could see that as luck, but you never know how long the wicks are going to be, right? So there you go. I got exited out on both. Real money, I took probably like a $50 loss. Yep, $56 loss. And they came down to the old order block, which actually I should have relabeled as a breaker block. Once it gets broken, an order block is a breaker block, and they can act as support. So now we want to see if this continues to break past it or if it holds. And this doesn't mean, just like yesterday, this doesn't necessarily mean that we're all of a sudden bearish now. This is just a pullback potentially in the longer. They spent a lot of time building longs, so we're looking for the pullback level. Actually, delete. Let's cancel out. I got too many Fibonacci. I can't handle that much Fibonacci. Yeah. So from here to here, I think they might come down to a 38% retracement, but there is that breaker block there. So what I'm going to look for is them to hit some sort of key level, either this breaker block or a 38%. And then I want to see that same type of order reversal type thing. Now, the 38% is right around 829. And what you can't see right now is the volume weighted average price. So if we come back here and we throw the volume weighted average price onto our charts right at 1800 hours, we'll probably see something get close to aligning here. Now this one here is also now a breaker block. So a lot of times what we'll do is we'll get like a bounce off of VWAP. And the fact that it also corresponds with a breaker block is kind of cool. but it may not even come down all the way to VWAP. It might just come down to 38. We might get a wick down. Then I want to see, the same type of deal, this expansive move away, right, where it moves really quick, and then enter on a pullback of that. Now, on a 5-minute chart, what does this look like? So right here, if I was entering this move right here, I'm going to change VWAP to VWAP hide. I have another template, so that way it makes it kind of less intrusive. Purple hide. There you go. See, now it's kind of just in the background. That's nice. So with this, I'm going to go ahead and delete that for a moment. And then I would say from here to here, or rather from here to here, I would look to enter my trade at 786. 24,786 is where I would have looked to enter my trade, right? So this would have been my buy level right here for a 5-minute time frame. So we could be looking for that. Let's go to a 1-hour chart. So now that was 24,780. Is basically the higher time frame, bigger move. That's the pullback of the bigger move, right? Which means, I would basically put my stop loss behind the biggest order block down here, right? So now we got our long. So that's how. So you have to be a little bit more patient on the 5-minute chart. But you do still get the fills, as you see right there. So that's the higher time frame play. But it can move against you even more, right? So again, now we can do the same thing here. Boom, boom. This is also an expansive move away right there. We already got the entry for this one right here. So they don't really need to do a pullback based on this. This is the only one that didn't really get the pullback. Now, why the pullback is so reliable, I can't tell you. But this pullback already happened, so it's not going to happen again. This one never got the pullback. So I don't know if it's something, I don't know. But it's something with the way just balancing things out. It just sort of works that way. Now, it could be that they switched and they're just bearish, but I see this as a pullback and a deep liquidity sweep of all this buy-side liquidity, all this long liquidity, right? They generated a ton of long liquidity here, and the pullback grabs it. So that's the way I'm looking at this. I should have placed that order. I'm going to go ahead and buy on my live chart, and I'm going to move my stop loss to the exact same place. Now that is a huge stop from 820 to 721. Now we are getting our expansive move away on the 1-minute chart. So right here, this is what I would normally be looking for to enter. I want to see this candle get engulfed. That's really what I should have waited for before I entered the trade on my live chart. Oh well. We got this bounce here, so and this bounce, you can't see it here, but that's on the negative 0.5 deviation band of VWAP. Like right here, if you imagine between here, there's like half a standard deviation. Typically, you don't want to trade in the 1 deviation zone of VWAP. That's considered the fair value range. There's a lot of chop, as you can tell, right here. All of this is within the one range. A lot of chop. But if you understand the directionality and you're looking at it from the higher context, like we're doing here, I feel okay about it, especially since my stop loss is way down here on live too. I only have one position on both. This one is NQ. My live position is on micro NQ. So I have basically an 80-point stop, which means I'm risking $160. Uh, it's a lot. That's I made almost, let's see, 160 is basically about 10% of what I earned yesterday. Um, Now generally I try to keep my stops to 2% of my account, and my current account balance is 5 grand. To start off as 3, now it's up to 5. So 2% of 5,000 would be like only what, $100. And I'm at 160. But I'm looking at it as a trade on my profits from yesterday, so I don't mind tapping into those a little bit, just to get this like kind of an early entry. Um, so the price could veer down a little more, maybe come down to one deviation band, and I don't know that it'll come down to one, but I could see it coming down to here potentially, right? Um, I could see it working its way down here. But the fact that they sent this long candle wick down here, that, like, to me, that says, uh, I don't really want to go that far. I'm content in this area. Let's get this stuff. We made it all the way down here. Let's get that. And the fact that it's taken a while to get back down here, if anything, they'll just tap this wick. By the time they do that, this is in range, so they might send another wick down here. But I don't really think they're likely to do that. This was, I mean, you can look at this as also an order block, right here. So the fact that this came down and it didn't break this, uh, this candle body is potentially significant. Now that's not the real order block is at like the bottom of the move, like where the real expansive move started. So I'd say the real one was down here. Um, but that could potentially be one too. You know, we don't know unless we see that it gets rejected from. I wouldn't necessarily expect it to reject. Um, I think the real move is like over here, obviously at these lows. Um, but this was the first like expansive move up, so I'd say this has a high probability of also being a defended price area. This one potentially, but less likely so. Yeah. So you know that it broke right through there. So they could be coming down to this level. Let's see if it rejects from here or if it breaks it. No, it broke right through. Okay. So they did harvest a bunch of shorts. So they did not make a new low just yet. That is now a break of block. No, that's no longer valid. And they did not make a new low. So as long as they don't make a new low, they maintain bullish sentiment in the market. And now I'd be looking for an expansive move away. Now, what I was saying yesterday, I mean, there was no stream yesterday, but something I was saying to a friend yesterday was about just taking reversal positions, um, trading each swing, right? Recognizing when, you know, but the thing is, it takes a lot of mental effort to do that. Knowing which swing is worth trading. Because like you can just click this reverse button, right? And you can just reverse your position. It'll exit your long and enter a short, exit a short, enter a long. So like if you do that up here, boom, You know, you hit your profit target, reverse. Hit your profit target, reverse, right? That sort of thing. So if you do that, you never know which moves are going to be the expansive moves, and which ones are just going to be pullbacks. But if you were to trade, like in that manner, where you did reversal trades, you'll be able to benefit from the expansive moves when they happen. And like you could see right there, like if we would have been doing that sort of thing, like reverse at profit target and then reverse at profit target, like that was an 80-point move in just a few minutes, right? Like we would have originally hit our profit target there. So that would have been from 1127. Nope, that's 1127. This is 11. So 27 minutes. 27 minutes, that move right there. Not bad. And then you'd reverse here, right? And now you'd be long. You'd be long from here. See, did you see that right there? I clicked up here and I just did it again and it didn't click right away. It's weird. It just started happening like last week. And now you go long, and now here's the cool thing. If they want, I'm going to get rid of that for now. Actually, no, I'm going to turn that back into an order block. And I'm just going to repurpose it. And move it over here. Because we are getting like clean move away. It wasn't really expensive, but I mean, like we do have now, we got a lot of wicks here. That probably isn't an order block, but I'll just shift it around as it plays out. But we have these other profit targets, right? In order to hit them, what do you need? You need big swings, right? So right here, now we have a big swing. Look at that. What do you see? That main profit target we were aiming at, it's now a 127% target for our next swing. It's in line. It's in play. Right now, it's in play. So that's the next target right there. So you look at this, and a lot of people would look at this and be like, we're bearish, we're bearish. No, that's a pullback. And the thing is, if you know this is your next target, you can actually just, you can anticipate it, where the pullback's going to be, right? So you can look at where your profit target was, right here. You say, okay, that's the profit target. So our next expansion is going to be up here, right? Because that's our next profit target that we know of. So we want to see what lows would reach that on a swing. So you could say, okay, where are the levels here, right? And you can mark these out. So I'm going to put some horizontal lines here, and I'm going to change them. Okay, blue is fine. And then we got the 78% retracement. No one's talking to you, Google. Okay, Google, stop listening to me. Oh, damn it, I said the word. Hey, Google, go to sleep or something. No, I don't want a bedtime routine. Hey, Google, never mind. No, I don't want to. No, never mind. No, I don't want nature sounds. Hey, Google. Hey, Google, shut the hell up. That wasn't even the one in my bedroom sitting right next to me. That was the one in the kitchen. Why won't the one that's literally 2.5 feet from me respond? Why is the one that is 35 feet away responding to me? Happens all the time. I don't get it. Okay. So what we see here, I'm going to get rid of all this excess crap. So right here, we see these are two potential pullback levels, right? Now, I mean, we could also look for a 38% pullback, of course. So those are our three pullback levels, right? For a pullback. Now we want to see, do any of those levels line up with our profit target? So this is sort of thing I do when I'm forecasting out. I'll say, okay, so from here to here, okay, 161 kind of lines up, right? From here to here, it's a 200. The 200 kind of lines up with it from here to here. We've got a 161.8. So there are levels that line up with each of them, but this one gives us a 161 lining up with it. And we could even look and say, what if we just barely made a new low, like 100% retracement? That one kind of puts it between 141 and 161. But then once it actually develops and we see that the level we hit wasn't this, but it was actually the other cloud, right? And actually tapped into this, now we can adjust it, right? And now when it's pulling back, you could say, okay, now what if we pull back to this level? Well, now it's a 141, right? We could hit it. We could hit this cloud with 141, and that would be between 140. That would be an extended move. What about this one? Okay, that puts it right in the target zone, right? Right between 127 and 141. So this is how you could determine this as the most likely pullback level. Did it go a little farther? Yeah, but this is where, like, this is how I would target. This is my take profit. This is for the thrill seekers to chase. This is where a professional trader that wants to secure profits exits his trade and reverses his position, or at least you can exit the trade. And like if you're using something like Sierra chart, you could probably have something where you could have a hotkey or some macro where you exit your trade and you re-enter with one position, and then you can manually scale in with another position. Like if you see it continue moving down, like you could have another lined up here for extra. So you could say, this is where I want to exit and reverse, and this is where I want to scale in, right? Like down here, maybe I probably wouldn't have targeted this. I would have targeted this, right? Like just before the wick. Between the wick and the body, I would have retargeted this level for a scale in. Like if I was sort of in this process automating it, that's how I would think about it. So then I would have two entries, one here, and my average price would now be here, basically at the bottom of these candles, right? And then my stop loss would be either down here or down here. Right now it's down here. So that's how I think about that. I don't have that sort of flow set up for a reverse where your reversal closes your full position. So like if you currently scaled in, you have three positions. I don't necessarily want to reverse three positions right here. I want to close and then open one position, right? So like normal, like reversal things, reverse the whole thing. So that's something I still kind of want to build out. I don't have that yet, but I know it's possible. So that's something I will eventually work on probably. But right now, this swing has a profit target where I would be aiming for. Now we see this low develop, and now we see that profit target is right in line, right? So right there. So now I would actually drag this to the bottom of that cloud, because just like these clouds, you see how like it just wicks right into the cloud? We might get something like that. So I'm going to drag this right to the bottom of the cloud. 890.25, there we go. And if it goes up in here, that's great. I'd rather take the guaranteed exit. And now we can get rid of these lines that are not needed anymore right now. And we can also look at the pullback on this. So this was a 50% pullback. And this is the perfect opportunity to stack up on longs for the next move up, right? So look right here. They have this nice little staircase, and then they swept it, right? That's long stacking right there. They just stacked some longs, and they might do it again, right? They might do some more long stacking. Right here, you see this red? That tells you we're in another accumulation phase. So right here, what are they doing? They're accumulating longs. So don't let anything that happens here worry you and deter you from your long bias position. Every time the price goes down, that is your opportunity. Oh, I did the wrong thing. I meant to buy. I accidentally clicked the wrong hotkey. It's okay. To add to your position, right? Boom. Now I have two at a better price. Because my first one was up here. I did accidentally exit here, but then I re-entered again right here. And now I have two positions here. I might have lost, a couple bucks in that. And realistically, with trades on this, round trip trade for me, I believe is like $6. Because I opted for lower margin requirements. Normally it would be about $3 commissions for a trade. But I would need like $1,000 or $2,000 in collateral. But I opted for $300 margin requirements. And when you do that, they bump up your commissions to $6 per trade. But given how lucrative the trades are, if you actually know what you're doing, $6 isn't a big deal. So I don't mind. But right there, the fact that I exited and then entered again, like that cost me $6. And I'm pretty sure it's $6 round trip. It could be $6 per order. So that could have just cost me $12, plus whatever slippage, happened in the price in between there. Each point worth $20. So if it moved 2 points between when I exited and re-entered, you got 12 plus maybe 2 points would be $40. I could have just given up like $60 of profit right there. Again, now we come down here. I could have used that as another chance to add to my position. If they want to come sweep this liquidity later, they can. I will put another order down here. I don't know if it'll get hit. I hope it doesn't, just because I prefer the price to just move away and bring me in the money, but it doesn't necessarily happen all on the schedule that I want. So this right here, we're done with this time period. This was the kind of intraday thing. What I'm going to do is I'm going to change these to dots just so I can tell that those were my intraday, intermediate prices between the macro time frames. And then I'm going to resave that, save as AMD3 intraday, save. Okay. And then I'm going to grab this and I'm going to drag it over to the next time period. So now we can see when the next manipulation begins. So what I would expect to see is that now if we're bullish, the manipulation would be a sweep down. So over here we might get price trending up, and then we'll sweep down, let people think it's bearish, and then over here it can expand out. But this whole thing is an accumulation phase. I wouldn't expect anything fancy right now. So basically from 12 to 1, I'm not counting on anything big to happen, right? Like, go get lunch, hold your position. If you expect some opportunities to be able to scale in at a better price, you can add some extra orders. My stop loss is down here. Well, now my stop loss is down here. I had to re-enter it because I accidentally exited the trade, remember? There we go. My entry on the other one got stopped out. Remember, at a $56 loss, so I'm I did re-enter. My current order price on Sierra is 802.75. So let's change the coordinates of this to 802.75. There we go. And now I can lock it again. I guess I didn't really need to unlock it. Unlocking it makes it so you can't drag it, but I could always double click and then adjust it. There we go. Now this was also 50% pullback area. And we can see that, again, it bounces up, rejects off 50% pullback. Remember what happened last time they did that? They're building long positions. And we're in an accumulation phase, right? So from here to here, we're in accumulation. So until 1 o'clock, don't expect them to necessarily break this level, right? So when you're trading with this sort of stuff in mind, it kind of just puts you at ease. Like this crap, yeah, okay, maybe I'm gonna be in drawdown. It doesn't bother me because it's just part of the process, right? So yeah, there you go. Now what you can do is, since you know price is going to swing here and it's going to sweep, you're bullish and you never know when you're going to get the breakout, right? Now, we kind of know it's going to come most likely after this, right? But really, what I would expect is that this whole phase would build up to kind of maybe up here. Like we'll end up somewhere in this general vicinity. Um, this is where I expect price to end up. I expect price to end up right here. Right. So I'm going to just change that and I'm just say forecast gold, right? Because for me, gold is an up color and I'm expecting the price to come up to here. And then during this phase right here, the manipulation is when I would expect it to drop. And then, it could shoot off from here. This is basically 430, no, 230, right? Now, what I would also do is come over here and they may not wait till 2:30. They could. I mean, they could wait and do it during power hour. That's a big push for power hour. To go all the way up here, right? That's kind of big. So what I would look for is for the manipulation maybe to just happen like immediately here or like within the first two. So I think right here, vertical line. That's probably where I would like the distribution in here, or they're going to distribute their manipulated move. Like this is where they could kick off distribution early if they want to wait before we get to the main distribution macro. Like time, like the higher time frame throughout the day. If they want to do it early, they could do it here. So I would probably project that the price would end up in like a low area. AMD forecast purple, right? So we see that we got lows down in this region. They're kind of holding it. And they probably don't want to make a new low lower than this. We already see they have a higher low here. So if they just maintain this higher low or these, right, they might sweep these again. I would basically target this right here. So I would come down here and say maybe something like this, right? And from there, I would expect it to expand upward. Now, how quickly that happens, I don't really know. But, basically by 4 p.m., um, something like that. It's kind of what I'm looking at. And then right here, I would do something like this. when it moves down, it tends to move down quickly. And honestly, they could just drop straight down and then bounce out. Um, Again, this whole area here, again, this was accumulation, manipulation, distribution, right? So let's drag this over. Um, I expect it to be quicker. Let's do this. I don't think they're going to take that whole time. It would be more, quick. Right here, because if they could also use this to accumulate, and bring it up a little higher and then drop it right here. That's also something that could happen. Um, so I would expect the drop to happen by there, most likely. And then from there, it could just, this could actually get started early, right? But if they want to keep adding to their position, they might not. They might wait until here. But it is a big push. Um, but I mean, they have plenty of time to do it. Uh, so, oh, now we see we're already getting, right here. Great time to take profit and exit. But if you do that and you lose out on the position, like, so instead, I would just set my stop loss up here. And then if you put it like here, and if it gets hit and they bring it back down. So we see the last time they came down to this area. So it's like, I want to give them the opportunity to expand away. I don't want to cut a runner. Um, but if they keep rejecting here, why not cash in on $1,100 and then get back in again on the next pullback, right? That's sort of my thought process there. It's like right here, 625, 815. That says 1,300. Oh, that's one stop loss. Why isn't that two stop losses? I'm kind of confused right now. Oh, there's the two. Okay. Weird. I'm just gonna bring it into the money. Um, well, no. Yeah, I'm gonna cash out right there. And then they're gonna come back down, right? So right here, this could be a pullback. I want to look for a bounce because I might buy, because I mean they could be moving away. They did break that 50%, but also liquidity sweep. They tapped that and that. The fact that they broke the highs, made new highs. Um, it's during this consolidation phase, which is why I cashed out right there. We brought my count back up to 7381. Right, I started the day out with like, I think it was like 8,500. So we're getting close. We're getting close. I'm confident we'll find another entry because we know that we're going to be consolidating for a little while here. Hold up, hold up. This one, fib time zone. Oh, most of those are dots. Okay, I need to redo this then. I want that line to be even there. Okay. So the key times, like 10 o'clock, I have that as dashes on the main one. So this I'm going to do like, oh my goodness, bigger dots. Oh, that's that one. Okay. Make them more bright. 70%. We'll do 70 and medium. So we know those are like the immediate things. So again, right here is where I would expect the price to drop. So we're getting up here, we're consolidating. I don't necessarily want to enter a short position into a bullish market, um, into what I expect to be a bullish move. What I want to do is I want to put another order down here, right? I want to get in low down here when it comes to manipulate down. So I'm going to get these two orders and I'm going to put them down here. So I'm going to expect that right around here, the price is going to drop. We're going to go boom, boom. We're going to hit those, right? And I'm going to have a really nice fill. That's what I'm counting on right now. And then we can distribute up. So I wouldn't expect the move down to be until then. And you could scalp the move down. And like if you were on Sierra chart or even TradingView, you could have two charts side by side. One could be MNQ for micros, one could be NQ for the E-minis. And then you can actually scalp the small ones. That way if you're wrong, you're wrong by a tenth of what it would be. Now, is trading a tenth really worth it? I mean, this move down, if you were to scalp this right here, right, that's 30 points. So, I mean, you can make $60 if you did like one micro, two micros at what was that? 50 points, 60? 33 points, right? So 33 points, let's just call it 30, right? 30 points times $2 a point is $60, right? So if you did three micros, that's 180 bucks. I mean, that's not bad actually. Four of those would be 240 bucks. I mean, that's not a bad salary. 250 bucks a day. I mean, if you could do that every day, that's not bad, right? Like that's over $1,000 a week. And I mean, that's just scalping this. So I mean, little moves like that. You could do something like that, where you could trade less than half a position, like a 40% position with like 4 micro contracts, or just 2 or 3, right? Because I mean, you're getting this stuff multiple times during consolidation. So if you just did like 2 contracts and you scalped downward, and then you use down here to reload your long position, I mean, think about it. What do you think they're doing, right? They've got multiple accounts. They operate on multiple time frames, and they're loading up positions across time frames, profiting on different time frames in different directions. So why shouldn't we leverage that and do the same dang thing, right? Oh man, they're breaking out. Oh, that stinks. I don't have my position anymore. Now I'm sad. It's okay. I'm not going to short, but they are grabbing this liquidity here. I don't know that this is really the move. It definitely could be. But we're getting close to this manipulation window, right? So, like, manipulation can kick in early. It doesn't have to wait until exactly 12 o'clock. Okay. They can do it whenever, like, generally 10 to 15 minutes before, right? So, around 11:15 or 11:45, around here, anywhere from here to here, they can get ready for the move, right? So, I'm still expecting the pullback, right? I'm not going to chase. I'm not going to chase that move. It didn't, you heard me. I was like, oh, that's disappointing, right? Because if that is the move, I miss out on it. But I mean, I already made what? I lost because I did that, I knew I shouldn't place the order this morning because I knew I was updating drivers and there was a high chance it would cause issues and I'd have to restart, which is why I didn't trade real money this morning initially. But I did on paper trade because I figured, what the heck? If it works, that's great. It didn't, right? So I lost like what, $3,000 from that initial like screwed up order. You didn't see that because that was obviously before I started streaming. But if we kind of ignore that, after that, my price, like thing dropped to like 5,000. We're up basically $2,000. So if I would have treated this the same way I did my real account, where I didn't place that stupid order when I knew I was about to restart my computer, right? I made $2,000 today. So I don't need to chase this other move. Now I didn't make $2,000 in real money. This was all paper trading. I'm up like $27 now in real money. That's nice. Because I'm just trading micros right now. I'm actually going to move my stop loss so this position stays a winner. Especially since I think the price is about to drop, I can get in better later. So I'm going to put a new limit order on Sierra chart down below here. Okay. So my current order, stop limit is there. My limit for the exit, again, my exit is, what's the exit? 890. So I'm going to drag this exit to 8. I'm going to put it at 880 or 885. I'm just going to be extra conservative with it. All right. So I did just get stopped out in my live trade, but that's good, right? Now instead of dealing with drawdown, because my trade was here, I set my stop like here. I moved it up because we were in the money, got stopped out, and now if I'm right about the pullback, I'll get a much better fill, right? Now, if I'm wrong and the price just goes up, then whatever. But if I just imagine that I had actually placed real trades the way I did in my paper trades, I'd be up an extra $2,000, right? So, I still see today as a win. I knew the first order was stupid, why I didn't take it with real money, but I did place 2 other great trades, made $2,000. So really, I feel like my account should be, this one reflects the stupid trade. But in essence, I knew it was a stupid trade, but if I had not placed a stupid trade, my account would be at $10,000 right now, right? Not bad. So because I made 2,000 today, and I ignore the fact that I lost 3, because that trade has nothing to do with my successful trades, right? I was still right about the bias of that trade. My stop was just in the wrong place. I made $2,000 today, so I don't need. If I miss this, oh well. I'm not gonna chase it unless I see another, like, a really good order. It's like, for instance, right here. If you wanted to enter from this, I would do it basically by entering right here, right? But we're in the accumulation phase, and I'm expecting after we cross this yellow line, the price is going to drop. So why would I settle for an entry here if I think there's a high probability that I can enter way down here? It doesn't make sense, does it? So it's not that this is wrong to enter here on a higher time frame. Like if you're looking at a 1 hour chart, entering right here would actually probably be pretty good. But I'm on a 1 minute chart, and based on what I know, that's not the ideal order entry location. So on Sierra, my order is set for 68.75. So I'm going to update this again to 68.75. That's where I'm trying to enter my order, right? It's basically at the same location as Where did it go? Is it behind this? No. Z. Z. Control Z. What did I do? 868. Oh, no, it's 768, isn't it? It probably went up, obviously. 868. Oh, would have taken it off the screen up there. That's why I didn't see it. Okay, 768.75. Okay, so that's where I'm entering. Let me just move up so that way this one will be in the same place. All right. There we go. So now in this manipulation phase right here, if we want to see, again, like I said, right here, it can kick in right away or it can consolidate a little bit. We see it did kind of keep moving up a little bit. And right up here, like this area is, it would be considered the accumulation. So right around here, it could bounce up again. And then maybe around here is when it like finishes the drop. Like if it does consolidate, it'll do it in this first third, and then the faster drop will likely come after 12:10. But I'm expecting it to hit by 12:20. By 12:20, one of these profit targets should be hit, is what I'm thinking. So let's do another forecast, and I'm forecasting that this area will get hit. Right down here. Now, as far as lows go, yeah, this allows them to actually make another higher low. That way, when we get down near the end into the actual manipulation phase, they can actually sweep this low, right? This low, that low, that low, they're all stacked. So that way they have this stack of longs. That's why I didn't target down here. I targeted, just above the candle body. Because they do tend to do that sometimes. If you haven't, like this one right here, like what is that? It's just the middle of a candle body. That doesn't seem like a significant price, but they don't always target the obvious stuff because they're setting up something bigger. So again, people are looking at this, they're seeing a bullish trend. Price is going up, it's a breakout. They don't know what's about to happen at 12:10. Now, like we actually know this. So now I'll just leave it. I'll leave it. That was the target zone. Now this right here. Let's go take a look at a 1 hour time chart. If you're looking at this, it would probably not be entering a buy right now. Anyone trading a 1 hour time frame, they're looking at this and they're saying, wow, that's a lot of noise. I'm not trading that nonsense. If anything, they might be shorting. Well, you got this one, and it's like, this doesn't make a lot of sense when you look at it from a 1 hour time chart, right? You're like, what are they doing? Now, I'll tell you what I see from a 1 hour time chart. Now, hold on. I need to clean up a little bit. Let me do a little bit of housekeeping. This rectangle, and this rectangle, and this rectangle, my most recent rectangles, those are all projections. So I'm going to group those. I'm going to call them forecasts. Rename forecast. Okay. Fib time zone, fib time zone, fib time zone. Oh, these are not visible right there. Oh, the current interval. Right. fib time zone, fib time zone, time zone, time zone. No, I'm not going to do that one because that comes from a different interval. I'm just going to do these ones that I know are here. We got this one. We're going to say create a group. We're going to call it rename fib time. We're going to drag this up here. We're going to say this one here. There's another fib time. They're not all that one. Where are they? Oh, here. Let's see. That's that one. We've got like nested ones inside here. Oh, you can't see them on the 1 hour. Okay, so I can hide this. Ah, there we go. That's pretty. All right, we got our vertical line. I'm going to put that inside fib time. It's not technically, but I drew it based on fib time, so I just want this a little bit cleaner. Forecast, we can hide forecast. Okay, and then all of this is basically liquidity. This one here, let's see, what's this? Yeah, that's liquidity. Okay, so I'm going to get all these rectangles. All of those. We're going to say create a group of drawings, liquidity. This rectangle and this rectangle, I'm pretty sure if I say go to rectangle, yeah, those are the ones I saw them up there. When I clicked on it, right there, that's the liquidity cloud low, that one there. Okay, so those are also liquidity. What's this one? That's that one, that's liquidity. Go to rectangle. Those are all liquidity. Pretty sure every rectangle on here is liquidity from back before that. So we'll come up, add that to liquidity. Yep, that one, that one. Yeah, all of these. Liquidity. All of those, liquidity. I should actually probably, I wonder, I'm going to test something right now. If I copy that, right, and then I name this, I actually name it liquidity low, right? And now if I copy that, I end up with two of them called liquidity low. It copies the name. That's cool. Okay, now let's try something else. Let's go here. Liquidity zone. All right, this was a copy. I want to make it generic again. Let's get rid of the number. All right, so we're going to come here. We're going to say template, save as. We're going to redo the liquidity low. Liquidity pool low. Save. Yes, override it. Okay, now we're going to delete this, right? We're going to make a new rectangle. And we're going to call it a liquidity pool low. It doesn't apply the name. That stinks. I was hoping it would name it with the name from the template, but it doesn't. It would be nice to be able to see from the rectangles like instead of just seeing the word rectangle to know that it's liquidity and not, a forecast or something. That's all I was thinking. But if I get in the habit of just like naming it like LL for liquidity or just L for liquidity or lick, whatever. If I just did something like that, like L or like LP for liquidity pool. And then as I do the pools, I can just, if I get in the habit of copying, that could do the trick for me. I just got to remember to make that part of my workflow process. All right. That's a pool. That's a pool. 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 Liquidity. So now I can hide liquidity completely. Look at that. So pretty. Just a chart. Now we've got lines. All right. Now these fib time zones, like these ones that are kind of like they show they're hidden from a different thing, like those are global synced across the instrument. I'm not gonna like do anything weird with those. I'm just gonna kind of put them next to each other, like all the way down here at the bottom, just so they're out of the way. So I don't want to like screw with those. Horizontal line. All the horizontal lines are basically profit targets. So I'm just gonna do the profit targets for this or for the other one. Now this down here also, I'll put that there. Now this is the actual price chart. We'll put that down here. Got anchored VWAP, that's fine. Horizontal line. Time zone. Okay, so these are the higher time frame ones. So these are 4. I think I plotted those on 4 hours. So we're gonna call this. We're gonna make a different group for this. We're gonna call it fib time 4H. So there we go. So we got our fib time 4 hour. So like our macro cycles. Right now we're in a distribution cycle. So this is basically the pullback into a long. See that overnight and from yesterday, like we pulled back, and now we're going long. So if you want to like, we can do this. Like we back out here to 1 hour. Look at the higher time frame. Today was just a 38% pullback. So people that were going bearish today, man, that's wrong. That's wrong objective right there, right? This is what I was aiming for yesterday. Was this 38% area? We didn't hit it yesterday. Like I told my friend, if we don't hit it today, we'll hit it in the overnight. Guess what? We hit it. This makes it look like we hit it in the overnight, but actually we hit it when the market opened. This is 9 o'clock. This is 9 to 10. Which is one of the reasons I prefer not using hourly charts. My favorite is a 30-minute chart. Because you can see the difference between the market hours and the overnight, right? Because 9:30 market opens at 9:30. That way you actually have a candle for market open, right? So I like the 30-minute chart. When I'm looking at the higher time frame, a lot of times I'll use a 4 hour. Just because you can fit a lot more, when you're looking at those higher time frame patterns. Um, hmm. Well, that's interesting. Like, this right here, you've got your head and shoulders, right? But, you know, You've also got a head and a left shoulder, and what's forming right now is I mean, it looks like it could be a right shoulder. We'll find out, you know, if I'm wrong about being bullish. Well, that would be interesting, huh? But we're in the distribution phase, which ends more or less tomorrow. So the profit target, anyways, it's not even making a new high, so it wouldn't break a head and shoulders pattern, and it would allow them to sweep all of this liquidity right here, right? And we know there's liquidity all the way up to here. So even if that's all they target right there, I think that it'd be actually probably good if they targeted this. I could see them wanting to do that, even if they do that in the overnight or something, because that would give them another wick here, and now they would have a wick here, 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 right? Like right here, like these wicks are basically the same. These, like, this gives them a really, like, people that went short here, all stacked up. Like, people that went short there are people in the know now, or people that got lucky, I guess. But those are like from the highs, so being able to stack up those, like a tight space, the tight space of longs from all-time highs, kind of be cool. Um, Now we also saw, it's not necessarily showing on here, but there's, like, in the higher time frame, like going back days, we're getting near the end of the distribution phase, or rather the end of accumulation and entering into manipulation. So the fact that this right here, and I was projecting sometime around ish the 7th of October, between the 7th and the 14th, I believe, or 7th and the 10th. Basically the second half of next week, right? In the next week or two is when I was kind of expecting manipulation to kick in, like on the higher time frame. So, whatever transpires, a move down to these levels could be in store. We'll see. I don't like. I want to be aware of what's possible, but I don't care about forecasting where the market's going to be in a week or 2 weeks. Just knowing what the next swing is will give me plenty of money making opportunities. So, and I do that intraday. So as long as I can tell what phase we're in and how to tell if or when that phase ends and another phase begins, that's all I need to know. It's not my job to figure out how to move the market. The people that move it, they can do that. I just want to be able to tell when they switch their intentions, right? So I think on a higher time frame, they do intend to drop the price and reprice the market. I don't know when they try to do it, but I know how to tell when they're getting ready to. And I see that they might be getting ready to, and I'll be ready, right? In which case we'll be entering into a more bullish overall nature, and bearish overall nature, and I'll kind of be more bearish focused. That doesn't mean we won't have bullish days. Like right now we're in a bullish phase right here, but we got a pullback, right? So just knowing what context you're in kind of helps you, like you saw there when we did the pullback target. We were able to see, that this was a 38% pullback. So understanding the higher time frame can help you trade the pullbacks, which can seem like a bearish like, oh, no, it's just a short-term thing. But that way you can trade each leg of of the trade of the setup. So 30 minutes. This is kind of my sweet spot here. I like this more than 1 hour generally. But what we see here, I don't know if you see it. Oh, this one here, this needs to go under fib time. Oh, that's not the higher time zone thing. Oh, what are the ones that said like hidden from whatever? Oh, that was probably a couple of those. Um, so if I drop down to like a 5-minute chart, a 1-minute chart, some of these had a little eye on them. It said they don't show up on a current. Oh no, I moved those under the 4 hour. Well, I don't know, whatever. So this one here goes under fib time. Oh, is that one? How many of those are there? Did I copy and paste it? Oh, that's probably like if I drop down to a 1 minute, there's the stuff inside the stuff, and then the stuff inside the stuff inside the stuff. You know, I don't know what this one is. Ah, that one. Okay, yeah. So both those are intraday fib time. So let's go throw those under fib time. Then we'll hide that. Okay, there we go. And now these horizontal lines, we can put all of those under a new group. We'll call this group targets. And then this rectangle here is what exactly? Go to rectangle. Ah, that is, well, that's a target. No, that's a forecast. There we go. Beautiful. And then we'll call these, we'll leave those. So now we can turn all this crap on and off as we see fit. Nice and easy. So we'll throw our fib time back on. Turn our liquidity back on. Turn fib time off. I want to turn them all back on for now. Let's see what happened here. All right, so the manipulation did go up, and then distribution, like I said, it doesn't necessarily kick off exactly at the thing. We see that within 2 minutes later, we actually got our distribution down here. In this case, the manipulation was upward. Or no. The manipulation was downward. Oh, we almost hit it. We almost hit it. I was thinking maybe I should just target this instead, but I didn't. Oh, dang. Dang. You can see it worked out, and I had the timing right. I thought about that. I was like, what if they don't go that far? What if they just do a regular pullback? I didn't actually forecast out the pullback as 38%, like 38 to 61. I thought about that. But I was like, what if they sweep this? But this is a big move down here, and there's not like a lot of candles, so there's not a lot of draw. It came almost, it was almost there though. They did come most of the way. But really, I should have done 38 to 61, or rather to the bottom of this candle right here. And then I should have put my things at 38 and then 61. And then if I wanted, I could put a third one like down here near the bottom of the candle. And then look at that. Right after we hit this level, it consolidates just a little bit, and then it does the distribution. right down into the 1220, right? I mean, look, I was wrong about the level, okay? I was doing so much, I was explaining things, I forgot to actually forecast it and move it, but um you see the logic played out, right? I said it was going to come up to here, it'll pull down, and then around this time period is when we'll be at our lows and we'll distribute. And then like remember, it's all fractal. So like we could break down this into accumulation, manipulation, and distribution, right? So there you go. The distribution kicked in. If it kicks in early, I always ask myself, if it kicks in early, when is the distribution of that nested cycle, right? Right on time, you know? And now this, what you say, okay, well, this is distribution. What does that look like? Well, you got accumulation. Well, what are they accumulating here, right? Oh, they're accumulating longs. So right here, you could look at this whole thing as an accumulation. And then they're adding to the long position right down into the manipulation. Through manipulation right down here, they add to their long position. Now we get into distribution. And this is when the real distribution kicks in. So let's go ahead and get into our trade. I don't like that entry. I'm doing it just because I know our profit target is up there, but we're basically half the way there. And I don't want to take a 2-to-1 trade on my real money account. And I already have, actually, I think I have an entry. No, I don't. I got stopped out earlier. That's right. And my entry was down here, so I didn't get tagged in. Right. It should have been at like the 61% mark, but oh well. I was greedy and I didn't get in on that. If I get a pullback though to, let's see, where would a 61% pullback? Oh my gosh. These things look so similar. I always click the wrong one. Not always, frequently. This was a 61% pullback, right? And it's all like so mathematically accurate. I love it. And when you know the times that things are likely to happen, I mean, you know exactly the 15, 20, 30 minutes or hour to focus on. It's so great. Again, that also, that's like right around the 38% of that other thing, right? Sheesh. So right here, pullback of this. Now we got a 38% pullback. I don't know if we'll get a 61. This candle started at 61, so pullback. That's not necessarily even a swing high. Let's see. If we do get an entry down to down to 810, I'll take it. I will move my order entry up to 810. I'm not counting on getting filled there. In this case, I would put my, now hold on, before I actually, let's get rid of some of these extra things. Okay. And then let's get rid of this one. So we're still in the accumulation phase. So we can still, now remember what I said, accumulation. No, I'm not, I'm going to leave my order down wherever the hell I had it before. I'm going to move it, actually, I'm going to move it to here. This is where I'm going to move my order to. Basically to where the 60, I'm going to move it right to the middle of this. At this 141%, basically, is where I'm going to put it, which is 792. Now I'm going to put it right around 787. I'm putting it right here. Because you see all this, how this is stacked up? This has stacked up liquidity right here. Like that's like a premium buffet. This right here, And that's on the lunch menu. That's what I'm looking at. Boom. All right. Now this, I was off here. Like I was looking at that 50%. This right here, bye bye. That's not really relevant anymore. What we've got is a premium buffet of liquidity sitting right there. And we're coming up to the edge of the manipulation window here, right? And this might be the high we get. It might come back up to those highs. It might even snag the highs, but I'm betting the high is going to be around here. They could potentially try to snag some of this, just to wipe it off the boards, and use this to short down into here, um, for the manipulation. So I'm going to target these highs right here for the end of manipulation. So I'm gonna redo this now. I'm gonna put this up here, and there's a cloud up here too, actually. Well, I don't know. That feels a bit much because then we're really close to this. Oh, accumulating. I'm thinking. No, I think they'll just target this high again. I mean, they could go higher. They could. Let's see what happens. What happens if we forecast out like this? This is what I'm thinking right here. Like this right here. Whoopsie. Right, like that's that, right? So if this is the move that actually takes us there, like they don't need to recreate that same move. They target like something around here. Because manipulation, you want people to think that the sentiment has changed, which means at the bare minimum, they want to make a lower low. So they're going to break some sort of significant low. They don't need to break all of them. They could break this one or this one. You know, they could. Oh my gosh. Come on. You know, they could break this low and then go down like this. But any of these lows right here, all they have to do is really break this low now because they have this low. They could just come anywhere down here. And I think this pool right here is the target of what they want. So I would say that this is most likely the low. So I'm going to redraft this like so, right? This is a work in progress. That's what I think is going to happen. Because they're going to see this, they're going to get people to short, they're going to break lows. People are going to have a change of feeling and be like, oh, we're bearish now because we broke the lows. No, that's just the manipulation. And now, if that's what happens, what does this look like? Well, it puts our profit target right around 141. So it would still be in play. And they might even wick up here and grab that, which puts the target right between 127 and 141. So it would be perfectly in line. Um, as the next swing, right? Like this swing would generate that. So it's not like this is building, this is accumulating for this moment. They go, they harvest the longs that they accumulated, right? They could even come down to here and harvest those, in which case, again, it's basically the same thing. Um, so I mean, they could do that. They could bring it anywhere down in this range. But that would basically be like profit target 1, profit target 2 sort of thing. I would put my order entry in this range right here. Basically 790. I'd be aiming for. Now they may not necessarily come back up here. They could, but they already came up here once, and it's like they didn't want to tap into this liquidity yet. Um, so I think they could expand from here up into this, and then they could leverage this to push down. Um, but I think what they'll do is they'll probably just work their way down here. Maybe not making a new high. And then once they get down here, when they come up, they can use these to exit their long position, right? They can use these, and these to exit their long. So I'm thinking that because of this right here, how they didn't tap into it, but instead they leveraged this right here. They stopped it right there, and then this one here didn't even wick that one. And it tells me that they're basically using these to stack on to the short liquidity. So they want to keep the short liquidity there. Now we have this as a target, so it's not that they're going to hit this and then drop. But by building down here, they can sell in the top half. If you build your position with an average, down here, your average entry is say 24,800, and then if you're selling from here to here, your average sell is around 870. So that gives them 70 points of profit on average for the move. You see? So that's what I see as the setup there. So basically, if you look at that, you could say, okay, well, if you just buy at 24,800 and then you sell at 24,870, like if that's their general average position, like that's an easy entry to take. And you could do that like right now. You can get it at 804, and then if you suspect it's going to go all the way up there, if you want that same 70 points, exit at 74, right? Boom. So I mean, there's plenty of ways to play this. Uh, Also, right here, if we look at this. I mean, they had been building this type of liquidity before, right? Like that's what they were doing all night. They were building long liquidity, right? Right here, building it, harvesting it, building it, harvesting it, right? Longs, long like this right here, where you got the candle like a slow long, like right here. See how like it's all intentionally right there? And they did come up and harvest some short liquidity so they could push back down, right? Because again, they play multiple time frames. So right here, they just built this. So that's interesting. It's interesting in the sense that they're probably going to tap into this for a quick push down. That's my guess. I don't think they would want to use that to exit their position right now. But right now, everyone's kind of feeling bearish. But if they manipulate up into this right now, it'll clear this so all this short selling liquidity isn't here when they're ready to actually bounce. Um, and then when they harvest that, like this could be something just for like a short move. They could harvest this and do like a quick short play straight down into our target zone, right? Here it comes. And they're probably going to harvest most of it, right? They might keep a little bit near the top, but I'm guessing they'll probably come to at least here. Now, why? Like, I don't have like a fib level to say why. Um, and really, they could very easily get all of it. But just it's at the higher end of the range. And if you want to sell near the highs, I honestly think there's a decent chance they'll take all of it. I say maybe there's like a 20% chance they only come to here. I mean, a 20% chance they go all the way up to here, 80% chance they come up to here and like get the bulk of it. So like all this is real close together. So I think they'll get all of this. This stuff above here, it's close together, but they kind of got to push. Like there's a big gap here. There's no big gap. These, now I say big gap. That's relatively speaking. If you look how close all these candles are, like they're pretty close. The tops of the candles. Actually, from here, actually no, that one there, that's close. Nah, I don't know. It's like, well, from here, this candle, this candle to here, I don't know how much room that is. But I just feel like that's twice the room between most of the other candles. I mean, I guess technically this was a big gap right here. They pushed through it. I don't know. I think it probably will get most of it. What kind of a pullback would that be though on the larger frame? It looks like I was right though. Like I'm having a hard time explaining why I thought that. I don't know. Like I really wish I could explain it better. So this was basically a 38% pullback on that larger move. Now this particular swing, oh, hold up, that's backwards. So from this swing, this was a 50% pullback. Okay. On the bigger swing, it was a 38% pullback. On the smaller swing, basically, maybe I'm just kind of seeing Fibonacci in my head, and that's why I was pointing at this. It's like 78% is kind of like an extended range, and these are at the top, and they just seemed, I don't know, like there's this tapped into that. I don't know, but right here they basically came up to a 61.8. That's where the candles closed. They did come very close to my thing, but I said I think there's a chance they don't break that line. And yeah, I can't believe it. I don't know. I'm surprised myself sometimes. Well, basically played out just like I said. They built this, right? And the reason they would harvest that is for a short-term, I mean, if they know they're pushing down to here, I mean, think about it. You're trying to manipulate the market to give you a bunch of to fill your orders, right? Just let the price go nice and slow so a whole bunch of people can get in on this bearish move. And don't wick any of them out so they all feel so confident. And you're coming down here, so just go ahead and like stack, like be like, yo, all those short positions 5 million people entered, they're all mine now, right? So you just swipe all their freaking shorts, and now their shorts belong to you. You just stole their shorts. You stole their shorts. You ripped them right off their legs, and now they're all pissing their pants as the price falls down without them, right? So that's how I look at it right there. I was like, they want to exit up here, so they're not going to save this for later. They're going to come into it now, boom, and now they just probably double or tripled their position. I don't know, maybe not really. Maybe they added 10% to it, but they added to their position, and now when they come down here, they're coming down here with even more profits, right? So now I'm going to go ahead and add to my long position now, bring down my average cost. Now Really? You know, I should be adding to it down here, of course. Now, this actually, I don't want that there. That's way too damn close. Put that thing way out of the way. Okay. Um, you can tell how confident I am in my long position. Put it below the lows of the day. $3,600. If that gets hit, oh, that would suck. But like, I don't know how much of this they're gonna wick out, right? It's like they could, or they want all of this, right? That doesn't mean they're not gonna. If they take all of this, that just means I'm that much more confident that they're going bullish, right? Like that they're gonna go up because they're harvesting. If they harvest this long liquidity and this long liquidity and this long liquidity, I want to go long even more. I want to go long even more. They're getting a discount. Why shouldn't I get a discount? Right? That's the way I look at it. So this right here, this drawdown, this not a big deal, right? Now that's my cash account. That'd be a big deal because I don't have $100,000 account like I do on paper trading, which is why I do micros, right? That'd be $50. Like, okay, I can handle $50. I already lost $50 a day. Not a big deal. But this is what I'm looking for right here. So I'm looking for this pullback. Again, we're right. Oh, we're right in this range. We're right in the range. This is, I think I have my order. Oh, I need to move this. I'm gonna put it right in the right here. I'm moving it up to like 92. Basically, when they break this low, right? They're gonna tap into this. I don't even need the best damn fill. As soon as they break this low, I'm gonna get filled in my real money any moment now. Any freaking moment now. Come on, fill me. Fill me, motherfucker. Fill me. Fill my order. Fill my order. Now, if I look at Sierra chart, I'm looking at Sierra chart. If you look at Sierra chart, and I'll bring it on screen right here. Look at this. You see this? Like that's basically where I had it before. And you know how I said they'd be looking maybe to make a higher low, um, or break a low. You know, like I was kind of targeting this area. Now I actually had my thing right here, but I was saying when they do come down originally, I thought they might come down to this area. Well, look, that's where they have the bulk of their position, so they might actually bring the price here and try to get people to fill their longs down here at this price. Um, and once this breaks, it actually might break that wick before it goes back up. So, like this is still a valid area to scale in, right? You might want to scale it. Like I could put an extra order to scale in at like maybe 781 just before that. That wouldn't be bad. So what I could do is I could actually do that right now. 780.5. If I do another order entry right there, boom. And then I'll set my stop. I'll set my stops down here. Now the clean liquidity is right here. This would be just extended to make people think it's like really bearish, and then maybe they break this and then they bounce. I don't necessarily think they'll take this, but just in case they do, there's not a lot of liquidity. Like they didn't build up any fancy liquidity here. I don't think they'll come for this. So that's why I'm doing that for my cash account. I say cash account, it's a margin account, but I mean my real money, my real money. Now right here, there's still, see this liquidity is built up, and then right here, like they swiped a little bit of this, but they're kind of building up a little bit more. Um, Basically, if you look at it from a price scale perspective, they have liquidity here, 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 and then it just keeps on going. So like this whole area right here is liquidity. So when they tap into this, they can bounce. So now they're just extending, or they were extending their liquidity there. So I'm just trying to explain to you how I see the market, and we're getting close to this area again. When you get within like 10 minutes of the window, 10 to 15 minutes is when like things start moving. Um, they can start early, like I said. So right here, coming down. Here we go. Coming in the zone. Hey, I got a viewer. Kevin Ashcraft. Welcome, welcome, Kevin. Number one viewer. You got the crown, my first viewer. Thank you. So I'm looking for them to break into this area. I'm not sure how long you've been here. I just noticed I had a viewer. Um, I'm expecting them to tap into this before they do the bounce. Right now, it's like I think this is going to be sort of the fuel for the bounce. Um, Originally, I thought like it would only come up to here. I thought if they came back up again, I really didn't think they would hit this again. But I wonder how much. I don't know. That's interesting. How much a question of a government shutdown is causing an issue with the market today? I mean, it's not causing any issues for me. Uh, the way I look at it, whatever happens, like in the news from like macroeconomic standpoint, it's baked into the charts. So I personally don't trade the news. I read the news through the way the market is trading. The funding deadline is tonight. Well, the major players know that, and it's affecting how they're trading. And I'm just reading the footprints on the chart. Um, I am interested in that kind of stuff, but if I understand that the people making like using their billions to actually move the market are moving it with that in mind, then as long as I can read what they're doing and what their sentiment is and how they intend to move the market, then I can basically infer the news from that sort of. It's kind of that's kind of how I think about it. So based on the way I personally trade, it's not affecting me. How it's affecting the market, um, again, I'm not sure how long you've been watching, but if I go back to a 4 hour time frame, we've got this head and shoulders from the other day right there, right before, boom, boom. But then, if you zoom out a little bit farther, you could say, you got a head here, and then this could be a left shoulder, and then this could be you know, something else. So I'm not saying that's going to happen, but I'm aware it's a possibility. If that's a possibility, what would the target be for that shoulder? The target for that shoulder, I would put it as this pool right here, right? Because it's right between 127 and 141. So if there's some bearish sentiment, um, I would aim for a market to fall to about 24 240, right? Now I'm not just gonna blindly trade that. I would look for confirmation in, you know, the people that are moving the market. Are they feeling that? And if they show me that they're feeling bearish in that regard, then I would expect them to probably move the price down to that area, right? I'm not trying to guess if it's going to affect the market. What I'm saying is that if it affects the market, this is my target. So I'm just looking intraday here is where I focus. So on the 5 minute, I got way too much stuff on the charts. I think I got too many Fibonacci's or something. No, just one, just all my lines. Let's hide a few lines. Oh, I got another horizontal line. That was another target. What was that one? I can get rid of that one. Rectangle. That's another liquidity. We'll throw that in the liquidity pool. Nope, I threw that into targets, didn't I? Okay. No, I did put it in liquidity. Or why did I think I put it in the wrong place? Okay. And the forecast. Yeah. Okay. Yeah, they have government shutdowns all the time. I've never really gone back and looked. I mean, I say all the time, like every few years there seems to be one. I'm not sure how it affects the market. I haven't gone back and looked at it um, from that perspective. But you see, you see this? It says Sierra chart order right there. That's where I originally had my first order. I did end up moving it. I did get filled. Um, man, kind of wish I would have left that one there because I actually moved it up. Right, it got moved up to 86.25. I moved it up to the. I moved it up right here. 86.25. Yeah, right. I moved it up to the bottom of this box. I said that they could potentially come down here, right? But I wasn't confident that they would come down here. I thought there's a chance, right? And they did. They sent a wick down. So again, like I said, this is the area where you could scale in with an extra position. So I didn't scale in with an extra. Oh wait, I did. No, I did. I have two orders. No, did I enter with? No, no. I entered one with an order here at the beginning, and then I had another one here. So my average, or I had another one I think here below this wick. So my average price is actually right here on Sierra chart. It's right at the bottom of this. So I had one here, and then I think I had like one around here. So my average order on Sierra in my real money account is right here, and that's on micros. So again, I projected that this right here would basically be the bottom. I would be surprised if we break this because if they want to maintain bullish sentiment overall, um, that way when they give it a little bit of a push, everyone piles in. They don't want to break. They want some short-term bearishness, but overall they want the market to push for them, so the market will push into their profit target. Um, so they don't have to do all the heavy lifting. Uh, so they don't want to break too many lows, right? People that are trading lower time frame, they'll see this. Higher time frame traders, trading on 5 minutes or 15-minute charts, their lows don't get broken. So, you still have a bunch of people that are going to look at this and, all this is hidden with inside another candle. So they're not seeing this. They're basically just screwing over playing with the emotions of the lower time frame traders right here. And then they're going to leverage the higher time frame traders to push them into their profit targets. That's kind of how I look at it. And then here we go. Now we're past this. We're into the manipulation phase came a little bit early, right? So now we're in the beginning of the manipulation phase, which is accumulation, right? I showed this earlier where I broke this down into thirds. And then we have accumulation, manipulation, distribution. I guess this line is slightly in the wrong place right there. Maybe I dragged it accidentally. But if, they could pop off the price anytime here, whenever they want. I suspected they would drop it around here, but they dropped it around the accumulation phase of this, right? Or sorry, the manipulation phase of this. So if you were to break this one down into thirds, like the manipulation went up, distribution down. So, it's the same cycle, but it hits in the right time period. So then right here, this is the accumulation phase. So they can continue adding to their position here if they want. And they can do whatever they want. But the way I look at it is that I'm not necessarily expecting it to pop off right away. Right? It can. But they might wait until around here or here. Right? Like this is also the manipulation window. So they might use part of this to come up here, take a few more of these shorts. Because you see like right here, it moves fast. And then you got a little bit here that was untapped. and then it moves fast. And then you got a little bit here, and then it moves fast. Like they might push and harvest some of this. They might push up and harvest some of this. And then in manipulation right here, they could push down fast. And now all the liquidity is swept here. So then when they get over here to the distribution of this, they can just push straight up, right? So there's all different ways it can play out. But a move up here doesn't necessarily mean the big move is happening. It can, right? And I have my orders, I have my position in. Actually, I do want to add to my position again. I'll go with, let's do that again. I think we're pretty much as low as we're going to get for now. So I'm going to add, yeah, I think four contracts is good right now. I'd like to have 7, but it's like, whatever. I'll stick with 4. I'll scale in to 7 as it moves, maybe. Like once I see, like we're really moving. Like once it comes into the profit, what I'll probably do is I might sell 1 or 2 of them to bring down my average cost. And then if it does drop back down again, then I'll scale in again. So if they manipulate up here, I'll sell maybe 2 of them, and then that should hopefully drag my average cost down, I think. And then, yeah, if it drops lower than my current, whatever the average price is at that point, if it drops below that significantly enough that I want to bring the price down some more, I might add a 3rd back in, and then I'll probably just leave it at 3. So VWAP, it's kind of hidden right now. If I unhide it, it's translucent. We're right at the bottom of VWAP. A lot of people would look at this at the -2 deviation band and be like, wow, this is so bearish. We're just going to push down and start this kind of trend. That's like, no. This is more of I mean, today has basically been just bouncing between here. Kind of an accumulation day. That's basically all day. They've just been building a position. And I mean, I'm expecting that when it pops off, it's actually going to not just come to the top band, but it's actually going to push all the way up here. And then we will actually have a little bit of an uptrend into the end of the day. That's what I'm thinking. So the Fibonacci from this, we've got this low here. Well, 127 puts us right back up at the highs. So that particular swing would put us right back at the highs. So I mean, it's possible that's where it bounces. That could be a good take profit one to exit one. So if I had 2 or 3 contracts, I'd probably exit all but one right here. So I'd put maybe like 2 sell orders here, and then I'd put the other sell order up here, and then I would just start trailing my stop loss along. Like I'd move the stop probably around here. Then like once it gets past here, I might move it up to the first profit target. And if it hits the first profit target before it hits the second one, oh well. I basically got 3 exits at my first profit target, not a big deal. But what I'm looking at here is this move here, right? This one happened during distribution. See the green line there? And it put the profit target up here, right around this cloud. And then, we entered into accumulation, and I'm thinking the next time we hit distribution, we might realize this target. But this particular move right here only has a target of previous highs. So basically, take profit 1 is previous highs, take profit 2 is new highs at basically 890. So I would put my first exit around 890. 890? 886? No, 860. Okay, around 860. What I'm gonna do actually is I'm gonna put it right here where this one is, 857. All right, my first target is at 857, and my second target is going to be at 890. Okay, done. And I will show you right here. Limit order 1, 857. Limit order 2, 890. So I'm currently sitting 15 points in drawdown, negative 65 bucks. This is actually a great time to add to my position, I think. But I'm not going to. They are hitting some new lows here. They're not new lows, but I mean they're making a lower low. They're snagging the liquidity. You can't see that right now because I'm scrolled over. There you go. So they're harvesting liquidity from down here. This is an excellent opportunity to add to the position. There, I just did. On paper trading. I got 5 contracts. Okay. It didn't make a big difference because I was already at 4. If I had 2 contracts, adding 1 more, that would have brought it down like halfway between. That would have been excellent. So now let's take a look at QQQ real quick. So on the Qs, the profit target number 1 is basically right here, and then profit target number 2 is it's basically right here. Right now, like if you're doing like a target for the day, like overall bullish, way up there, but I'm not. That's a bit much. If we get there, we get there in stages, 1 swing at a time, and I don't see that happening, especially with the head and shoulders that's potentially forming. Yes, right here. So I would actually target this, not necessarily at this. I mean, that actually that's. I was putting it like here, but this is actually targeting this, which has all of this liquidity from this. Now this has already been. Now I'm going to tell you that right now on NQ, I believe that's already been tapped. So like all this from the other day, like back here. Now this particular one from 230 has not been tapped. So okay, no, it hasn't been tapped on here either. Okay. So I mean you could aim for this one. So again, instead of just you don't want to aim at 127, you want to aim at the liquidity. So I would just say like right there. 599.5 is what I would aim at. Will they wick up above it? Probably. There's a little bit of liquidity right here too, all the way up to like 599.7. But that's above this. That's good. I would aim for 599.5 to be what gets hit on QQQ. And then the next target, again, we had that up here. Right here, this is 600.9. Let's bring it down this one right here, let's do just exactly 600, right? That'd be right here where these candles are. Those would be my profit targets, 599 and 600. 599, 5 and 600. So if you got a call that was like $2 below this 600. Now right here, say 599, 98, 97. I'd look at getting like a 597 call, which would basically be an at the money call. I'm not saying you would necessarily want to do that right now, but if we did do that, let me actually look and see how much those cost. Actually, I could do that right here. Let's look at the chain. The 0-day call at 597. Be about $1. 94 cents. 93 cents. Price must be moving down. So I'm going to mount this over here so we can keep an eye on this. Actually, let's open the chart. Right here, full chart. So now we can actually watch this play out in real time. So let's say we want to buy that right now. Boom. All right. So we're going to paper trade this option contract. Hell yeah. For QQQ. So we're going to paper trade QQQ options. And then we're going to real trade. Now we want to exit that when we get up here. So I'm going to set an alert on this. So I'm going to come over here. I'm going to say add an alert on horizontal line. We're going to say alert name TP1, TP1 QQQ. I'll say QQQ. Now we'll just come over here. We'll do add a placeholder, ticker, space. The close price is the current price when it gets hit. TP, take profit, QQQ. There we go. Ticker close. Create, and then we'll do this one. Add an alert. Message. This was TP QQQ. And this should just be once, right? Only once. Yeah. Create. All right, so now we'll get alerts for those. Save. Drag this over. Where did I exit this trade? It says I bought 3 there. Oh, I got stopped out here. Boom. Oh yeah, I dragged it up and then I got stopped out. Okay. I think that one actually got stopped out in the money. Made like 25 cents. Yay. Yeah, I know options are the way to go for the Qs. All right. Here we go. We did go a little bit below my box. They did still, and like I said, the manipulation, they want some people to think bearish, so they click sell. Because when they sell, they're selling into the institution's buy position, their long position. So by actually pushing down and breaking these lows, people that are trading on the 5-minute chart will see the lows break, and they might be inclined to start entering short positions, which means that they're buying or they're selling into the long positions from the institutions. So they're leveraging the higher time frame buyers or the higher time frame traders now too fund their position. Now we just sit and wait. We want to see this broken down again. We're getting close to the time when they might come sweep some of this liquidity, like this short liquidity that built up right here. You might want to clear it off the books. So they might bring the price up to about this level right here. So potentially, I'd say right about here is what they would target in a manipulated move. So we'll say that this is forecast gold. So they'll be moving up. Right, so I would expect a move to look sort of like something like that. It would go up and then down before actually going in the real up move. Or I'm just wrong. And they're actually bearish. But if they were actually bearish, why didn't they tap into all this? Right? Like why are they adding on to the liquidity there? It's like they want to come back to it. So I see all this as just harvesting more buy side liquidity or sell side, more long liquidity. And they're doing this, they're pushing right down to it, right close to the it's in manipulation, right? I mean, we're in the manipulation window. So this is the counter move. So I'm still optimistic. I did move my stops and Sierra chart out of the way because I had them right here. So I moved them down so they didn't get tripped. They're now sitting down here, same place as these ones. Which I'm currently sitting 157 in drawdown. It's not fun, I'll tell you that much. But we are coming down to the -2 deviation band. I thought we were already there. Was that just on a higher time frame? No. Maybe it was at the one I was looking at before. Maybe I was in Sierra chart. I don't know. Sitting right here. It did build up a bunch of sell side liquidity here, or buy side short liquidity. So I mean, if they tap into, they'd be exiting the positions there, which does mean It would give them reason to go a lot lower if they plan on using that to sell. They're stacking this. I mean, I could be wrong here. Could be wrong. Maybe they're not going higher today. But given the time periods, I still feel like they are. Don't know how to explain it other than that. Now, this is actually setting up potentially a pretty big move. What would this give us? I would put that it's the same profit target. 141 lines up with the same thing. This one, I mean, it's really no different. Everything kind of shows the same. Everything says the same thing, basically. I don't feel like that's a coincidence. We're in the manipulation. We're in the accumulation of the manipulation. So they're collecting all of the liquidity that was built during previous phases. They collected all the liquidity from accumulation, and now they're collecting some of it that was built back here that was accumulated during the beginning of distribution. So right around here is a time when it would be looking for it to pop off. Negative 5,000. Lovely. They're actually going to come sweep the lows. They don't usually break the lows of the day when they're overall bullish. I'm not saying they can't. Usually they won't. They come down close to it basically to stack up their orders, usually near the candle closes. So like around here. And then around here is where they would basically stack up their new low and basically add to their position more or less, where they bounce off. So we'll see if that happens. I mean, they're kind of doing that now. But they could still push through. We'll see. We'll see. Okay. I want to see it close like that. Yeah, go big. Go big. Show me an expansive move. I got my Fibonacci ready. Engulf, please. Engulf. Engulf. Don't just sweep, engulf. $17, $16, $15, $14, $13, $12, $11, $10, $9, $8, $7, $6, $5, $3, $2, $1. All right. So did engulf, but that was looking like a sweep. Interesting. Does show. In fact, they didn't sweep that much, and it came right back down to here. Doesn't make me confident. I'll tell you that much. I'm not going to exit my trades, though. They'll get exited if they come down and hit my stop loss. If they want my trades, you're going to have to come take them from me. They want to lock in the negative 4,700. If they want to steal that 4,700, they're going to have to come all the way down and get it. I don't mean it. You don't have to come get it. No, I wasn't really talking to you. I was talking shit. Never mind. And they still held that level right there. So far they've held that level. And now we're in manipulation. So this is a manipulation of a manipulation. This is when they would come do the sweeps, basically, and sweep a whole bunch of liquidity, or even can be the first part of their overall move up to the profit targets. Kind of what I'm looking for. If they do that, if I'm right about them being bullish, which I mean, I'm not gonna lie, sitting in drawdown is kind of hard to. Sit through it, but I know what I know, and this part here, I don't like this. In fact, there's all this untapped liquidity. Like they did like take some of it, but they left a lot of it intact, and I don't like that. So that tells me when they come up and sweep it, they're harvesting short liquidity. So like they are building a short position. Now that means they could definitely be drawn to the higher short up here, but now that what that tells me is that this area right here is basically what they're using to build a massive short position, right? Which means their average price on their short position is going to be like this, more or less. That's the institutional short that they're building, right? That's what I think. I think that's where they're shorting from. That's going to be the institutional short position. Once they come and they sweep, if they sweep this and they continue up to the profit target, this becomes their new average price on the shorts. That's that's how I'm looking at it. They didn't have a whole ton of time to build shorts here. They did come and tap into this. So I mean, I don't know how much fill they got from that. They only wicked into here, right? So they're leveraging this accumulation day where it's the whole day is basically just consolidation. Again, days like this are the worst days to trade. I made $2,000. I'm sitting down 4,000. So I'm confident that it's gonna. I'm relatively confident that it's gonna go up because they built all this. They're gonna come at the very least. They're gonna come harvest this. So when they do, I'll move my stop loss up into the money. Um, and if they harvest this, they're building a short position, so why wouldn't they come up here to their profit target? They put it here for a reason. When they get this, they'll probably actually want to harvest, this liquidity up through here too. And actually, this profit target sitting in the middle of this cloud. Oh no, this is a low liquidity area. This is the top of that. Yeah, that makes sense. Um, yeah, it all makes sense to me. I don't know if it makes sense to you. Pull back. Are they going to push down farther? Are they going to break this level? Let's find out. Right here together. So right now, like this big move down is, I think it's quickly to sweep the stops of these longs. Like these people thought, oh, I got in at the best price. Now they're like, I'm gonna take those from you. That's how I see that. I don't see it as the real move is bearish. It's like, I mean, it's a bearish move, but it's designed to take liquidity for a bullish move. Unless I'm wrong. But all this liquidity tells me I'm right because they built a bunch of short liquidity, so they want to go up and get it. Unless they're planning to go up and get it tomorrow. I mean, but if that's the case, why haven't they broken this level yet? And the whole day has basically just been bouncing between the deviation bands, right? So we're at -2. It's time to bounce back up. So they could come up here and get this easily. That takes them up to deviation band 1, and they can harvest all of this. And they have the justification they need to push higher, all the way up to this target. With just this past swing, this one swing justifies it. They don't even need to use like an old swing or anything like that. Like the current swing justifies it. So I think they're going up there. So I'm going to set most of my positions to exit um, around here at the edge of this liquidity right here. So I set one to exit here where this red line is, where their short position is being stacked. Or I suspect like that's where I'm exiting one. I'm going to exit the other there, and then I'm exiting my other at TP. What was TP1? I'm making the TP2 for me. But I'm also going to drag my stop loss up as when the price finally moves, which might not be until 2 o'clock. I like the number 7, so I added another position here. So when it drops down, it will get to 7. I said I would scale in later, but whatever. This is paper money. I'm confident in the trade for whatever reason. Yeah, I know the reason I've said it, but I know the old me would not be confident in this right now and would just be freaking out. And like that old me is still there in the back of my mind. I just keep on telling him, shut up, trust me. I know more than you did back then. But you know, that old self, it's still there, right? I still know how, like, I could look at this and be like, are you sure that's the bottom? Sure it's not just consolidating before it goes lower? Never broke up here before. Why do you think it's going to go so much higher now? Right? But I see all the liquidity. They want to fill positions. Once they tap this, they can tap this and this. They could even potentially tap all of this. Now they'll have a huge short position. Matter of fact, if they were to go all the way up to that one, how big would their short position be then? Let's change this to red border. We'll make it red. We'll make the fill light red. Really, really light. 5%. And then the midline is going to be dark red. And the text is going to be red. That's going to say inst short. Or institutional short position. And that's basically the highs and lows of where I see them building their shorts, of where they accumulated and have been harvesting them. So I'm expecting them to be here, right? I can get rid of that line now. And now what I want to do is I want to save this. Save as. I'm going to call it inst AVG position short. Right, there we go. So that's the institutional average position for short. I want to, we could say extend, right? Sure. In that case, I don't want any fill. I want no fill. The borders, I suppose the borders are fine. We'll make them 30%. Save as institutional average short. And then later I'll make one for longs. All right. So if they do come up to here, their average position shifts, right? To 837. Interesting. So if they're building a short now, holy crap. Actually, if they're building a short now, if that's where their focus is, Just harvest all the short liquidity. Like, bro. This really is head and shoulders, man. Oh, it's good time. Then anchor VWAP, turn that on. So yeah, if they're building shorts right now, then this really is looking like one. Oh my gosh. Didn't I? Oh. I don't know what I'm thinking. We'll put it the candle bodies. Well, I guess we need to come down to there. I'm looking at it like this. So, like, this is what will complete it, I guess, from this perspective. This came down here, and then this came down here. You'd have to look at the, like, that is the shoulder. I mean, that's a little much. Yeah, the shoulder, it looks like there's a shoulder forming. And a short tomorrow would definitely fill it out. Huh. I was down 5,000. I'm only down 1,700. Oh, I do have 6 positions now, or 6 contracts on my position. So a small move will do that. No, yeah, we're definitely moving up there. I'm almost back to break even on my main account too. We'll turn VWAP back on. We will unhide my forecasts. Actually, the forecasts, I will hide them. I don't care about those right now. I'll go ahead and delete those. Don't need those anymore. This one I can keep, right? I'll leave it. Well, it can go a little bit early. Let's unshow, let's hide fib time. So now this right here, manipulation. So if we do this into thirds right here, what we get is that this could start, like, we could put it back to here. Now I did say that the manipulative move could swipe this right here. I will put that back. I was expecting this to maybe come up to here before it drops down. Swipe this, but now given what I'm thinking that they're building a short position, they actually could just go straight up, because this manipulation and distribution is really just it really, it's a manipulation on its own, because they built up this liquidity, which means all this is accumulation. They accumulated all this liquidity, and now they're going to manipulate the market into it, harvest all of it, all the way up to, here, basically, and potentially up to here, in this region here. So let's get this box, make a copy of it. shrink this box. Make this one the same. Okay. I'll make this 2 of them so we can see our 2 different profit targets. We'll do this one right there. That way it basically just targets this. And then the other one will come up to here and target the other one. And that liquidity starts above this. It kind of starts, I mean, there's a little bit there. We'll say like right about here. Right about here is where all this starts. So we'll say right here. Oh no, that's where that one ends. So above this, basically right here. You got that, and then you move up to right there. That's the next level. Yeah, so there we go. So this one would basically be right about there. That's what I'm looking for. Okay, I'm going to go ahead and move my stops into the money. 2, 3. I'm not losing money today on my paper trades. I'm up $100. That's cool. I'm going to sell 2 of them then. Nope. Oh, I think I just did. Nope, I didn't. Stop limit. Didn't hit. I should have a third profit. Oh, there's my third profit target. I'm up to 122. So if I sell 2 of them, okay. Oh, hell yeah. Okay. I just brought my average cost for my live position down to here. I sold 2 of them, right? I had a $56 loss earlier this morning. Because a stop loss got hit basically. And now I saw that I was at like 120, so I knew if I closed 2 of them, that would be 2/3 of that, which would be over my well, I thought it would be over my daily P&L or over my $56 loss. 120 shows my P&L right now is still a 105. Well, that's from this one. Okay, well I'm gonna move this up here then to lock that in. Now, well, that stinks. Whatever. But now I'm only down $32 today. I guess the 2 orders I closed were the ones that were higher up, so they were just barely break even. So here's my stats for the day. Open P&L 100, daily closed is -32. So I could close right now and basically be up $60 on the day. And my average position right now is basically right down here. Right, this is the one I have open right now, right here in my real money account. I'm gonna drag this right here. If I get stopped out, oh well. Actually, no. What did I say I was gonna do? Let's do what I said I was gonna do. I said I was gonna exit some of these so I can sell. I said I'd keep a few of them. All right. So now my average position is way down here, right? I'm bought in at the bottom now. No. That's my stop loss. If I close another one, it's still not shifting it. I didn't buy them all right there. That's fine. Now I'm up to realized 8,000. I can move this up here. Now I'm back to where I was when I started the day, and I basically have a free trade with 2 contracts. I started the day around 8,500 or 80, I think it was like 83, somewhere between 83 and 85, and I'm basically back there, more or less to break even on the day because I had a bad trade that I said earlier. where I had the stop loss that got hit while I was restarting my computer. I didn't take that trade on paper trading because I knew that was a real possibility and I wasn't going to risk real money on it. So I kind of, in my mind, I don't really even count that as a real loss, but it did show up on this account. I did make 2,000 on top of that, and now so basically my account dropped to like what 5,300, whatever you saw a little bit ago, realized P&L. And now it's back up to 8,000. Realized, and then I still have 2 trades open. So we are consolidating around VWAP here. We could come down and hit my stop and take me out of the trade. It's totally possible. And I'll let it happen. I don't care. I'm basically back to where I started the day. But consider the fact that I accidentally dropped down to 5,000 and then got back up to 8. I see it as a $3,000 win. On my real account, we can watch that trade unfold now. Right here. This is a micros. I was watching micro ES, the S&P 500, but as you can see right up here says in QZ. Wait, in QZ. MNQ, NQ. Z is December, the December contract. So this one over here is MNQ. This one is actually NQ. So if I edit that, really that's not a drawing. That's a study. I should be able to just right click and say edit study. Studies. It's called the chart symbol display. Okay, just got exited. But I cleared today with a $34 P&L. So there we go. My P&L on the day is $34. I'm profitable, right? If that was in Q, I'd be up $340, and I'm not discouraged by that. So this right here is in Q. I'm going to go ahead and save that chart book. We'll save it. Boom. There we go. So this is just a pullback. I mean, I totally could. My order was down here. I could have moved my stop loss like right down here, and then I would not have gotten stopped out. But because I took a loss earlier today, I would prefer to lock in a win today than, move my stop and then it bounces all the way down and hits it there. And instead of closing out in the green, maybe instead of closing negative, it was negative 56. And after I closed those first two, it was like negative 30. Well, if I move it all the way down here, maybe it'd be like negative 20, right? Instead of even risking that, like I'm green on the day. So I'm fine with that. I'm fine with that. And because we saw this right here, how they're harvesting the bearish intent, this has potential for a VWAP bounce to the downside to continue a bearish trend. So they could stop harvesting the liquidity here if they want. And they could go bearish into a bearish trend from here. A lot of people would expect it, and they'd be able to get a lot of people to click short, to click sell. And then they could build up another set of this, right? So, I mean, if that's the case, even if they do want to come back and harvest it later, if I wanted to buy back into a long leg manipulation, because at this point, long would be a manipulated move to harvest the short liquidity. So if I wanted to do that, I would get in like when I find a right opportunity for it. So that's why I moved my stop up and got stopped out there. Because now my P&L for the day is in the green, right? And I'm pleased with that. I only need like $200 a day to pay all my bills, and I made like 10 times that yesterday. So like I'm basically like I've made all the money I need to for the next 2 weeks in like a day or two. in like one day, basically. Um, so right now, I made 2 grand on here, which if I would have done that same move on micros, I would have made 200. I just made another 34. Uh, so I see that my trades, like when I look at it from the perspective of, um, did I take good trades today? Was I executing relatively cleanly? Am I satisfied with the way I traded, with the way I managed my trades? The answer is yes. And if I would have made the paper trades that I made, the good ones, the ones that I believed in, not the one that I didn't make, if I made those other ones in my real account, which honestly I just kind of forgot to do it because I was like I was talking and describing stuff. This is my first live stream, um, and I forgot to go do that in Sierra Chart, and I just didn't make those trades. But if I would have, that would have been basically I'd be up like $234 today. Which again, that's enough to pay the bills. That's one more day of the month worth of bills paid. Um, and every once in a while, you get those days where you can pay 10 days worth of bills, right? I mean, those days come pretty often. You get them a few times a week. And these swings right here, something I want to start doing is is I don't want to call it swing trading, but basically intraday swing trading, where when I see the bias shift, like when we hit a larger profit target, just clicking reverse, right, on the order entry. Oh crap! I forgot to. We've got this thing. And now it's not in the. It's not in the money. Ugh, dang it! It gained like 30%, bro, and I didn't close it. Now we're down $8, and I don't know that we're gonna go back up. I'm gonna close it at -5 and just leave it there. Uh, I mean, it can still go up here, but I'm not. Given that the short bias that we have right now, I'm not confident on it. So I'm just going to close it at a small loss. Not a big deal. But I could have, man, it went from being, it was like what, $120, and I got it at what, 86, 86 to 130. It was like $40 profit right there, right? I mean, if I bought it for $1, that's a 30%, that's 30% profit on that one trade. I mean, that's not bad. Um, you got to remember to exit this thing. Yeah, that's one of the things I like. Sierra Chart. If you keep these things, if you keep your charts side by side, that's actually a good idea. Like over here, turn this into this is liquidity map. That's that layout, huh? Okay. So what I want to do is I want to come here and I want to do this in thirds, right? Boom. All right. Now this one here will be NQ futures NQ. This one here will be MNQ micro. All right. And then these ones here, these are just going to be kind of, well, nothings. Actually, no, that's not what I wanted. Let's try this again. Boom. Yeah, there we go. These ones are just for order entry. So I can, like, if I wanted to scalp micros, I could just come over here and then boom, I could scalp micros counter trend, right? Then I could exit out of that, and then I can go back to my full size. Yeah, that's nice. I like that. And then over here, I could trade the options. Sweet. So this was the put that I was targeting. So yeah, I like that. And then I can just come over here and whatever option contract I'm interested in, just throw it right there. I like that. I like that a lot. We'll call this, we'll save layout and make a copy. We'll call this liquidity map. We'll just save it, save whatever. Um, and then if I don't want to see that at any point, I can just do that. But now I can turn on that. Hell yeah, I like that. All right. Well, this shows that I basically broke even today. Let's see. What does it show my daily P&L? Does it show it? History, account history, trade journal. It doesn't really. They don't show you that stuff super clean. I'd have to go back and look at when I started the recording, what the P&L was. Actually, when I started, it was probably like 5,000. Um, I don't know what my P&L was before that. It was over 8,000. I know that much. I think it was like somewhere between 83 and 8,500. But I'm considering a break even on the day. Um, but in my mind, I see it as being up 3,000 because I made 3,000 a day. I lost 3,000 on one bad stop loss position when I restarted my computer. Because I had my stop right here and then it dropped down. Beforehand, I thought, while I'm restarting, maybe I should move it down below that other liquidity pool. But then I didn't do that. I was like, restart only take a couple minutes. It'll be fine. Maybe. But then I said, well, I could enter this trade on my live account. I was like, no, I'm not going to risk it if I'm not watching it. And instead of just closing the position or moving my stop here, I just left it. And then by the time I entered the order back in, it was like up here or something. And it was just, so I mean, I could have probably actually made more money today, but I see it as a $3,000 win, maybe even a $5,000 win if I had let that first leg play out. But I'm satisfied with today's trading. The moves today, again, I think they still can push up here. But given that they're harvesting this bearish, given that they're harvesting bearish activity, it's a manipulative move, and manipulative moves are very quick. So this actually probably is the move to get into. Man, I'm kind of tempted to take it. Let's see. This pullback right here, I gotta let Rolo out. My doggy is at the door and he's making little sniffy sounds. It's like he's trying to get my attention. This was a 38%. No, that's the wrong direction. I gotta go let him. I probably asked to pee. I gave him some food and water earlier. So I was about a 68% pullback to VWAP. Bounced off this band. So this is a good time to get a move up, potentially. I will do it here on my paper account. Hopefully I don't regret that decision. And then I'm going to put take profit. I'll put it right up here. Now, there's a gap right here. This liquidity is all close to each other. I'm going to put it right there. That's a little over a 1-to-1 risk reward. Now, realistically, the ideal place to enter into this trade, let's see if there is one. If I had followed my rules, I would have entered at this price. It did get tagged, right? So if I was looking at this when it happened, this would have been the order entry, 21% pullback from this move right here. And this next candle did deliver the entry, right? So this would be the stop loss for that. And then this would be, let's manage this as an ideal trade. My ideal trade entry for this would have been, again, I said it would have been what, right here. And then my profit target that I set, it would be almost a 3-to-1. So that's a valid trade. I just got in late. I'll be right back. Got to let the dog out. He's almost whining now. Alrighty, I'm back, and it looks like we are on our way to victory. Hey, what? On our way to victory? We just hit victory, didn't we? Did that play out while I was walking the dog out in the yard? How cool is that? Hell yeah. I made a few extra $100. Now I'm definitely profitable on the day because I know I wasn't above 8,500. Hell yeah. I like that. Now from there, it actually goes higher, of course, right? But that was my safe target right there. If it hadn't moved up there yet, I probably would have just moved my stop and then kind of like trailed along the way. I would have moved my profit target and trailed it along the way. Um, but this right here is the first area. So that would have been a 3-to-1. So it's a valid trade setup. I entered a little late, so I didn't get to realize the full thing, but that's 30-point swing right there. Not bad at all. I'm expecting it to keep on going, but I'm out of the position, so we'll just watch and see if my ultimate prediction pays off. Well, it's not going to pay off, but we'll see if it plays out, right? Because I'm not in the trade currently. But this is the move right here. So over time, I do hope to get a little bit better at figuring out when the manipulation is about to occur, because that's the move you want to get on, right? Knowing when the manipulation is about to happen. I mean, right here, like it's big and yellow, and like we can see this is the bottom. It should be obvious. Over here, we're in a distribution phase right here. Where's the distribution happen? At the big green one. I mean, it's not really that hard to figure out. You know, but these are the moves to get in on. Right here, I was still looking bullish, so I didn't want to trade against it, which is why I didn't take it. But knowing that I had a bullish bias, a downward move here, on a day where we're doing a bunch of accumulation, right? Like we're still like we're staying in this range, right? Right here, like this whole time, like here they're kind of working accumulation on both sides. Right here they come down, grab this liquidity. Right here they're building up, they're building up, they're building up longs, right? And they come back through here, leave a little bit of short liquidity behind, and then they come take the rest of that long liquidity that built up here, right? Right here. So given that this was now this is distribution phase right here. So what does that mean? Let's break this down and see if I should have been. Is there a valid reason for me to have looked for a trade right here? I mean, number one, we're at the 2 deviation band. In a distribution phase, I could potentially expect the trend to continue for the day, right? On the higher context, we have been moving down over, the days. Or like we've been coming down. We did go up yesterday, and way the overnight, right? But then I knew we were bearish from there because of that. All that liquidity, like we swept 2 days, 2.5, 1, 2, 3 days worth of liquidity was swept basically on this day and the next overnight. One overnight session took all the liquidity from one overnight, the other overnight, and even another overnight from 3 overnights worth of liquidity, all swept in one overnight, right? So basically this sweep last night took out 3 days of liquidity. So they built a massive short position. And then right here, they continued going short a bit, but also building out a long position, right? They were building longs here. And my thinking this morning, I think I said it earlier on this stream, this video, was that they could have been building those longs to exit their shorts, um, and also potentially to fuel just at another scale, like on a different time frame. If they want to come back and harvest this liquidity, they want to profit on the way up to do it, right? They can't just push the price up and not profit on it. If they want to trigger these stops, they're going to have to push price up. And if they do that, it's going to cost them. So they need to be able to fund that. So they do it by building a long position. And then when they push up, all those longs become worth more money. And then they can trip these. So it's all part of a bigger plan to go down some more, which becomes obvious when you see it. There's a head and shoulders inside of a larger head and shoulders. So I do feel, yeah, I'm not saying, oh, it's bearish because of a head and shoulders. I'm saying the head and shoulders is the result of liquidity engineering. Like that's what it is. Um, that's why it's a bearish symbol, because they're engineering a lot of downside liquidity, and we're gonna realize that again probably tomorrow, I'm guessing. Now these right here are intraday. Let's hide those. Fib times hide. All right. Let's go ahead and hide VWAP too. We don't want to see that. Actually, no. I just don't want to see it when I'm above, say, 30 minutes. So let's get this and say when we're above 30, I want to see it for 1 through 30. When I'm above that, I don't want to see it. Okay, there we go. So we can see it 30 minutes and below. All right, and then this is forecast again. Those are under the forecast. I think one of them isn't. Or are they both? I guess since I copied it, it puts them both there. That's kind of cool. So if I were to, I need to see this. I didn't realize that. So if I copy this, yeah, the copy also stays inside the same group. That's awesome. I'm glad they did that. Nice. Nice. So if every time I do another, like liquidity, if I do it by copying an existing liquidity, it'll stay grouped in the liquidity thing. But if I draw a new box and then I set it to use the liquidity profile, it won't. All right, so from now on, that's what I got to do. I got to do liquidity by copying it. All right, sweet. Nice to know. Wait, that one didn't hide. Wait, this one's not showing now. I'm so confused. It shows that it's in here. What the heck? So weird. Oh, it's not going to show it on the 1 hour because it's like a few minutes or something, maybe. I don't know. And like these things aren't even so weird. But yeah, overall, in general, like over the next few days, maybe weeks, feeling bearish. We go out to a daily chart or a weekly chart. We can actually look at the we might actually start seeing a head and shoulders form here. This could be the beginning of a daily head and shoulders type pattern. I'm not saying it will be, but like right here, you got this, you got this. If this comes down and then bounces up, forms daily head and shoulders, we won't see that for a couple of years, maybe. If that happens, oh my gosh, people will be freaking out. But no, like up here, let's look at like right here. I think that's what this is. August 2025. If we come down to 4 hours, Now 4 hours, this only goes back a few days. September 16th. Yeah, this is August 2025. Yeah, I could see it dropping down, potentially. At least to the same lows as before. Because down here, there's no liquidity, right? They already erased it all. So they might drop it down and then rebuild it here. So I see them dropping down to basically 240, 24, 240. Whether they go below that or not, I don't know. But they have valid reason to drop down here. They like to ensure there's liquidity on the books, and there isn't much on the books down to here. So they probably would like to rebalance and drop down and then build up some more liquidity. So I see them dropping down to here. Now, if they want to take the opportunity to just get another discount, drop the price farther, you know, we'll be aware. That's a possibility. Okay. Now, how are we doing with our targets? Forecasts, fib time, liquidity, turn on liquidity, turn on our targets. So we hit our first profit target. No, profit target one. That was from, was that from earlier in the day? That was what I forecasted from a bounce, I think. Anyway, so we hit that. Hit that a few times. I might have been for this one. I think that was a profit target for back here, right? And then we exceeded it. We had a profit target here. We hit that one, cashed out on that one. No, our real profit target was this one up here. We have not hit that one yet. So I can turn on our forecasts. Why isn't this? Oh my gosh, this thing is being so weird. All right, what I'm going to do is I'm going to reload this tab. Hopefully, this stuff will start working again a little bit better. What the? 4 hours, and it only goes back to the 25th. Oh, this is options. Oh, this should be NQ. Seed. What? Oh no, NQ one exclamation. Okay, there we go. We're back. Back in business. Now we want to show our forecasts. Hide them. Show them. And we want to drop down to a 1 minute chart. Now we can save this. Okay, here we go. This is more like it. Now let's go ahead and fix our. Oh, this thing right here. I only want to see this when I'm at 1 hour and above. I don't want to see that on any lower charts. Okay. Head and shoulders. Again, we'll drag that one down there. Okay. Now this, I can get rid of that. That was showing something else. My Sierra chart order, I don't have that anymore, but let's go ahead and save this. Save as Sierra order. It's either an intended or existing Sierra order. We can go ahead and delete that now, but I have the profile saved. Okay. Okay, there we go. We're pushing up, getting to the highs. So this profit target, I can go ahead and delete that. We're done with that one. This one isn't really anything. This one here, this was a profit target for this liquidity. This one here, we've reached that one. Do I have profit target raise? My gosh, you saw I tried to click this thing again and it didn't do it. Right, profit target. Don't. I'm going to make one. All right. Profit target. All right. Text. Okay, it's the third green from the top and the fourth green from the top. Second thickness dots. Profit target. Third green from the top. Not bold. Okay. Now so this is profit target. Save as profit target. Now sometimes I'll use horizontal lines just because it's easy. I can just use Alt H and throw a line on real quick. But ideally, I prefer to use array. Now, is there a hotkey for array? No, see, I can't just do like Alt R for array. I think Alt R actually reloads the page or something like that. So like for quick stuff, I'll actually throw them on using whoops, I forgot that middle click does a fib. That's actually kind of cool. Middle click, fib. Sweet. I forgot all about that. But then what I actually want to do is be able to like throw a profit target somewhere just like that with Alt H. And then I can go back later and I could actually like put where it starts. That way I can always see where I created the profit target from, you know. But I do still have it on the lines just so I can Alt H, you know, profit target and just mark it real quick. Or just if I have one. Now, if I already have one on the screen, I can just control click on it, you know. Say, oh, we got a new one. It's going to be, you know, down here. Now, obviously, I couldn't profit target that, but I could say, you know, at a point in time, you know, just like this, if I expect this to hit, I can, you know, put it, you know, I expect it to hit from here. You know, this is like if this pullback right here, for instance. If I say, how far is this pullback going to come? Oh, you know what? Nope. I can middle click. Boom. Right. I can say this profit target for this pullback could be like right here. Right. Now, that doesn't make sense. I'd say 38% makes more sense. Right. So I'd put it maybe right here. Now there's a big line there. That's a big gap. That's a big gap. I think like right here makes the most sense to me. So you have a level here, you have a level here, then you have this huge gap, and then the next one is down here. So I'd say the most likely target is right around here. Now it looks like we're not going to hit that. We only hit 21%. So, you know, whatever. But that's how I would use those. So obviously you wouldn't put them on after the fact. That's like, for, yeah, that's not how that works. But I could see where I anticipated the profit target, like based on, you know, this upswing, right? So if I have it like here, I know it was generated based on this upswing, right? Or based on whatever candle, like the highest candle, and you know, say, okay, so a retracement from this candle would have warranted that profit target, right? So by doing that, yeah, that's going to be a refinement of my process. Cool, like that. Horizontal array, that's going to be part of the targets section. There we go. Now I could hide targets. Boom, 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 boom. Love it when things are nice and organized. Let me show the targets though. All right. Now, are we going to find now this one right here? This could have been a like right here. You see a pullback. If you want to get on the pullback, um, see this pullback right here, That's also 38%. And to buy into it, um, to know that it's like something that might continue. Again, I look at like this right here, where you got this engulfing. When I see this, I'd look to buy in at the blue right there. So 814.50, and we actually came back to it a few times. So this is where I would have gotten in for that. I got an entry here, and then it would have come back and tagged it here and here, and slightly in drawdown, but not bad. So if I find another move with another pullback, that's what I can look for. I can look for it to hit the pullback target, expand away, and then do like what do you call that? Like a micro pullback, a one candle pullback into the next leg, right? Into the next new high. And then we hit a high here. This is like really small. Like it's not, I don't know, the pullback doesn't look, it looks kind of like a momentum fade. So I'd want to see something a little bit better before I get in. Like we're right up here, we harvested this liquidity, so like maybe they don't want to come up here and they want to just build some new liquidity in the vicinity, and they're just going to start fading down from here, right? This could be a fade back. Maybe we're not going to hit the target up here. This was all the pretty built liquidity, and they're done harvesting it. So can they go harvest more? Yes. If they do, we have a target, right? If I see another move with an expansion, I would expect them to push up here. But that's why I put my initial exit right here, right? Was because I have no guarantee they're coming up here. If they have bearish intent, they might come and get this in the after hours. They can get it whenever they want. But this is the immediate target. Like there's a high draw to this area. Oh, and what I was saying earlier, my gosh, I'm all over the place. What's this? That's the 5-minute opening range. Okay. Close that one. Let's unhide. Let's set this back to 1 for now because we're not trading any of those other instruments at the moment. We'll turn fib time back on, and we'll get rid of all like the micro stuff in here. And for now, we don't need any liquidity pools visible, so I'm going to hide those. And we don't need any forecasts visible, so I'm going to hide those at the moment. We also don't really need VWAP visible. I'm going to hide that. I want a relatively clean chart. I'll leave the profit targets for now, but I'm going to lock them so I don't accidentally drag them. Okay. This right here also belongs under fib time. Oh, of course it does, and it's showing. Okay. I'm going to go ahead and delete that. Well, I had it there. It was like, it's fine. It makes sense. Like the thing actually expanded when it hit that. I'll leave it because it's valid. But I kind of want to redo that sort of thing. And I want to be able to identify these swing locations. You know, let's see if it's possible, like how to do that. So if we look at these, like these ones, you know, it's not that you can't trade them. Right, like right here, this one is very common, you know, time for stuff to happen. Around 3:30, 4 o'clock, is usually when you'll like hit a low or something like that. Doesn't mean it's the low of the day. It's the low of the move away from the low, whatever that means, right? So, like in this case, like you moved up, it doesn't mean you're not going to break that low when the market opens, right? So I used to think, oh, if I could just be up at like 3 or 4 in the morning, I can trade and I can get the low, then I can hold that and write it up. Some days we get like a really bullish day, that'll work. Other days, not so much, right? But getting that low, knowing that there's a low likely to form, between 330 and 4, um, like it's great. Like you can do an easy trade, like you can easily get 30, 40 points out of it, maybe even more. Let's see, how much would we have gotten if we got in somewhere around this low? So let's say you saw this, came down here. It's now you're looking like around 330 to 4, right? So basically this window right here, right? You're looking at this window. This right here is when London starts around 2, more or less. This 230, on 230, something like that. So right here, um, is like the first London session accumulation. So now Asia does a lot of accumulating, right? Like you can see them, they're building up. Actually, right here, they're building up longs. They swipe them. They build up some. Right here, they built up some shorts. Right here, this candle, they built up some longs here. This candle swiped it. Down here, they came down. They wiped these longs, these longs. They wiped all the longs down to here, right? And then simultaneously, they built up some shorts. So they're going to be pulling back at some point later. They came up slowly building these. They came down, swiped them. This moved up pretty quick. It swiped these little shorts right here. There's not a lot of volume in Asia session. So they kind of just recycle time a lot, recycle the price range during their time. And then over here, we got some long building. Now this right here is actually swiping the liquidity, short liquidity. So they're basically profiting on their longs more or less, if you want to look at it like that. Right here, some more shorts. They come up and steal those. So right here, this move up, it's really fast. So this is the manipulation move, right? They're leveraging their longs that they've been building. And in one sense, this is a distribution of their long position, right? It's the expansion of their long position, but it's used to harvest the liquidity over here of the shorts. And then we can tell that, like right here, they started building shorts, right? Like they kind of got some short stacking here, but it's kind of small. Right here is like a clean short stack. Here's more of a clean short stack. Like this, when they're kind of like separated, this one's okay. Like some of these, I guess that's kind of neat right there. That's kind of neat and tidy. That was like before the close. No, that's 1850. Hold on, this isn't even right. No, 1900. Yeah. Then this, like the fast move, is generally what you would consider to be the manipulation. So this right here shows like the short is the manipulation. So now it has me looking, okay, are they starting to build longs now? And now I see that they are, right? They're building longs and then they come back and they harvest them, right? And then right here, they get into a little bit of short building, right? You see them exposing the top nice, sort of clean. But meanwhile, they're harvesting the longs, right? So they're still adding to their longs, but they're building shorts too. So they are getting ready to do something with the shorts. So it's kind of like when you start seeing them go from long building to short building, I kind of look at that as like they're getting ready to change directions. And they came down here, swiped pretty much the rest of the longs. And now you can see this was a low before they came up here. And now over here, more short building. They come up here. They didn't sweep these like these. They didn't sweep most of them. There's like this level, this here. They didn't sweep that. They did sweep these ones, right? Little ones. Right here, they exposed some more shorts. Again, this is only a few candles, and this is Asia session. And they came up, swept that, and they really came up with this wick here, and they swept like this stuff here with this wick. Now, I would have looked at this and said they might not come up to this level. Again, they have this wick, so they came up and got that. If they were planning to come back here and stay for any amount of time, they wouldn't have done that. They did end up coming back, right? They have all these shorts. They dropped it down here. So I could have potentially, now I didn't see an expansive move away. But I would have been looking for something to say that like this is a level. Like I might expect price to come back in this region. But I would not have necessarily expected it to pass this level. If I'm gonna be completely honest with you, I would not have expected it to pass this level. It did, just barely. I would have looked and said, why did it stop here? There's nothing, special about this. I would have expected it to come up to this level, right? It didn't. So I could, if they did want to tag this, I'd expect them to maybe just go a little bit higher. Now, if they do go a little bit higher, could they justify going up here? Sure. But generally when they do this, it's to tag a key level, but they didn't actually tag any type of key level there, which would have been curious to me. But I figure they know more about what's on the books than I do. But they did actually come back and tag that. Not a big deal. Where I would have actually entered my trade would have been, I would have been looking for an expansive move. So over here, I'm not seeing anything, We come back, we get this liquidity on the pullback. It comes back. We come up here, and this does what I think, we come back up here. We don't quite break this high, which I'm not expecting it to be broken, right? This is a move that typically is a let's get it while we're here because we're not coming back type of a move. That's what I look at those as. And then I see this, and then we get this expansive move away where like it encompasses like this one here. It engulfs like this whole body. Now it doesn't, it kind of gap down at the open. So, but the candle body is bigger than the whole thing. It almost goes all the way down to the wick. Right? So this is where I would have been looking if I was on here trading in this Asia session. This is where I would have taken my trade. Right? I would have done a trade like this. And then I would have gotten in at the blue line right here. This is where I would have shorted. And then my stop loss would have been either here or here, right? Or behind this candle. I would have gotten stopped out. I would have. And then 3-to-1 risk reward. Now I would have, let's see, 3-to-1. This needs to be at least 3. And then that does line up with some liquidity. And I would say, now what does that look like in terms of a pullback? That'd be a 50% pullback. I wouldn't feel too confident about that. I don't know. Now this hadn't formed yet, right? I would have been entering based on this high or this high, for a pullback from here. So I would have been looking more for 38%. 50, you could look at this, but there's no draw down here. So 31% has a draw, and I would have looked for maybe down here, targeting this liquidity. Now, doing all this within a minute and actually getting the order in, not realistic. I'll be honest with you. That's why you got to kind of like have some of these levels planned out ahead of time. If you try to do it all right after you see this, you're going to miss your chance to get in. You got to have your fib levels down. You got to know what targets are in range. That way, when you see this and you say, okay, can I afford a 3-to-1? You can drag it down to your 3. And if there's nothing there, like if you don't have any fib levels lined up, or if you see this is like 50%, you'd be like, I don't know about that. Maybe not take the trade. It's not that 50 doesn't get hit. It doesn't get hit as often, right? You want a higher probability. And with Asia session, like that's not it's not really how you want to trade Asia session anyways. It's more of a consolidation time period. Um, but right here is where I would have potentially taken the trade, and I would have gotten stopped out. And then over here, I never would have had an opportunity to get back in on this trade. So I would have just gotten stopped out for however much that was. How many points was that? About a 5-point stop loss. So almost $100 if it was on NQ. That would have been $100 loss right there. But I wouldn't. That's not the kind of trades I take in Asia session. Okay. That is the general way I trade. Like during the cash session. But during Asia accumulation, you want to just trade. Generally, I wouldn't trade this. The only type of Asia session I trade is this kind, where you see them building like this repeatedly, like that. That's the kind of thing I trade in Asia. And I say, okay, they're doing an uptrend, they're going to come sweep it eventually, right? So I wait for a pullback, and you notice like they never really sweep the pullbacks, they never break the lows, right? This is the sort of thing I'm looking for, and then on a pullback, you can get in, and then just set your stop maybe a couple points below, just in case they do send a wick down. And then after one or two pullbacks, you're safe. You can put your stop into the money, and you just kind of watch it, and then maybe just keep trailing your stop, one pullback behind the current pullback, right? So like when this one goes and you see that was a pullback, move your stop here. This happens, boom, you got this, it moves away. Say, okay, this was the pullback. Now you move your stop here. And you just keep on doing that. It's really, really, really boring, right? If that's how you want to trade for like 8 hours. But when you get an Asia session where they do a trend like this, they don't take the liquidity. So you're very rarely to get stopped out like that. And if you trail behind the last pullback, you will eventually get stopped out. London session will come online, likely stop you out, or eventually they'll reach the end of their range and then they'll come stop you out. Let's see if we can find one of those. Here we go. 1900 hours. Asia sessions online. We got a trend down. None of this is getting stopped out. Boom, 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 boom. Right into 11, 12. Around 2 o'clock is when London comes online. Some people might come on a little early around 1. And then around here, 1:45. Basically, yeah, right around here, 2 o'clock, 2:30, boom, everything is swept. So you kind of want to get out, generally around midnight, 1 a.m. Like if you're going to trade Asia, I wouldn't trade it past midnight. Just in general. And I would only trade this type of setup. If you see after, 10 p.m., if you come in at around 10 p.m., 9:30, or 7, sorry, I said 10 p.m. I'm thinking 8 o'clock, right? Come in around 7:30 or 8 o'clock and see if they're doing like a trend building thing like this. And if so, just like in this case, you get in on the next upswing. And then you just put your stop right back here behind this one. And then around midnight, sometime around midnight, you just look for a low and then like start to swing up. Like right here, you might look at this, say, okay, they're starting to swing up. It's 11:30, and then you just get out right here, right? You could have gotten a better exit, right? But you see them starting to swing up, and you just get out around anytime between 11:30 and 12. If you get in and you're here, you can just set your stop right here, and if they hit it, you're out, right? I mean, you got in here, your stop was here, and now your stop got trailed down to here. It's not a ton of profit, but you're still in the money, right? If they do come up, you make a little bit, but if they do have one more swing left in them, I think about it, you went from here to here, it's like 8 points, right? Now another thing you could do is you could scalp these. right? Now that's, you could have like a long position on NQ where you enter here and then like you trail your stops, like I said. But then like on micros, you could actually scalp them down into the pullback. Um, or you could scalp the reversals, right? Because they're quick. Um, but like you could basically on micros, like let's say you have 3 micro contracts, you can come over here and then you can come to the top, like you're looking at this, and it's basically over 78% pullback each time, right? Because the way they stack them, right? So you want to see it pop over 78% and start to come back. Like that's generally what you look for here. So here, oh, you got a new low, comes to 78. Now this one's like right around 945 or 745. You missed that one. You got this one. Nope, it doesn't hit there. Come down, come down. Just keep this on the low, and then you see it pull back. Comes over 78%, starts to come down. You could enter your long position here, or your short position, your long-term short position on NQ, right? And you set your stop back here. When this one forms, you move it back here, right? But also, you can enter a short position on micro NQ, maybe with 3 contracts. And then you can trail it down until it starts to pull up. So now, how do they, you would want to look at how they're doing their extensions, right? So this right here, they're extending out close to 127%. Is it 127 actually? Almost. It's almost under 27% there. What about this one? That one went past under 27%. This one here, down to there. I don't know that you'd uh I mean if you wait for it to start to pull back, how would you scalp these down? If you're trading this, like, oh wait, no, that's backwards. Ah, sorry. My bad. Okay, yeah, so 127%. They hit it. Cool. 127%. They got a bounce, didn't quite deliver. Um, come down again. You look at the next one, the next one, the next one. Then you get a bounce. So where do you want to now? You get a bounce here. Let's see. I guess like if it comes down, you could just go for a certain number of points, right? Like maybe you just want to snag. Like that's probably the easiest way because you don't know how big each one of these is going to be. But if you just try to snag a certain number of points on each one, like that's 12 right there. Like if you just like 8 to 10 points. If you tried to do that, just get. I mean, some of these will give you way more than that. But even just like dragging your stop, like once you get like 5 or 6 points in, the whole idea here is that none of these are likely to get swept. So like if you just trail back a few candles, right? Like you trailed here, and then you just wait like for a few candles to develop, and then you just trail like this one. You might have got stopped out here, right? If you trailed like right on the candle. If you just trail like midway between like halfway of the last candle, something sort of like that. You might be able to survive a little bit. Right here, you get stopped out. Um, but like I just try to get like 8 to 10 points maybe. Um, trading down. Like there's ways you can trade Asia. Um, And then that way you can kind of like stack up extra wins, and then maybe use those to add to your NQ position, right? Maybe that's enough to cover the stop loss. For maybe now you can stack 2 NQs, right? If the money you make on this is enough to cover an NQ stop back here, now you can add a second position, right? Do it again. Maybe now you can add a third position. Now you have a thing here, 3 stops, 3 positions here, and then this one, if this one delivers a decent, maybe 30 or 40 points, you're just like, I'm good for the night. How big was this? Right. So if you entered when this one started to move away right there, now generally if you're expecting like just 10 or 20 points, I mean, you see this move and you're like, okay, well, how big was that move actually? I'm curious. About 25 points. You're like, okay, let's go for 20 points. Maybe you got the 3 contracts. You look for 20 points, like right there. Once you hit it, maybe you set your stop loss. Boom, you get stopped out. But 20 points times 3 contracts at that point, that's 60 points, right? 60 points in total, times $20 each. That's $1,200. By 9 p.m. So like from 7 to 9, a couple hours, $1,200, starting with some micros, to fund your stop loss. Like that's the kind of way I would probably look to trade this. I've been thinking about it for a while. I haven't actually done it, right? All educational information for your information only. I'm not telling you to trade this on anything other than paper. But trying to scalp these, like, no, when you're at the bottom, like it doesn't always extend the same amount. You could look for this like just a big, reversal candle, but by the time you do that, you kind of cut into a lot of the profits. So just like getting a consistent like 5 points or 8 points or 10 points on each move, right? Just like it hits 10 points, you take profit, you wait for the next pullback, right? You make 10 points, maybe set a stop loss, you get out, you miss half the move, whatever, right? You got another 10 points. Just use that to kind of leverage in and fund a bigger NQ position. I haven't done that during Asia session. I have done it in general, like during the New York session. It absolutely works, right? As a way to sponsor your trading position. If you can't afford an NQ position, but you see that you're getting like setups like this where they're really tight stops. I mean, this isn't a big stop right here. If you could enter this trade like right here, like if you see you got this engulfing and then you come back like 20% and you're like, I want to enter there with a stop here. Like it's only 8 points, right? You only need $160 to cover that. That's a $160 loss if you're wrong. Like if they turn around after here, you're down 160. So like over here, if you're scalping these, you can easily like 10 points here, another 10, 15 points here, something like that. That's 20 points times $2. That's $40. Okay, so maybe not quite that much. But if you're doing that with like 2 or 3 micros, right? Like if you were doing that with 3 micros, that 40 is 120. Like that's almost the 160 you need here. You might say, well, I'm willing to tap into $40 of my own money and add on the 120 I just made. Boom. Now basically $40 of your own money. And then you're leveraging the 120 you just made with your 3 contracts, your 3 micros. And now you've got this position. And then you can still do another 3 micros down here, right? Make another, if you caught another 10 points here, that's another $20, right? So now the 40 that you had invested from your own capital, you just shrunk that again, right? Because you added another 20. And this position is also building value. And once you see it starting to turn around, you think you're going to have a pullback, you could potentially exit this and lock in those profits. And then when the pullback comes, you could then enter 2 contracts, right? But you never know how, maybe it just goes farther, right? So You can just wait and then, oh my gosh, I think my dog has to go out again. Uh, and then just enter a second one. Not that you necessarily be able to afford it right there, but if you did sell it, you probably could afford it because this would have been a 10x move. So this right here, like if you got in like 10 points times 20, that's $200. So now you probably could afford two positions. I'll be right back. All right, we almost reached this profit target up here. Let's see, how high did we go? We came right up to here. Let's turn VWAP back on. Right to 2 deviation bands. That's probably, yeah, I don't think we're going any higher. That's the end. Like it's coming down from there probably. Boom, 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 boom. Um, it is time to short right here. Um, it's coming down. Like the fact that they only barely broke this one is what makes me say that. Like this, they built up this liquidity here, and they went and snagged it because they want to short right now. They snagged all of this and that one. Um, right? They didn't send it all the way up here. They didn't take all of this, right? They just took the stuff they just built now and a tiny bit more. So I'd be, could they come back up higher? Maybe. Let's see how big of a pullback was this. It was 61%. Yeah, they could still go higher. They could keep on climbing and reach the overall target. Um, but they've been staying within 2 deviation bands all day long. So, I'm not super optimistic they'll go that high. They can. And right now is 3 o'clock. So if there was going to be a push up, this is the time the market would sort of like push, 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 push. So they could definitely push up to this target at 890. So the fact that like this pushed away, um, seems like it would encourage people to like push in a bearish nature. So they'll probably want to have like somewhere maybe around 330. If they do want it to go up, probably around 330, they give it a push and then let the market carry it up a little bit higher. The fact that they tapped this and just use that to drop here. Let's see now this. They harvested this long liquidity there. Not all of it. They have all this built. They have this. Got some down in here. So they're accumulating a bunch of long liquidity here. Would they bring the price back down? Okay. So let's take what we've got here and let's shift it over. Oh, what up? So yes, this was Asia session. This right here, London session. So London session manipulation begins right here. So this is an upward movement. Like we're sweeping the short side liquidity. And over here, sweeping. So like there's going to be a bearish move during the day, right? Because we swept a bunch of sell side liquidity. Sorry, short liquidity, buy side liquidity. I'm going to start using short and long just so it's a little bit more clear. So we did get that big sell off in the morning. But that was, I'm looking at this stuff, right? And I'm seeing that they're building a bunch of longs. And they were doing that a lot. They're doing that a lot, like here, right? And they were harvesting like they were taking the time to build these longs and then harvest them, right? So they weren't just sweeping this; they were sweeping it and building a bunch of longs. So I was looking for a long entry for the day. Now, obviously, there's definitely a short play to be made too, because they are harvesting all this short liquidity. I wasn't online at 8:50 a.m. I don't think, or I was just like getting up and getting my computer online and stuff like that. I was installing updates and like updated my video driver so I could stream. So I wasn't ready to trade there, but we did get this pullback down here. I was kind of thinking it would pull back into this area. I wasn't necessarily expecting it to break all of this, but I mean, it's not, I guess it's not surprising. Um, they do want, the best long position they can get, and they got a ton of long liquidity down here. So, uh, now how could I have potentially targeted that? If we look at the swing high right here, it shows a target of 127%. So we see they're taking the liquidity, right? We got this one right here. We got this high. They actually came back, revisited the high. Um, So yeah, I should have been looking there. I wasn't. I was focused on, waiting for it to fall and getting the long. That was my fault. Um, I didn't look at that. I saw the long building and I was like, well, I'll just wait for it to fall and then I'll get in on the long. If I would have seen this, uh, that would have been a lot better. Um, Wait, hold up. No, that's 3 a.m. No, this isn't 3 a.m. Is it? That is. What time is this? Okay, no, yeah. So over here. So they did hit that already. So I wouldn't necessarily be expecting them to hit that again. So over here, that's the low. And then this is the high. Still, okay, there we go. The high at 848, 840, 847. Again, 127%. Like it's textbook. I wasn't looking at that. Um, I was just looking at the fact that they were building out all these long positions and then coming down and like sweeping them like this, like they swept those longs. And I didn't see a lot of longs stacked up. So I was like, well, they built a long position, right? Like this right here. I guess they could target some of this and this, but um, like long building here, come down, long building right here, come down. I thought they would come in like they would take these longs, potentially these ones. I wasn't thinking they'd take these. I was thinking these were kind of like the base of their setup. Um, but they actually did come back for them, as we saw. But 127% right there, it makes sense why they came this low. I didn't project this out, which is why I had my stops, um, like down below these lows, and then they got hit, right? On paper trading, right? I didn't have the time to do this full analysis before I started trading, which is why I only did it on paper trades. I wasn't going to enter that kind of trade on my real account because I knew I didn't. I knew I didn't put the time in to account for the full setups because I overslept this morning. It was I'll be right back. I'm going to move this over so we can see how this stuff plays out. I'll be right back. Alrighty, I'm back. Oh, okay. So many fibs. Nope, nope. So what have we got? So this does give a perfect profit target. Right, it hit right between 127 and 141, and I'm absolutely positive that that lines up with some liquidity level. What I tell you, there it is. And it would not have been hard to spot that. I have liquidity hidden right now, but if we come over here and we show our liquidity, like it's literally right there. You know. So if I would have forecast this, uh, if I would have actually done this and said, okay, where would the bearish move go to? I was just looking at this, um, and I was like, probably come around here or something. And I didn't forecast this out, and I was doing a bunch of other things trying to get the stream ready. I was like, I'll set my stop loss below the low, right? Um, and I wasn't actually forecasting out like a bearish move into liquidity, like to add to their position. Which makes sense because right here, this is all pre-market. And then like we can see once US came online at 7 for like they didn't do a lot of liquidity building. Like they were sweeping the short side, right? They didn't leverage the 7 a.m. American pre-market traders. They didn't leverage them into building liquidity like they did back here. Instead, they leveraged them for the push into the short position, um, that lets them target the long liquidity that they want. And I wasn't, I had so much on my mind. I wasn't looking at that. Perfect, textbook trading day though, in terms of the setups. Um, Everything aligns. That would have been an excellent trade opportunity, man. Uh, right there. Like now, there was also I don't have it drawn here. Um, let's go back and draw this in hindsight. What do we have now? This comes back here. Now we need some new liquidity. Boom. All right, so we've got liquidity here. This would come down to probably about there. And then this one, I put this one probably around here. Around there. That's probably how I draw that one right there. This area here, I would call this a low liquidity area. Just because it just moved quickly. Like this one here had, I don't know, it was a little bit more consolidation. And then this candle got revisited. This, it was just like 1, 2, 3. There's a little bit of consolidation here. But like in general, this whole area is like right to here. I'd say it's low liquidity, as in the price can move quicker through it. Um, Now down here you've got this like stacked on top of these, and like, oh no, this right here you got like this level and that. Like this is an area. This would be top of something else, right? So this one would be sort of like that. So I draw that. Okay, so let's bring this over. Got that one. This one. Now after this happens, I would probably adjust it. Um, if they didn't rebuild it, but they did rebuild liquidity there. Like it's very similar. Actually, it's a little bit cleaner. So I would just leave this because there's still liquidity here. If they had wiped out that liquidity and there was just like a big candle like this away, I would probably bring it up. Because as it extends out, I don't want it to look like liquidity starts lower than it does. All right, let's see where these go. Oh, this one has not been hit yet? Oh, no, it got hit right there. Okay. Right there, it got hit. And then they tapped into that one. Okay. Now we got to build a new one from here. So this one, I would say, like, we already have that cloud and there's liquidity potentially sitting up here. So we'll just say that that's part of that cloud. So I'll do this as this right here. Right there, that range. There's that liquidity. And this, I'll change it to liquidity cloud. Well, no, does it get hit? I don't even know if it gets hit. Oh, it's getting hit right now. Okie dokie. Let's do another one of these. This whole area, I would say, is kind of low liquidity. It's because it was like fast moving. Like it just moved really fast through here. So we want to come back, say that all of this, say that's liquidity cloud low. Right there. So you see, like when it moves up here, like the wicks, when they come in here, they come right back down, like fast movement. Now these wicks cleared the liquidity, like then they kind of built up the price. Once it came back up here again, even these, like this wick came and cleared this liquidity. This came back up, nice and quick. The same thing that made this low liquidity. This does the same thing. It's still low liquidity. Comes right back down. So now we can take this and we could extend it out again to right here to right here. And we could say that this is a low liquidity area. And we could say that this right here is a low liquidity area. This part right here is a liquidity cloud. No, whoops, delete. So from here to here, we actually have liquidity. What time was that? It was around noon. Not bad. So they came, they tapped into that, got a little bit of this. I don't actually like to overlap it on the candles because I want to be able to see where the wicks are. So if like there's a candle wick there, I actually bring it over a little bit so I can actually see the candle wick. That's good. This comes up, taps into this. There we go. We came right through it. We tapped into the next one. Looking good. All right, here we go. We're almost to our profit target. Wait, no, we're not. Well, we got this profit target from earlier that we projected from something in the day. This would be like some sort of intermediate profit target. I don't even remember. We got like 2 overlapping clouds here. What's up with that? Oh, this one and then this one. Okay. Whoa, 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 whoa. We'll bring that up since we have the other cloud. I was looking at those levels, but then these overrode it. They wiped it and built their own. So right here, we'll do this as the other level. There we go. So that's how I'm viewing that. This right here. Now minus those wicks, the top of this candle. If I were to unlock the targets, top of that candle right there, then you've got like a small wick there. I think that was a fib level. If we drag it to like the lowest, or the not necessarily the extreme, right? Try to find like the midpoint of this, like the in this cloud, right? Where's the top of a candle that's close to the middle of the cloud, right? Or the upper mid range of this. So you can put it like here or here, right? Anywhere in that range. Um, but you need to put it like basically the top of a candle or the top of a wick. So if they just want to tap the bare minimum, they'll kind of basically just get the bottom of the candle. Actually, this isn't even right. This should come up to like there, basically the top of the wick, like that. Um, okay. Yeah, so they haven't broken the candle yet. So they'll come back up here. They'll tap. They'll probably go all the way through the cloud. Um, after all, they're aiming for this one up here, anyways. So let's get our push. Or do we get a pullback first? Okay, there we go. We tapped that one. So they got that first candle. And now the other candles, like there's 3 candles stacked, like 1, 2, 3, right there. Like they're like 1, 2, and then 3, the candle wicks up to the top. Uh, what would a pullback on this be? 38% would be right down to about here. I'm just going to get this green line and I'm going to drag it down here. And I need a pullback target. So here's what I'm going to do. I'm going to get a ray tool. I've got a ray around here somewhere. Right here's a ray. Okay. And I'm going to drag that here. All right. And now, oh, let's put the fib back on there. All right, we're going up again. Nice. Oh, they pulled back to 61%. So this swing here, they're going to go right up. Boom. If they do want to go to the next pool, like the next target, let's see, what time is it right now? 3:30. Like they could push. They got time if they want. If they want, they could push it. Um, a pullback here would be to this level. Wait, yeah. Once they go up, they could pull back to like this level, or 38% if they want a more shallow one. Let's see. So if this is the pullback level, let's see if either of these would give them that thing they're looking for. No, neither of those align with that other profit target. This might be all we get for the day up here. I mean, they could work their way up to it still. I mean, in this low liquidity area, they'll probably be able to push the price through it real quick. Um, Now, what would a bigger pullback look like from the whole move? Oh, what a pullback. I'm saying like 61%. It's not. It's 38. I had the thing backwards. It's right here. Pullback. So like this one here from this swing low. Oh no, that is almost 61%. So this one from this swing low. So this one is 61% pullback. So right now they're at 30, 38. If they come down to 61, they're looking at this level. So they haven't been necessarily hitting it exactly. So if you give them a little bit of buffer, say maybe like 865, like around here, maybe 864, 865. They got the 38. All right. So now an extension from there. They pulled back right to the target level. Again, and a lot of people think that is how resistance becomes support or support becomes resistance. Now that wasn't actually a resistance level in and of itself. That was just where I had marked. Kind of interesting, though. The level I marked was the exact level that they bounced off of. Maybe I just got lucky. All right. Oh no, good. Okay, so that one did bounce off of it, but now they did come down and hit the was it the 61? I moved it, didn't I? Yeah, there you go. They're coming right down to the oh, it's backwards again. I flipped it for the other thing. Okay. There we go. We're coming right down to the 61. Nice. Yeah, this is one right here. Said if they don't come all the way to it, they might come here. That candle did. But there we go. So we got the pullback. And we're almost at the target. Now the thing is, this right here, there's not a lot here, right? This is a low liquidity area. This, like, there was liquidity stacked all the way along up here, right? There was like cloud after cloud. This, there's a gap. So I mean, maybe they don't push through it, but I think they will. Um, but this will, if they do, like if they actually do bounce off this could be a really quick move, right? It could just be like a boom, 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 and they hit, and then it comes down, right? Like whatever happens here, I think it's going to happen pretty fast. I'm expecting a pretty fast move here. All right, so we got this. We hit this one. Um, So now this move, I mean, we don't have much time left for it before the day ends. So obviously it's going to be quick. But, I mean, I think it's going to happen within like 5 or 10 minutes, is what I think. Now this right here, the projection of this move. The 161% does kind of line up there. Now if they want it to actually line up, they would bring this down a little bit more and maybe pull back to here. They don't really need to. They can always send a wick through, but this level right here, if they used it, what kind of pullback would that be? That'd be like a 78%. It would be. It would be a 78% pullback. So it's possible they do a 78% pullback. If they do, that would compute the next leg to have an extended, like a very extended reach target of our exact profit target. So if this level gets hit, like that even tells me even more that the next move is going to be like an explosive move to the profit target. And it would allow them to break this VWAP band, which would encourage a lot of people to click sell. Yeah, they don't really necessarily want to add to their long position right now. They want to leverage it. Well, no, people clicking sell, stacking up a lot of shorts here, be good. I mean, they're harvesting shorts, so that would be beneficial for them. So if they do that, and then they can push it down to here, make people think it's going to go bearish for a moment, like a little manipulative move, and then push the price up. It's because of this VWAP band right here. Oh, right there. Okay, let's see. Oh, is this the end or wow? Maybe they want it to be 127% target. Shoot. Look at that. Now it's up to 141. 127 would be there. Oh, if they bring it back down to the one deviation band, they get 127% target. They're coming all the way for it. They're going to bounce off one deviation. Or 141 isn't that bad. And it does line up with this liquidity right there. I think that might be all they get. It's just this. They might stop at that. That would make sense. It puts it right in the middle there. But I mean, one standard deviation is right there. So why not just go for it? And there's liquidity along the way. Oh, okay. Maybe that's where they go. That brings it right in reach. Wow. Look at that. It's not even extended reach now. It's just a 127. That's first profit target level. Just barely above it. And now they can actually swipe this whole cloud and barely break 141. They could get all of this right here. And actually that they send a wick over it, and then they could tap into this little bit that's just above it. So like right there, I'll just make the cloud a little bigger to encompass that. Right there. Goes right up to the edge of that wick. Okay. So here we go. Now they did come right to the top of this cloud and it's coming down. So I mean, they might not do another push. It is at the end of the day. That might be all there is to it. But I mean, what target was that? We didn't hit our 127. Oh, no, that was, no. Yep. That was a 127% target for that one. This was the extended target. That was from like a bigger, where was that other one from? Oh, it was 127 of that. We had another swing here. I didn't update it. Yeah, no, this should have been moved down. This goes here, and then this one goes here. Yeah, no, we're done. We're done. There it is. Cool. Well, that's it for the day. What's that green line? The white line? It says 127%. Is there like, it says 127, but I don't see a Fibonacci anywhere. Oh. Oh, down there. Zoom down far. Yeah, that one. Dang, I messed up my fib. So this was this, oh wait, this was yesterday? No, that's today. That's, what time was that? Oh, that was at noon. Okay, yeah. Yeah, it's that last swing. Yeah, I didn't update it. Okay. Oh, my bad. Yeah, I was probably looking at this. Or no, it was this one, right? Yeah, that one. This. Even this one shows that. Man, how did I make that? I'm gonna have to go back and watch this, see how I did that. I know why I had that one. I never moved it down. It's unfortunate. That would have been good. Now they might push up to that second profit target still, but this was the ideal exit right there. Man, I didn't realize it lined up with fib. I mean, I wasn't really, um, I wasn't in any trades still, but oh, what did I just do? Delete. Oh, yeah, I'm in Sierra charting. Yeah, I don't have any trades in Sierra either right now. So right here, if they do push up to that second target, like I said, it'll be a very quick move. Um, I don't know if they will, but they might just give us a pullback and then continue on to the downside. So a 61% pullback would be, let's get rid of some of these. 61%, yeah, right there. I know they're going. So this is what I said. They're going to push straight through to it. So it's still in play. I just didn't realize how important this one was since that was a 127. Let's see. Nope. We'll see. The way this expanded up here so hard makes me think that they are going to push up there, not just a pullback. Pullbacks are like this, right? They're kind of staggered. I don't know. We'll see. But it's also the two deviations and it's power hour, so things are just kind of exaggerated right now. A lot of exaggerated moves. Let's see if they push up or not. Go to target 2. just kind of curious. Oh, I meant to delete that. Oh, no, that was the pullback level. Pullback target. Let's change that. I will be right back. Oh, there we go. Yes, sir. Oh, come on. You can do it. You can hit it. TP, QQQ. That's when we were supposed to exit our short our oh my gosh, that's when we're this is the moment. I exited it already, man. Let's see. Let's see how that would have turned out. Holy crap. This was our trade thing right here. Let's put the order marks on. Settings. Trading execution marks. Bro, look at that. Ah, I exited down here. It ended up playing out after all. Dang. It was such a good. Oh, man. I should have held it, man. I did close it at a slight win. But when this pulled back right here and I closed it, like I'm just worried about that theta decay. I was like, well, what if we don't hit, Right here, entered at 93. I closed it at like 95. Now it's at 319. I mean, it was a good trade. I called the trade pretty good. I didn't execute on it when I closed it. Yeah. Because I paid like almost $1 for it or 100. Um, I saw it dipping. I was like, no, actually, I think I closed it for like a $4 loss. Right. Um, yeah, no, I closed it at a loss actually. So I bought it here and then I sold it down here. See, I know I actually lost $5 on it. Could have made $200, right? Bought it at 100. Like I think it was like 94 when I bought it. Now 314. Dang. Well, there you go, man. How many profit targets did I call today? Um, and got hit. Dang that. All right, all right. Well, there it is. Can you link Moomoo to TradingView? Because I do have Moomoo. What if I come over here? I turn off. Let's see. Log out of paper trading. They do have Moomoo. Could I actually log into Moomoo and like execute these on Moomoo? That'd be cool. I don't think you can be logged into multiple things at the same time. Because I use AMP, and I don't think I have any money left in Weevil. Yeah, I could actually execute my Moomoo trades directly on here. That'd be pretty sick. If Moomoo supports options trading through TradingView. No, but I can't. I can't enter trades on Moomoo in the last 30 minutes of the day, so I couldn't have. Well, I would have entered it here, but what they do is they'll just close you out randomly. Like in the last 30 minutes of the day, they'll just liquidate your position. Now, technically, in this case, it would have been okay, um, because they would have liquidated me in the money. Um, but I wouldn't have been able. Like they might have liquidated me here, right, at 3:15, or maybe they would have liquidated me here at 3:41, like when it was at like the worst, not the worst time to liquidate me, but like instead of here, like you don't know. So yeah, at least in because I have a cash account, so on cash accounts they'll auto liquidate you. Um, I don't have a margin account because with a margin account you need 25 grand to because of PDT limitations, regulations. Now up here, this other at the top of the cloud, they did hit the top of that cloud, and they're coming up higher and higher. Oh my gosh, where was that other profit target at? I think it was just at the top of the cloud before, or this one, but up here, like there is a profit target up here, like for like the daily target. Um, like if we project it out like the day, like from yesterday's high down to the pre-market or down to here. No, it was like today's lows from the pre-market high, I think gave us a profit target of, yeah, that's what it was. So I had a bunch of profit targets on here earlier, but like I deleted them because they were kind of clustered and cluttery. But yeah, we got a bunch of these. So like this one here, 141%, right there. We just hit it. That was the extended target. Bro, we hit everything today. I was right about the sentiment for the day being bullish. I didn't trade the open well because I didn't project out my Fibonacci levels for the pullback, or when you do when you know you're going bullish but you have to drop first. um you can either look for a pullback or a bearish move into liquidity, um as the pullback. So the pullback can be more than just, when I say pullback, I'm talking like less than 100%. So you know what? I'm actually going to update this. So right here, this right here, I'm going to hide my fib levels real quick. Fib times. This one here, I'm going to drag that under fib time. Okay. So what I want to do is update my Fibonacci to include some negatives so I don't have to keep on reversing this, right? So like this right here, like if I'm looking for a pullback, a lot of times I'll say, a pullback to the 61, right? That's actually 32% pullback. Like if you flip it around, 61.8 minus the other whatever, 31 point or 32 point whatever, 38.2, 61.8. You add them together, you get 100%. So they're just the opposite of each other from the other end. So what I want to do is basically the equivalent of what would a 127% move of this be, right? It would be right here. This is it. Okay. That's not what I want to see. I want to see what level, like negative. I'm guessing that's like negative 27.2. Let's see. I mean, that can't be right, right? Is it? What if I do that? Right here, I say like negative 0.272. It is. Okay. So that's a negative pullback. So I'm going to push escape on this, cancel. All right, I'm going to edit this again. I'm going to, let's see, where can I throw these things? I don't like how this stuff is like all mixed up here. I'm going to kind of clean this up. All right, this color is that color. So let's come over here and say that this color is that color, right? Yeah. And then 1.272, 1.272. Nice. Okay. Um, Zero, 3, 2, 5, 6, 8, 7, 6, 1. That's the darkest green, and that's the lightest second light. Second light. And this one is the darkest green. All right. 1618. So I'm just gonna flip those around there. All right. This actually, nope, nope, nope. So this one here. Okay, let's do this. We got 2.618. And none of this is really necessary. I'm just kind of, I don't know, being anal. There we go. Boom. Now that one isn't needed. Now I can do this 1.414. I can move that up here. And then that is 1, 2, 3, the fourth green. 1, 2, 3, the fourth green. Okay. 1, 2, 1, 4, 1, 6. So this one here would be 2. 2. So I didn't want to shift all of these. That's why I left that. Maybe at some point I'll put something. Wait, no, we have a 0.214. Ah, perfect. Yeah. 0.214. Beautiful. And then that's the second blue. Second blue. Love it. Okay. Now we've got this one here. Can be 2.618. 1.272. Wait, no, 1.272. We have that up here. Yeah, so this one here can be 2.618, and that's the second darkest teal. Second darkest teal. Yep, there we go. Now this one can be 2. And now this one can be unchecked. That one can be unchecked. 2.272 though, we don't have that one anywhere. I can keep that one. No, I don't use 2.272. I use 2.618 for extended. Whatchamacallits. 2 was what color though? It was this green. The teal, plain teal. Yeah. Okay. All right. And now down here, 4.7, 4.618. Wow. I don't know how to use those. So I will reuse those as my negatives. Right? So I'm going to make these negative 0.2. No. Yeah. 272. and then negative 0.414. Yeah, 414. There it is, right here. Okay, now these are going to be red because they're negative. So this one will be like a light red for the first target and the second target. Now, you know what? Let's do the first target as the darker and the second target as the lighter. Just like first target's more likely to get hit, second target's less likely to get hit. You know, that sort of thing. Generally, like I do, well, no, on the other ones, I do the darker ones are farther out to represent more money. You know, like now these ones here, I'll stick with the same thing. We'll do the same thing. It gets darker the farther out it goes. We'll do 70. I'll do like maybe 80. No, what if we did 70? Can you tell the difference between the two of them? Okay. Oh, that should be negative 0.414. There we go. All right, now I want to save this. Template, save as fib normal with, now let's call fib normal. That's right, we'll override fib normal. Save. Yes. Okay. And now we could do save as fib pause only. Fib normal only positive. Let's call it positive. A positive, we could just do a plus. Fib normal plus. But you'd think that plus means it has more, but I just mean it's the positive numbers. All right, so now I can come over here. I can turn these off. And now do save as fib normal plus. Yes. Okay. And then I can do load fib normal. And I can actually save that as fib normal minus, because it includes the negatives. I'll do plus minus. And now I can delete fib normal. And now I can actually fib normal plus, or fib normal plus minus. Sweet. Love it. Okay. Yeah, now I can do these things and I don't have to flip it around to do a negative. So my pullbacks, now I can actually aim. Oh man, that's going to be so much better. So I'm trying to get a pullback here. Say, okay, pullback might come to here, but if it goes more, like I can put these as the targets on the other end for like a pullback into liquidity. So if I start seeing that a pullback lines up with a liquidity zone, it's like, bro, just tap into that liquidity zone and look for that. Oh man, I'm gonna be stacked. I'm ready for tomorrow, bro. I'm ready for tomorrow. Yeah, man, today was good. Everything kind of went more or less how I expected it to. Made $3 grand paper trading. Made $32 regular trading. Bad trade, $56. Got my stop loss hit. And then another one with 90. Came out with a net of 34. So not too bad. Now that trade that actually worked out, the 34, I actually had I didn't do that with NQ. I did that with micros, obviously, because it was such a small amount of money. But I entered it late, right? I forgot to enter it when I entered my other ones, the ones that made me $3 grand over here. I forgot to do them, so I got in late. and I had my stop loss, back. It was farther away than I could afford to do with full size on my live account. So that's why I just did micros, and yeah. Otherwise, I probably would have done a regular E-mini contract. All right. So before I go, I'm going to map out some liquidity for the next day. We'll go ahead and get rid of uh, these projections, these forecasts. Don't need the forecasts anymore. Although, you know what? It's not bad to have them on there. Kind of nice to, look back and be like, yeah, I did that. All right, I'm just going to hide those for now. Not super important. We don't really need VWAP anymore. Go ahead and remove that completely. This right here. Let's go ahead and change this to liquidity pool, no extension. You can watch me prep for the next day now, just so I don't have to do this early in the morning tomorrow. I will do a stream tomorrow morning. And I'll probably do one when I get up. I'm thinking I'm gonna go to the gym tonight, and I'm gonna come home and grab something to eat, and I'll probably go to bed early. I'm thinking I might go to bed around 8 or 9 tonight. So then let's see, 10, 11, 12, 1, 2, 3, 4. I can get about 6 hours of sleep. If I can fall asleep quickly, I can get a solid 6 hours of sleep and wake up around 3:30 in the morning. If I wake up around 3 in the morning, I'll probably do a live stream. I'll do a midnight, not a midnight, like at midnight, but in the middle of the night live stream. I guess you can call it an early morning live stream. Right in the sort of near the beginning of London session, and we'll just kind of look and see how that sets up. We'll map out any liquidity, adjust anything that's already been hit, and we'll just kind of walk through that stuff. Let's write down here. We've got liquidity. Like this is the densest right here, but it does come up to here. It's not much of a gap to go from here to here. So I'll map this. This right here is kind of a gap, so I'm gonna not do that. I'm not gonna extend this to one big thing. This is a bottom, and like this is close enough to it for me to include it. Now I don't actually want to do that. I want, because that makes a separate item. So like I said earlier, if you copy it, it stays inside the liquidity bucket. So that's pretty sick. I love it. So I'll just extend this up to here, and then we'll turn on. I can actually just right click and say liquidity pool. Now it extends out to the right. Heck yeah. Let's do this, drag it up. Now over here, liquidity comes up to about there is where we get, consistent liquidity, and down to here. Now, a lot of people just mark quote unquote key levels, but sometimes you'll see price only like taps a pool, and it doesn't need everything that's in it. So I like using pools, right? I don't do key levels, right? For me, the key level is the edge of the pool, right? Like there's two key levels for me, right? The first key level is where I see like the consistent liquidity forming. And then the other key level, like on a pool, the key level is the bottom. And then on a cloud, the key level is the top, right? That's where the first set of liquidity is. Just when you see like a wick just comes into the top of a cloud and comes down like this, it means they grabbed the first bit of liquidity, right? Now over here, like the liquidity that sits here on a cloud, like at the beginning, it's like here you have the liquidity from all of this kind of stacked up here. People that move their stops back to the last swing, we'll put it there. Sometimes it's a swing. Here it's not a swing, so it's not a big deal. Actually, I wonder if I should designate that now that I think about it. Like this right here, if the bottom of the pool is a key level, like in the sense like the bottom of this pool represents a swing high, Like, what if I denoted that somehow? Like I did, like, swing high, SH. Or like, liquidity pool plus. Liquidity pool plus. Liquidity cloud plus. I'll let you know, like, that the first level of it is more significant than just like a group of liquidity that was built up. Like right here, this one, you see how like it comes down and like it begins an expansion away there, almost like there's a swing area. This one could be called liquidity pool plus. So on here, when the price drops down, they could potentially just send a wick into like just the beginning of it to tap that. Versus here, they probably wouldn't do that, most likely. If they did, maybe they'd come down to here, but they'd likely come all the way to the bottom because this is the most interesting level on this pool, right? So that's a thought. That's actually kind of cool. We just discovered this together. Let's see how that affects us moving forward. Let's see, like some of these other ones. I can get rid of this. Targets. We'll turn off our targets for now. So like right here, like this is also like the beginning of a swing, right? Like this one, not so much. This one. I don't know. This one's kind of small. It's more for like the big pools. Like this one has like 1, 2, 3 swings in it, so I would call this a liquidity cloud plus. It lets you know that there's multiple swings in the cloud, but they're like kind of close together. But you can think of, well, when you see this, you know this cloud contains multiple levels to it, so it can be tapped in increments. You're less likely to see the price go all the way through it, because they built it in stages, and they do that on purpose because they want to have the option of harvesting part of it at a time. So you might see a wick just come up to here and then come down. Or it might come up to here and then come down. Whoops. Right? So yeah, I'm gonna call those liquidity plus from now on. That's cool. Let's see how this like did this one actually do that? I don't even know if we hit that cloud today. No, we didn't hit it. This cloud right here, like we tapped into it earlier and then rejected. Let's see if this would have been a liquidity cloud. It was. It was. Like they're micro swings, right? But it's not like this. Like you see this, how it's just like boom, 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 down, down, down. Here you have like you have a swing, you have a swing, you have a swing, and this actually encompasses 1, 2, 3 swings. This is a liquidity cloud plus. Ha, dude, that's sick. I can't believe. Oh man, this is awesome. Let you know, like if you start to see a rejection right in a liquidity cloud plus, like don't even expect it to go all the way through right away. That's cool. Like this one here, this didn't just like wick into it and tap it. Like this actually made it move up. Because it's just stacked liquidity, so they just took what they needed there. And this is like pre-market anyway, so nice. This one they took most of it. They left the very top. Yeah, that's cool. I like that. Okay. Okay. All right, what do we got here? So we've got some liquidity sitting here. That's a nice little flat top there. A lot of times when you see a flat top like that, it makes me think of Head and Shoulders. Which kind of makes me think that, like we'll get another move up like here. Boom. Will we get a pullback to here? I don't know. Like this flat right up here. Big old flatness. I'm curious if we'll get like a something like that. That'd be interesting. Um, just a whole lot of like this. Wow. All right. A lot of like low resistance areas here, or like low liquidity, like high speed liquidity areas, whatever you want to call it. All right. So we got this, and then like right above this is this level, and there's liquidity right here too. So I'm going to drag this up here, and because this encompasses 1, 2, 3 swings, right? This is a gap. I'm not going to put that there. Um, but that like from this level to this level, not a big deal. I could go up here, but then I'd say, well, I could go up here, and then I'd say, well, now that's not a big gap, right? So I'm not going to do that. The swings are kind of what they target. I'll come to there, and then I'll call this liquidity pool plus. It just lets you know that this pool has multiple swings in it clustered together at close increments. It's a lot easier to do this than just put in like a bunch of small distinct pools stacked next to each other. It just kind of gets messy on the charts. And if you can't tell, the charts kind of look messy already. We don't need to messify it any more than it already is, you know. Um, and that's totally a real word, messify. All right, there we go. This, drag it right there. Boom, boom. No, that is not a liquidity pool plus. That is just a liquidity pool. There we go. I probably didn't need to do that one because it'll probably get hit pretty quick, but you know, whatever. Now these ones here can get fixed. This one comes to there. This one comes to here. And then we'll change both of those from liquidity cloud to liquidity cloud no extension. All right, now we can see where they finish. And you know, eventually, what I'd like to do is get all the old liquidity like this, and that would be a tedious task. Basically identify and have two different liquidity areas, like buckets, so I can hide and show old liquidity and like active liquidity. Um, that's It doesn't sound like fun though. It doesn't sound like fun. I don't want to do it. I want it done. I just don't want to do it. You know. Um. So yeah, I'd have to. Can I? Let me try something. If I come over here and I make a new group and I call it, did that just move it into that group? It did, didn't it? Rename liquidity. I do that all the time. Liquidity. Like my fingers want to type liquidity all the time, not liquidity. So this is going to be renamed liquidity old, right? Or spent. Spent liquidity. They already spent it. They used it up. Can I do this? Nope. Can I control click on liquidity? That's old. And then after I control click on it, can I move it in here with a right click and say paste? No. And when I right clicked it, unselected all of it. Lovely. Now I could do this, right? Let's see. Click, 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 click. Now I could drag that. Liquidity spent. Now I could hide liquidity spent. Okay. Oh yeah, that is tedious. That way I can only look at I can look at this for historical purposes if I want, but then I could also only look at the stuff that actually matters to me. And when I show people like a chart, um, they don't necessarily have to see all the old stuff. Especially like when you zoom out and you're looking at an old chart, liquidity spent. You can go look at it if you want. Oh yeah, nice. That's looking nice. We got this one. We got this one. Let's go to a 30-minute chart. Okay, let's start back here. 1, 2, 3, 2, 1. It's like sometimes you can click in the middle of it, sometimes you can't. It's kind of weird. Like right here, I can click. Oh, you can click on the words. If it doesn't have words, if the words aren't visible, you got to click on the line. And if you accidentally like click where the handles are, you mess it up. Okay, so all that can go in liquidity spent. Haha, nice. All right. Oh, what's this? That was probably something that was accidentally copied from somewhere. Get rid of that one. All right, now we've got rid of most of it. We just got a little bit left here and there. Yeah, this wasn't as tedious as I thought. Ah. Okay, liquidity spent. Boom. Nope. Liquidity spent. Okay, there we go. Hide. Nice. Nice. All right, here we go. We got a little bit more. Got a little tiny slice hidden here. I'll have to do that one again. Boom, 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 boom. I think that's all of it. That's all the spent liquidity. Right? Oh, why do we have all these extra like double layers? Oh, it was like overlaid, whatever. So this one can actually come down, I guess. I didn't realize those overlapped when I made them. I probably made them from like left to right instead of right to left. Or I made them probably from right to left instead of left to right. This one right here. This one right here can come down. I'll put this one like this. And this one will come up like that. this one, I think I'd do this one down here actually, and this one can be here. And this would be a liquidity pool plus. Oh, wait. I put numbers on that because it was. Dang. So let's control Z a few times. How big was this and where was it from? That was from all this. All this was 120. And then I did Y. There we go. And now we've got another liquidity area here. It's like a separate area. And then this one comes down. That one comes down to like there. And then that. Let me see. Yeah, and then that one too. Yeah, that one there. I don't know if that's actually 120. This was, including that one, I think it was. I'm just going to call this liquidity pool. Now, if you want to see how I come up with the number, I guess I could do that again real quick just to show you. We'll update this. So the easiest way to do it. Now you have to, let's see, you have to go to the fixed range volume profile. It's in this area, fixed range volume profile right here. It's in the same place you get your long and short position projections. And then down here at the bottom, you can see how many buys and sells took place. So this is a buy area, so I'd put 6.8 thousand. Now, typically I only do it on the candles that have exposed wicks. So I don't, I do a more tedious version of this. So I would do like this one, and this one have exposed wicks. So I'd say that's basically 3,000 right there. This one has an exposed wick. This one, and this one. So basically I'm not counting whatever happened right here. So basically that's 3,000, and then whatever this is, 3,000. So it's still 6,000. Okay. So this one here would be 6,000. This would be 6K. Liquidity pool 6K. This one here, all of these have exposed wicks. So I would do the same thing again for all of, whoops, wrong tool. Right here. And we got 57,000 buys took place on those exposed wicks. Looking down, 57K. Now I know that this pool has a higher draw than this one. So if they're trying to fill an order, the odds of them stopping at this pool, less likely than this one. Because there's a gap, I make them two pools. Otherwise, I guess I could make them one pool and call it liquidity pool plus 60 something thousand, but I mean, whatever. I like seeing the distinct areas. Like, see, this one dips in right here and it just grabs like a little bit of it, right? Like it snagged all of this. It's like this area right here from this exposed wick. Like all of these wicks are basically exposed all the way to here. It's like, now this, if I wanted, after this, if I wanted to do that, like right here, those are like kind of a flat level. This would be about 8,000, right? 7.92. So basically this area would be, what I would do is I would treat this like, I would do it like this. Now what, I'm trying to remember the area that I just mapped out with the profile. I think it was this, right? Yeah. So I want to come down to the bottom of this candle, this way. So I would do that, and then I'd say, no. This is a low liquidity area. Technically, I guess this is too. Um, but we'll say liquidity pool low. And I do that just based on the fact that price moves through it quickly. And then we'll put 8K, 8K. That doesn't mean there's 8,000 stops. But, you know, at one time there potentially was. Now, how many remain? Who knows? And then this can go back to here, right? So we can see right here, like in our minds, we just say, if we just assume there's 8,000 stops, right? Technically, it's probably some percentage of that. But 8,000 and they tapped into this. So how much do they tap into? A little over 8,000, right? Plus whatever was back here, who knows? But that's kind of what I do with the numbers, just so I could see relative to this, like how much volume was transacted at these different pools. Like this one here, because these are hidden here, you could kind of assume that they put their stuff here, but this probably did wick out some people. Some people probably got their stops hit by this. So I don't count any of the transactions that happened there. So what I do is I make the screen really big, zoom in like that, and then I'll put the volume tool just on this one candle. And I'll see this one candle alone has 30,000 buyers, right? And now I can say, okay, well, what about this candle over here? This candle has 26,000 buyers. So we have 56,000. Now, technically, I could just, well, if I didn't have this plus, stupid plus is in the way. There we go. 56K, right? Nope. 56K right there. Right now, how much took place over here? I don't know, but we could take a look real quick. There's mostly selling, but there is some buying. So 18,000. If we were just to go from here to here, it doesn't account for, I'm assuming that everyone here got stopped out. That's probably not realistic. That's not true. But I'm going to assume that they did. I'm going to assume this stopped out everyone on these candles. Truthfully, some of them moved their stops down here. And some of the people on here just exited their position. So this doesn't mean there's this many stops. That's how many orders took place at the exposed wicks. So that's how I generate my numbers. So whenever you see a chart of mine and it has those numbers on it, that's what the numbers represent. Now these particular liquidities, I want to make sure they exist in liquidity pool expired or whatever, spent. Liquidity spent. There we go. Now let's make sure they're all actually spent. Maybe they're not spent. They're not. Control Z, Control Z. Nope, Control Y. Oh, where are they? Okay, there it is. We can expand that out. That way you just have like bigger handles, easier to grab onto later when we're trying to size these out. We know it didn't get hit there, so we could drag that past there. Okay, cool. So now we've got our liquidity mapped out. We've got all the spent liquidity hidden. Nope. Yeah, all the spent liquidity is hidden. Nope. Almost all of it. Got a little bit right here. I mean, I'm just gonna delete those. They're so small. I mean, I did map them out. I'll keep them. I'm just gonna keep the top one. I don't know why. Oh, wait. Yeah, we're on a 30-minute time frame. If I go down to 1 minute, those actually were something valid. I think I was looking at in the pre-market session that day. Yeah, no, I actually was using these. They're valid. They're valid. I'll leave them. They look so small and stupid at the 30-minute time frame, but they were actually valuable here. You can see as soon as it tapped into this, it fell, right? So that was a good one. Now where are these? There they are. Now I'm going to rename this to liquidity active. And then we've got liquidity spent. And then we've got our targets. Now we go to spent liquidity, hide that. Nice. Save our map. Now we can come back, like, say, to a 1-hour chart. And now we can see all the existing liquidity only. Nice. We can go to 1 day. Ah, we do have more spent liquidity. It's okay. And there's a lot of overlap here too, man. I'm like, this low resistance stuff is all over the place. Why do I have like 2 sets of low resistance here and then there's another one here? Ridiculous. Okay. Liquidity active. Let's go put that under liquidity spent. Yeah, I thought I didn't get a chance to click on that one. There was another one there that was kind of overlapped. Let's take a look here. This one must have been drawn at like a lower time frame. So what I'm going to do is I'm going to get this one. I'm going to drag it down to here, just so I kind of know that it comes back down to there. I'll delete this one, then I'll call this one liquidity pool plus. Because this is an hourly chart. No, this is daily chart. 1, 2, 3, 4, like 4 different days, and then some stuff that happened there another day. But there's multiple peaks there throughout the days. Harvested multiple days of liquid. This is 1 day. Oh, that was the crush of. Okay. Yeah. Okay. I got overlap here. If I were to drop this down to 30 minutes or 1 hour or 4 hours. Let's look at a 4-hour chart. What do we got here? Why is it like this? I don't know. I bet if I looked at 5 minutes, I'd understand why that was there, but it comes all the way back to here. This needs to go over here and then up here to this, I feel like. And this one should probably come down to here. Okay. At least on this time frame. And then these ones are all basically like liquidity pool plus. So they cover multiple days. So we got like these swing lows for multiple days. So it's easy, like if they could just tap like right here and here to just get the first couple days, and they come all the way down here for another day. This one is like super ultra. You know, it's like got 1, 2, 3, 4 days in it, like of different untap, like 1, 2, yeah, 3, 4, 5 days. Liquidity pool plus. Ultra liquidity pool plus. Or it'd be like Pro Max, right? Okay. When was this? October 2023. Oh, we're not gonna. Oh my gosh, I'm not gonna say we're not gonna hit it. Who knows? Why is this? Why is there so much overlap here? I don't. My gosh, I don't remember doing all that crazy nonsense. There we go. This one can come down here. This one can come here, here. This will also be a plus. Liquidity pool plus. Liquidity pool plus. Okay. Go back to 1 day. More overlap. 4 hours. Call this area here like low liquidity. Like there's liquidity, but it's kind of sparse. Now this one up here would be liquidity, right? And this one down here, this would be liquidity. Just a little bit. And then down here we've got liquidity. Down to there. Okay. Now this, let's see. These do all stack up and they're mostly undisturbed. Let's see what we get from here to here. 436,000. 436. Now, this is 2003. or 2023. We're gonna drop back down there. Doubt it. You never know. 143 on those candles. So add 143 to this. 9 plus 4. I mean 3. Like 79. And then plus 1 there. That'd be 579. 580. All right. So we got 580 there. Okay. I'll bring that out a little just so we can see where the candle wick ends. If I put it here, it's kind of hard to see where the candle wick comes down to. You can guess it comes down to the bottom, but I'm extending it beyond it just so you can actually see the wick. Okay. Do we have all the spent liquidity now? More overlap. This one is spent. This one comes to here. This becomes a liquidity pool. No extension. And that one goes under spent. Okay. That should be all of it, right? Oh, we got more overlap? 1 week. We got more over here, spent liquidity. So this is 2020, 1 day. Let me map that out. Again, realistically, hitting those things, highly unlikely, I feel. I mean, I suppose it's possible, but that would be a massive, like another 30% recession. It's like this one was, how big was this one? Yeah, it was like 50% there. And then this one over here was 38.2, right? So this one here is 38.2. We're looking at just higher than last time. Head and shoulders. Delete. I want to do that at the moment. I don't want to, oh wait, Control Z, Control Z. Yeah, I can see the dashed line right up here, so I can line that up with that. So with that, what do we get for our Fibonacci? Let's turn off our liquidity active. Head and shoulders, I can just hide that right there. So nice when I have these things organized. Okay. And then this right here, I can make that, boom, hide that other stuff. Okay. Love it. So for a pullback here, I mean, a 38% would be massive. I don't think we're likely to see that. So we already have, like, they don't come that often, right? This one was 50, that was 38. Now we could get a 38% not of the overall market, but if we did to here, 38 would be about in line with that. You know, anything would just be like 38% of this, or 50% of this, maybe even. That bring us to around here, right around 22,000. What would this look like on a 1 week chart? 1 week. 1 week. Right here. We can see that we're at 127%. And I don't have to redraw it backwards. That's so cool. I love that. I don't necessarily like the colors red. I like it when it's in the negative. When it's above it, it's just kind of like, I don't know. I think I might want it to be like more like an orange. I try not to use the color red. Yeah, orange could work. Save as, plus minus. Okay, there we go. That's better. Kind of more in line with like the goldish. Oh, now you know what? Purple, gold and purple, right? Purple is for like the negatives. Now obviously it's not negative there, but it fits my color scheme. That's the move. Purple, and then dark purple. Yeah. And then these ones, I do the gold for the like the key pullback level. And I'll use green for the profit. Yeah, that works. Okay. So let's save that again. Save as, plus minus, save. Yes. Okay. Nice. There we go. I like that. So now if I was doing this, from the high to the low, (127% pullback) would be all the way down here. Now on this type of scale, you know, we don't usually get. I don't think we usually get pullbacks. I mean, we haven't had one yet where like the big swing came past like another like huge swing. I guess defines how you define big swing. Like this one here probably did. Yeah, look at that. That swing. Had 127% pullback. Right, but that's like a few weeks up, a few weeks down. This year is like more like a few months up, 2 months down. All right, 38%. Should 38% still be white? The zero, do I really even need the zero line? I feel like I don't need the zero line. The 100 line, do I need the 100 line? I feel like I don't need the 100 line. I guess it does help to like see where those are, but it's just clutter. I don't really use them. I don't use the 78 hardly ever either, but sometimes I like seeing when it gets hit. So I think what I might do for the 78 is actually just tune down this to like 30%. So it's there. It's just kind of not visible. Sort of like the 50, right? Like the 50, I don't use that much. I have that at 25%. So even if I did this the same way, 25%. Yeah, I like that. That's better. And this one doesn't get hit all that often either. The 261 or 2618, whatever. We can tune that down to like 70. Not 700, 70. 200, not often hit. We'll tune that down to 70. I don't really even think that made a difference. 50. Okay, 50, that works. File, save as, plus minus, save, save, save as, plus, save, yes, uncheck, uncheck, file, save as, plus, save, yes. Okay, so now if I come over here, right click, plus minus, we got the negatives, plus, no negatives. Okay, cool. Go back to 5 minutes, or go to 5 minutes. Delete this. Chart back. Okay. So we pulled back right here to this level, tapped it, and market closed. It's 5 o'clock. Man, I think I streamed. How long has this dang stream been going? 7 hours and 12 minutes. How about that? Dropped frames, 12,000 drop frames, almost 1%. Well, if you saw me stutter, I apologize. But 1%, yeah, you probably wouldn't see much. Hopefully that's not noticeable. That would be like 1 frame out of every 3 seconds, pretty much. Assuming it's streaming at 60 frames per second. Like 1 frame out of every 2 seconds. Less than that. Or no, a little bit more than 1 frame every 2 seconds. A little less because it's actually 0.8. It's not even 1%. So yeah. So it's like you're getting like 59 frames a second, somewhere like 59 and a half, something like that. It's not bad. Probably no one even noticed. It might have happened like when there was a blip in the internet or something. Okay. Well, that's it for today. I've shown quite a bit. This is my new favorite map right here. I mean, I've got my old one. Not I say my old one. Actually, no, this is the same thing. This is liquidity map. But no, I've got my other one, which was called what was it called? AMDZ. Oh my gosh. And I've got uh, that's like from a few days ago. I've got so much on this one. This one has a lot of liquidity too. I think I've got some of it turned off. You know what? I didn't show you this stuff. Let's come to a 4-hour chart. I'm going to copy over. Oh, man. Yeah, see, I've got like some liquidity here. I feel like I want to put, hold on. Hold on, if I come over here to fib time, um, fib time 4 hours is already turned on. Let's go to 4 hours, 4 hours. All right. Yeah, no, this is good. I'm good. I've got all the fib I need on here. This right here, drop it down. If that's not level, if that's angled off, it just bugs me. It's still crooked. I can see it. I don't know why it bothers me so much. It just does. Okay. So we've got. Oh, I just hit my knee. I bumped my knee. Ow, that hurt. Oof. All right. So we got that, and distribution. And we got our manipulation, accumulation, manipulation, distribution. That overlays with the other one. We can turn off this now. This is like an overlap of accumulation and manipulation. Or I could just set that. Oh, it is set to dots, right? Small dots. There we go. So you got the dashes, and you can see like the tiny dots in there. I don't know if you can see it. That doesn't really make it any bigger, but you get the idea. This is an overlap because we're accumulating and it's distributing at the same time. Right here is basically the end of distribution for this. So we see we're distributing like straight up, but we're like right here, we tapped all this. But then here, this is accumulation, right? So this starts another cycle. So if I get this and then I just repeat it, right? The thing is, where did manipulation happen? Manipulation is usually pretty quick, but I guess we could say manipulation started right here, right? It didn't go down all the way. Like we didn't tap all of this. Um, so that's kind of interesting that we didn't tap, but like right there, I guess we could say we're in distribution now, right? So I was right about like the bullish kind of thing, but I mean that's just on this smaller time frame right here. Distribution again, like everything is kind of it's nested. You can find these cycles repeating. So over here, this is when this distribution ends, but it's also when like basically. Oh wait, no, hold up. Right here, this is when the accumulation began. Right, accumulation began right here, not back here. This was distribution, like they tapped that. So this is where accumulation begins. I guess here, if you count this and then this, then we go over here. Oh, let's see. Hmm. I don't know. So this was just sweeping the pre-market, right? The pre-market of the prior day. That's all it swept. So I feel like that's still accumulation. If it was sweeping multiple days, I'd say distribution. But this still feels like you have this like the lows from the prior day, all like the lows from pre-market, the first low, the second low, those were all intact. This is all pre-market right here. This swept pre-market, but the lows of this day from the cash session are all intact. And then right here, we come down, we manipulate into some of it, but not all of it, right? We didn't, let's see, how much did we take? We took basically everything from the pre-market of that day. Like, so we opened this day, we took everything from the pre-market. So the pre-market moved way up, and we basically took all that liquidity that was created during the pre-market. But we still didn't touch anything that happened, like the previous cash session. We only took the pre-market, right? It took us a day and a half to do it, a day in a pre-market and a cash open to accomplish that. And this move right here was massive, capturing like 3 days worth of stuff over there. This is a manipulation right there, in the opposite direction. And this is just a pullback into a larger up move potentially. 38%. Everything closed above 38%. We're in a distribution phase, and we're in a distribution phase here. So I feel like there's reason to believe it can go up based on that. But I think like at a higher level, now these right here, I'm gonna get all these. I thought there was a way I could like edit all of them at once. Like this, oh my goodness. Template, settings, visibility. Okay. So these ones here, these particular ones, they show up all there. 4 hours. So this shows up on, these are 4-hour ones. So do I want to see these on a daily chart? Now we'll say 0 to 4 hours, so we can only see them on 4-hour charts and below. Okay, we'll save that. So now if I go up to a daily chart, I won't see them. Perfect. Now let's find our AMD cycle over here. Uh, that looks about right. Got a manipulation, distribution. And this right here, also some accumulation going on, right? Like that looks like accumulation there. This has some yeah, they're accumulating a bit. I say like right here. All of this looks like accumulation to me. And then this whole section here looks to be like manipulation. I'll really come back over here. So right here you got accumulation going on. Really, I guess it could come all the way back to here. Because none of this is tapped. This is like really big, expansive move. I wouldn't necessarily count that part as accumulation, but this right here all looks like accumulation. Manipulation. Now, the manipulation came down to here, so maybe this is where the accumulation starts. They built up this liquidity and they came and tapped into that liquidity. That just doesn't mean they have to harvest all of it. It's fine. Yeah, distribution. And of course, there's like overlap between these. Of course, I mean, there's like basically two manipulations in here, really. Um, break this down, look at the other way. You got accumulation here, and then you manipulate up to get that liquidity. You know, right here, distribution, and then this higher time frame one. We've got. Let's say we start the accumulation here. If this is the start of manipulation, could be going down some more. Here we went down quite a bit. Now, at the higher time frame is what I'm really looking for. Let's get rid of these. This is the main thing. Let's look at this. Yeah, so right here, actually that looks pretty good. Right here we start accumulating, right? Like back here. We're accumulating all these longs. Maybe go back here, here. There's a bunch of untapped longs there. Right here, they accumulated some longs. Man, if we bring it all the way back here, I mean, they went down how far? Yeah, I'd say like right here. This one here is the farthest back I'd go. And that's just greediness there, whatever. Then manipulation. Nah, see, that's too much. These other swings are like other stuff. We'll do it this way, just the local scale. All right. It's like right here. This is where the accumulation looks nice and clean to me, right? Because you got right here, you're building up a bunch of longs. But like you're building up these longs like right here. I don't know if you see this. Boom, 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 boom. Right, like all these longs, kind of nice. Like this right here, you start to tap into them. You tapped into a few of those. Then we come up, we accumulate a few more, and then you'd expect to maybe like drop down and harvest those, which we did. And then like there was this low resistance area, which fell through, came down to this area, right where we had more liquidity, kind of bounced. And then we have this other like gap and then really another gap. And then we can tell like at both of those gaps, like this whole area right here, pretty much a high speed area, right? Like not a lot of liquidity there. So price just fell. So accumulation going on right here. Oh, I didn't mean to do that. I forgot that's like an intraday thing. I just wanted this. Put dashes back on here. I just wanted it to be the same as these ones. Okay. AM and then distribution. Yeah, right there. Okay. So now, are we accumulating in distribution is what I want to say. So over here, we manipulated these. We got those. This is kind of building up a little bit. That moved really fast. Here we snagged that. So like from here, let's turn on our liquidity active. Yeah, so like right here we got low resistance. Like this low resistance actually comes all the way up to here. Or at least to here, right? Like this could be, I'd say the whole thing. There's only like one liquidity pool in this whole area. And it's like 1, 2, right? That's not much. Now some of these were done on the 4-hour chart, which is why we see some of these things were like they're inside the day. So if I were to drop to a 4-hour chart, maybe I'd see some more stuff here. But for the most part, I'm just gonna call this low resistance. Like this right here would probably be a low resistance too, actually, like from a daily perspective. Now we're looking for signs of accumulation. And what we see is that we keep on sweeping the liquidity. We got some here. I'm going to turn this off. 1, 2, boom, boom. This swept all of this. So like all the liquidity that was gathered here for like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 days. It was all swept. So like this area has like 1, 2, 3, 4, 5 days of liquidity, not like a month of liquidity, right? Not a whole lot there. This moved up really quick. This would be, this right here could be a decent liquidity area. There's a bunch of equal lows. People could have like moved their stuff a little bit lower and kind of let this build, or these could potentially swept. This moved up really quick. I'd say this is low liquidity. Not necessarily low resistance, like liquidity low. Right here, liquidity pool 78,000. All right, let's see. So we've got a little bit of liquidity here, here, here. Like this seems like a decent liquidity zone right here for a pullback target. Down here you got like a big move into like low liquidity. That would, if we get a move here, it would be fast. We'd probably get some consolidation in this zone. In this zone right here, we might get some consolidation potentially, but still it's like it's a low liquidity area. It'll probably move quickly through there. It would move quickly all the way down, probably all the way down through here. Like this whole area from here to here. I would imagine this right here would all be basically like a high speed area, low resistance. And then I'm going to set this to only show on a daily chart or higher. I'm going to call this, I'll put this in another group. I'll create a group. Liquidity active. I'm going to call this like liquidity daily. Liquidity daily. Okay. So that's like the higher time frame. It's right there. And then down here, this is like liquidity low. That gapped up. But then down here is where we have the next like kind of group. Right to here. But it's only like 3 days. So I'm going to say that's like low liquidity. All right. So we'll come over here. We'll turn off extend right. And that should be under there. Yeah, cool. Again, right here, this whole area is going to be another low resistance zone. There's not a lot of liquidity here to seek out. Hardly any. All that got swept. There's like 1, 2, 3 days of liquidity. There's a little here and a little bit down here. You could potentially put like a low liquidity area here. Like this. Say like low liquidity right there. And then I put like low liquidity down here. Because it's only 2 days and there was like so much up and down. If people move their stops, they're likely to get stopped out pretty quick. They're trying to like follow a bounce. And then right here, again, another low resistance zone. So I don't see much draw like for liquidity down here. This could potentially come up to here, right? So like this whole area would move kind of fast, and you might get consolidation around these points if the price did drop down into these regions. But then they'd have to be seeking out liquidity that was like down here, right? If they were to break all this, it's because they want to get down here. Or they're basically seeking out one of these blue zones. So if they come into a low resistance, it's because they're headed to one of these blue zones or even farther. And that would be, I mean, this would be like a 50% like overall retracement target if they hit that. I just don't see that as very likely right now. I could see maybe a pullback into this area. Like that could be, what would that look like in terms of Fibonacci? It'd be a 61% actually. That would be fine in terms of like levels. They could do a 61% pullback from this swing. Right there. Put this up at the high. Yeah, 61%. That'd take them right into this liquidity pool. So I think this is my first time looking at the pullbacks in terms of liquidity and where pullback would be. Now this one right here, 38.2, I think that's the most likely target. You got all this liquidity here. Like this is a no-brainer. They'll come back for this, absolutely. You got all these equal highs. They'll come back for that. These right here, these equal highs, There's probably a big shelf of liquidity there, right here, no brainer. Like this whole area has a high draw. Once you get into this low resistance zone, you get like a little bit here, a little bit here, a little bit here, and then they could push. They could say that there's enough in this zone. I guess you could call this a low liquidity zone, but I'm gonna call it low resistance. Like down here is where you have like 1, 2, 3, 4 days of like clustered liquidity, like in a tight space. Over here, like this whole thing spans almost like a month of of days, and there's only like 1, 2, 3, 4, 5 days of liquidity in it, or 6, 7, like 7 days out of like a whole month. It's not much. 7 exposed candles out of a month, whereas here you have like 1, 2, 3, 4 exposed candles out of 4 days. So this is like a more dense zone. If they're going to push all the way through this to get these exposed candles, right? And I say push all the way through, like this, these are like fast moves. So if they go through this just to get the 4 candles of liquidity, and people can put their stops, back, right? You'll see you got 1, 2, 3, 4, 5 candles. If they come all the way this far, like you think they're not going to come for this little cluster of 4 candles when it lines up with 61.8%? Like, of course they will. Of course they will. Okay. So this, honestly, I think this is this would be my pullback target. So let's go over here. Boom. We're going to change this to template AMD pullback target, but I'm going to change this to like a golden yellow, no, yellow, because that's the same color as 61.8. And then I'm going to come over here. I'm going to change this to light yellow. I'm going to say pullback target 61.8%. Would call this like an annual target or something like that. I don't know. I want to see this on like a 4-hour and higher time frame. So I'm going to turn off these. Or 1 hour. 1 hour and higher is fine. If I'm at an hourly chart, I can see it. As we start getting closer, I'll probably lower it down so I can see it on a lower time frame. But now I want to line it up with, not necessarily with 61.8. I want to line it up with the actual liquidity. So I'll put it like right here, right? That's where it comes from. So I'll be able to see that 61.8 of this swing. And now I want to lock that, right? So this horizontal ray, we'll put that under forecasts, but we're going to lock it. Actually, we lock all the forecasts, don't we? No, that'd be a target. We'll put that in targets, and we typically lock the targets so we don't accidentally drag them around. Now this was just a tool we were using to see something. There we go. Now we could hide our daily liquidity, and we got a daily pullback target. Targets, turn that off. Boom. Now, you know what? I kind of feel like that should go somewhere else, right? I feel like that should go under liquidity daily. It's not liquidity, but it's marking. It belongs on this. I don't know. You know what I mean? That just feels right. Like I see this, I can see that as a pullback target right there, and I don't have to show the overall like daily liquidity. I don't want to make another like thing here that says daily targets. It just seems like a bit much. So when I come back to a daily chart and I look at this, boom, there it is. Now what the heck is all this nonsense up here? And why do I see it on a daily chart? Oh, because I'm looking at my targets. Okay. See, exactly. I don't want to have targets turned on, but I still want to be able to see this. There we go. So now we got our AMD cycle, like our greater AMD cycle. Now, I'd say that accumulation basically, I guess you could say it started. I mean, this whole thing, like this right here, they did catch like a bunch of that. Like they tripped up a bunch of this. This right here, like they're accumulating longs right here. And they still have more. This right here, like this expansive thing right here, I'd kind of say that accumulation starts here or here. So if I was to start this thing back over, now this one, yeah, I would say it starts like maybe, if we did start it back here, I don't know. Where does this one ends here? There's overlap, right? I feel like all the way back to here, they are like accumulating at like nearby levels. Even though they cleared it, they did come back down here, and like there's not a big gap from here to here. Down here, like you get big gaps between all the levels, right? Over here, the levels where you'll find the wicks, they're pretty close to each other, right? There's a gap to here, right? But then from here up to here, and then you come up to here, and then you come up to here, and then to here, and then like this is like the real accumulation right here, you know, like very, very clean. Sort of like this, right? This was really clean. This was relatively clean, and then they came and they swooped part of it. This was pretty clean. They came and swooped part of it, right? So it's like over here's where they really started doing their accumulation business. And then manipulation, distribution, accumulation, manipulation, distribution. So in this regard, like if we just use the same cycle frame, maybe we're in manipulation. We'll have to see where they really come in. If we look at this like from like a 1 week chart, maybe we'll get a better. Where's our stuff? Were these only visible on daily charts? They are. Okay, I want to see them on weekly charts too then. Okay, 1 week. All right. Now where's the other one? I only did one of them, didn't I? 1 week. Okay, there we go. Oh my gosh, now I can see that it's crooked. Oh, I just messed up the whole days, didn't I? Now I gotta go back to 1 day and fix it. Goodness. Okay. Well, it looks pretty close. That's actually on the right day. That looks decent. That looks decent. Oh, I think we're good. All right, 1 week. All right. So we've got accumulation, manipulation, and then we got distribution, overlap with manipulation, or overlap. We got accumulation, overlap with distribution here. So somewhere around here, start to get a bigger manipulation. Now, I'm not saying it's necessarily going to happen right now. You know what? Let's actually if we look at like the 1 hour chart, we've got, we saw the head and shoulders, up here on the hourly, right here, right? Um, and then if we go back to the 4 hour, I think we saw it on an even higher time frame, back here. Like there's this one right here, right? But then there's this one right here, right? This one's potentially still forming. It says, manipulation distribution, so maybe it's not going to be anything. But if this is a head and shoulders, if this does end up being a shoulder with a drop, sort of like this right here, like look at this. It comes down, you get your like up candle, and then you get a big drop. So like this, just because this is bullish right here doesn't necessarily mean we can't have a like that. I mean, the way I see this, we just snagged all the liquidity from here. And if we go and we snag the liquidity from up here, like that's what we did like the past couple of days. We just took all this liquidity from back here, right? That's literally what the other shoulder is. The other shoulder is taking all the previous liquidity. That's why, like, then it comes down, they build some more, right? Take it. Dude, they just stacked their short position even higher. And now they've got like liquidity here, short liquidity here, right? Here from this candle. And this is basically like they basically kind of reload their shorts, that right here. This if I delete that for a moment. Like both those candles, basically same level, right? Like they didn't really break it. They just came up to the same highs. Um maybe they broke it. Let's see, what's the high of this candle? High is 75.25. 75.50. They broke it by one tick. Yeah, you think they're not going to move their stop up a tick? They didn't get stopped out, obviously. Um, Other people might have. Other people that had their stuff like sitting right there to the tick at the top of the candle, they might have got stopped out. Some people might have moved it though. Anyways, that's not the important part. It's that they came back up to that same level, sweeping all the extra liquidity up there, and then they came down again, swept it. So like on the 4 hour time frame, there's massive short building going on. So like they're on the higher time frame, they're building a short position. So they are very focused on going short pretty soon, right? Like I don't know how soon, but like right here, 1, 2, 3, 4. So that like they're stacking these things here. Um so what I want to do is I want to go back and look at the fall that happened in February and see if we can see the same thing on a 4 hour time frame. You know what I mean? So if we come back to February, oh, November. Oh, this is it right back here. All right. Like what in the lead up, what did we get? Do we have any like head and shoulder patterns here? Uh, Kinda. Wow, how big was that drop? Dang. 1,000 points in one day. Holy crap. Dang. What happened on Christmas Eve? Oh no, that's not December 24th. That's December 18th, 2024. Okay. I thought that said December 24th. Okay. My bad. Wow. And then it came right back a couple days later. Oh, almost came back. We did end up coming back almost. Now let's see. Ah, man, that would have been a time to trade right there. And I mean, it would have been clear from this, like in the pre-market, they swept the low liquidity, then they went up, right? You see them taking this liquidity. Well, actually, right here, that you can't see that. If you went down to a lower time frame, I bet we'd see it, but I don't think I could go back that far. Maybe on a 30-minute time frame. Let's go December 17th, 30 minutes. Can I go back to December 17th? December 17th. Can. Okay. All right. So what do we have here? Okay, yeah, this looks a lot better than it does on the daily. Or with a 4 hour. So we come back over here, it comes up, and then it sweeps all this liquidity right here. Like that tells you short. Like they're building a short position. It was kind of obvious right here. And especially with this down close candle. Like if I was online trading at 6:30, yeah, like I said, I would love to be, because like these are the times when you get these setups. Like right here, 4:30, 2:30, 3:30. Remember what I said, like around 3:30 in the morning is when you get like a low or high forming? Well, like right here, 3:30. You got your low, you got your expansion away. And like I said, it's not that you won't break it later, but like that's basically, you're pretty guaranteed if you're getting like a swing, you'll find the swing starting there. And then like right here, you do get the swing. This right here targets this liquidity. So right here, if you were to say, where could this go? What if I turn this on to plus minus? Boom, we get targets right down here. We see it come down here, and we look at the liquidity. We say, well, this one has liquidity here. This one, not so much. We could actually turn on another. Why doesn't this? Okay, there we go. Let's turn on a negative. What was the other one? 618. 1.618. Yeah, 0.618. Negative 0.618. Negative 0.618. And we'll set this to a dark purple. Again, 70%. And we'll save that. Save as plus minus. Save, override, yes. Okay. Okay, so that's what they hit right there. So they came down there, right? They hit that. That's actually really dark. It's hard to see it on this background. Um, oh my gosh, I'll just type it in. 70. I feel like it's the same color I used for this one, right? 70, 70. It's the exact same color. It's hard to read that text though. What if I did this purple? That's a little bit easier to see. I know what it is. I don't need to be able to read the numbers necessarily. Would be nice to be able to read the numbers though. So this one here, what if I made this one easier to read too? Like a pink? That looks kind of reddish. That's a little easier to read. Wait, that's the same color, isn't it? That's the third one. That's did the same thing again. Oh, that's hard to read. Oh, that's lighter than that one. All right, this one here, we'll go light purple. darker purple. No, no, no. Light, lighter, or light, darker, and then darker. Okay. I don't know. That still feels like that's 70. That's 70. That's just a lighter color though. 50? No. What if I did 90? What if I did 90 for this one? That one looks brighter. Like this one's actually a, no, that's not fourth. This one should be the third. Okay, now we can do this as like maybe 80. No, I was wrong one. I meant this one to be 80. I don't want it to be quite that bright. Okay, yeah, I can read that. And I can read that. Okay, let's save that again. File, save as, plus minus, save, yes. Okay. All right, there we go. I like that. I can actually read the numbers now without having to like squint. So we see that we hit this and it's at the right time. Right now, if it was just like a trend continuation, like where we were getting this and like this little pattern right here just continued, then I just expect it to keep continuing. But instead we got this, we got the sweep of liquidity. And then as London session came online right here, boom, a move down into this target. Like if you're up at like 2:30 in the morning and you see this, like you need to be buying, okay? You see this right here, it comes down and hits, and you drop down to a lower time frame, you start seeing like the bounce. I can't. I'm pretty sure I can't come back here on a 5-minute time frame. I'll try. December 17th, 3 a.m. 5 minutes. December 17th, 5 a.m. or 3 a.m. I'm pretty sure it's going to say beginning of chart. Yeah. How far back? It went back to June. I might be able to do 10 minutes then. I could probably do 15 for sure. For sure do 15, right? March. 15 might not even cut it. Okay, no, 15 works. Now, we only get twice the bars, but with 15, like you can trade this on 15 pretty decently. You do miss out potentially on a little bit of granularity, like if you want to scalp as many, not scalp, if you want to like gain as many points as possible, like getting the pullbacks on the lower time frames, like you can get a tighter entry for a tighter stop loss. That's the benefit of the lower time frames. It's like right here, right here is kind of how you do it. You get the big engulfing candle. Like this one doesn't really close above here, so it doesn't count. This candle, it engulfs all of this. So this is where you would look to get in. And again, you want to look at the low, at least the low of the previous candle that was bearish. If you want, you could use this low, but you're not always, you want the one that's more likely to give you the entry. So right here's your entry. So right here, you go long from this position right here. And then you set your stop back here. And then your profit target is based on liquidity, right? So we see the liquidity is up here. So you could just target like these right here. You're targeting these. Tick, 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 boom. Right? Like maybe it'll sweep the top, maybe not. But if it does sweep the top, it'll probably also get this one. So let's see if we did that. Now it doesn't hit. We target the top of that right here. It does hit, but I try not to target like the tippy top. Now from this move here, Like, what do we? Nope. Well, yeah. Because I mean, the whole point of this is Asia sets up liquidity and then London sweeps it. So London swept this, and now either we're going to be up for the day, in which case we'll come up part of the way and then go over, and then the main session will come up and be bullish. Or if we see that they built up a lot of liquidity here, um, the idea is they would sweep it. So once you see this, you're like, okay, they're obviously targeting this. This right here, 127, kind of lines up with this. I'd look for a profit target here around the 100% or a little bit below it, and then a second take profit up here. And then boom, you get almost 60 points from that move. 60 times. Now, if you did that with like an E-mini, that'd be like $1,200 about. And then trading the other way, like once you see the liquidity sweep and you get this, well, remember now you can trade the opposite direction, right? So you come here, here, you got the 78.60 pullback. Now 78.60 again, 21.4. Do the math; they add up to 100. So you don't have to redraw this, but I promise you, it's like it's the same thing, right? It's right. This one, I'm going to draw a line here. I'm pretty sure my math is, unless I'm mathing wrong. Right here. So yeah, so the 78, that 78 line does come in handy for that. 78.6. So, I could make that the other blue line. I could do it the same shade of blue. And let's make it 70%. It doesn't need to be quite so dang bright. 70%, and then we'll do the 78.6. Again, it's blue 2, 70%. We'll do blue 2. We can do green 2, 70%. No, blue. Blue 2, 72%, 70, whatever. There. So the blue lines are the pullback lines. So it doesn't matter which way we do it. Blue is pullback. Sweet. Love it. Let's save it. Template. Save as. Plus minus. Save. Yes. Now we're going to do save as. No, we're going to edit it. We're going to turn these ones off, all the negatives. Do a save as. We're going to save it as plus. Save, override, yes. Now we're going to put it back to the way we want it. But generally, it doesn't hurt to have the negatives on there. Cool. Man, I love my fibs so much more now. All right. So right here, you get in here. And now what you'd see when you're drawing this, you see this expansive move. Oh, wait, no, sorry. You put it here. You put it here. The line is here. All right. So let's try that again. Just make sure I'm. Yeah. Yeah. Same thing. So we're expecting a downward move there. So we project our targets down here, right? And then we put a limit order here to get in. And then we do get tagged in. And then you put your stop loss back here. So this is the short position. This is one of the things I like about trading in like trending environments. In the overnight, because you could get in at the beginning of the move. Again, your short would go right here. Your stop would go back here. Right now, this is a 15-minute time frame, so it's a bigger stop. It's 32-point stop. You likely would have gotten a much tighter stop if you had traded this on a 5-minute time frame, especially on a 1 minute. 5 minutes will give you the most confirmation. You get less fake outs on a 5 minute than a 1 minute. With 15, you get even less fake outs, but you do have to be able to afford a wider stop. Like this right here, again, 30 points, $20 a point. That's a $600 stop. So if you can't afford to be wrong by $600, then don't trade on a 15-minute time frame. I'm not saying necessarily 600. It just this one is 600. And now you want a 3-to-1 risk reward. So you want to drag this until your risk reward comes to at least 3-to-1. And you do hit it in the morning right there. Now, you don't necessarily just take a 3-to-1, right? That's like too simplistic. You need to project out your targets. So in this case, your targets are 127, which is basically right around your 3-to-1 right there, and you don't technically need it all the way at the back. You could pull it forward to the back of the candle. And now we have a 3.76. So I like to maintain a 3-to-1. So I would just bring it back a little bit until I get 3-to-1, while also maintaining my my profit target right there. So you got target 1, target 2. Now if you go to target 2, like if you had 2 contracts and you had a target 1, target 2, and you even hit target 3. But like right there, the bare minimum, if you do that, the other ones are going to be better than 3-to-1 risk reward. So if you had 2 or 3 contracts, you set target 1, 2, 3. There you go. I'd exit the first one here, and then you could drag your stops, like maybe to any of these other areas where you had, like right here. Here's another great thing. This move right here, where you see it expand away, you could put it behind here, right? So once you see this and you hit this, like you hit this, and then this comes back up, and this expands away like this, you can move your stop back here behind this candle, right? So now your stop would come all the way down into the, like all your stops would come down into the money right here. And you'd be guaranteed to make at least, like, see behind that candle right there, 30 points on them. At the bare minimum, you could bring them to break even, right? Like up here. Like once this hits, definitely bring them to break even. There's no need to risk money or risk giving up your profits. Use your current profits to pay for your stop loss. That's stupid. So as soon as you hit profit target 1, bring it to break even. And then when you see the next candle formation, or you can use this and be like, oh, okay, here's the next thing. Because this is, again, it's the same deal. It's the expansive move away. I mean, you could even use this to warrant another entry, right? Like right there, enter on blue. You might not have got tagged there. You probably would have missed out on that trade. It didn't quite make it, but that's sort of thing to get in on. You don't necessarily want to get in at the end after you already hit your profit target. But knowing that this is a type of trade setup, you could see this as your protective zone and move your stop there. And then, or as it trails, you could just kind of, loosely follow it until it hits the second target and then the third target, or if you just want to exit all 3 of them here, when you see it start coming back, that's fine too. And then when you see it move away past here, if you want to try to get back in again, you can. But there's that. Watching for... reading the message there. What do we got? So yeah, so that's that. Now I can't hold past the close, but let's see the next day. The next day is when the big thing happened. Would we have used our system to see this? So we right here, look at all this short liquidity being built up. Boom, boom. Got all that liquidity. Boom, 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 boom. Like all these levels, untapped, 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 untapped. Again, right here, untapped. Boom, 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 boom. A gap up here. Boom, 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 boom. Liquidity, short liquidity, all there. We see that Asia opens, it starts coming up, snagging liquidity. It builds its own, snags it, right? builds a little bit more, takes it. Now there's a little bit of there's some long liquidity. Yeah, I mean a little bit right here. I don't really know if this is a snag on the long liquidity. Could be. They do push up here to grab this. And then they come down. They take that long liquidity from right here. They expand up again, and they take this liquidity. So they took all this short liquidity. So if I was like logging in 6, 7, 8 in the morning, and I'm seeing this, or if I did the thing I want to do where I'm getting up at 3 and I'm kind of watching this develop, maybe go to the gym, come back, look at it again around 5:30 or 6, I'd definitely be thinking short, right? But now I'm looking at this, and this is what I would consider an extended manipulation play, because it's not like Asia built liquidity and then London manipulated it and then America started to follow it or whatever. They all were part of the same manipulation move. In which case I'd be looking and I'd say, well, are they going to push higher to this or even up to here? And if they're bearish, like, they're probably just adding to their position. And the answer is no. Like, that's what I thought the other day. And I was like, I didn't enter my short near the top of an obvious liquidity area because there was like a gap. And then after the gap, there was more liquidity. I was like, maybe they'll push through the gap. They didn't, right? Because it was near all-time highs. They're not going to push through a gap and steal their own all-time high short liquidity, right? They're not going to do it. They're the ones that are sitting at all-time highs. Like this is people trading in the market. They'll steal their liquidity. But this stuff here, these overnights at all-time highs, that's the market maker, when I say market maker, I'm not talking about official, like registered market makers. Just the people that make the market move, right? Those people, institutions, they're the ones that own this. They're not going to push through here and liquidate themselves, right? I wasn't really thinking about it in that frame of mind before. So when you come up here and they take all the liquidity from the prior day, that is definitely saying bearish and we're probably going to go down. And once you see this first expansive candle here, I'd be looking and I'd say, okay, so from this bullish candle down to the expansive candle, right? I'd be looking to get in right here at the blue, right? Boom, right there. You get in at the blue and you short. Now, we would put the stop right back behind the bullish candle right there. And we'd be looking for a 3-to-1 risk reward at the bare minimum. So pull that up to 3-to-1. Okay. And now we just barely got that fill, right? So if you see it hit, but you didn't get it, I would suggest putting a limit order. And like if it's close, but like not quite there, you can get in at market or whatever the current price is. Like if you're like, oh, I missed it, but and you want to get in here, just go for it, okay? Don't let me stop you. But this is the ideal entry, right? If you don't get it and you can get like a price close to it, that's fine. I wouldn't, necessarily suggest getting in down here. You can, right? I mean, it totally would have been worth it this day, but generally speaking, that's not how I would trade it. There are times when I miss it and I get in here, and I justify it by saying I wanted to take the trade. It gave me the setup. I failed to execute, so I'm just going to give up some of the profits, right? I'll plan my profit target and everything in the whole trade based on if I had gotten my ideal setup. Like I'll plan all the profit targets, all this stuff, as if I executed at the right place, right? I'm just kind of sacrificing my own profits. Like if I got in here instead, I'm just going to make less money. Now, do I need to tighten up my stop a little? I see if I can, right? That right there brings it to a 2.5. So I'd say, can I bring it up to a 3? I can, right? And as long as I'm inside this candle body, I'm generally safe. The candle, like if we're in a bullish move, the candle that closed the opposite direction here, the one that got engulfed. Now really this is technically an engulfing candle, but it's barely, it doesn't really have the displacement like this one here. Like this is like this, you could have gotten in here, boom, and like gotten in like right here, right? But that's not, I mean, you could see that potentially like right here. You could be like, oh, get in right here, and then it goes back on you, right? When you get the expansive candles, where like it really expands away, that's the ones you want to really look for. Now, if you know you're at like the top, right? Like over here, you could say, oh, right here, but like you didn't hit a liquidity pocket of anything. So while this is a candle that expands away, it doesn't correspond to anything shortable. Up here, this does correspond to something shortable, right? So when you know this is a high and now you see you're moving away from it, like these two candles together, they basically engulf this one. So you could get back on a pullback here, or you could wait for an actual engulfing setup where you see this candle and then this one engulfs it, and then you can get back on a pullback here, right? Or you can wait for like an actual big engulfing like this, where, I mean, this is actually past all these. It basically engulfs all of this, right? And then you can get back on a pullback here. Now, the sooner you get in, obviously, the more profits you make. But the bigger the candle, the bigger the, I mean, and you know, they're setting up a short, right? And they built all this. I mean, this is where they were, and they built a short. I mean, they're probably going to come down at least to here, if not more. Right? So I mean, at the most, I mean, they're not going to do a short. They're not going to build a short and then build a short to hit a 61% retracement on the day. That's no. So if you see them building a short like that, you just project it out. You're like, where are they going to go? Right? Well, they're going to come down here for their short. This is where they were building the short to. So now you'd be like, well, hell, I can actually afford the full stop loss. Right there. You got, no, that's 2.87. So maybe you can still tighten it up a little bit. Boom. Just tighten it up a tad, just past the wick there. Boom, you got your 3-to-1, right? Now you take profit there on the first one and you let the other runners go. Like that one can hit this. Maybe you take profit on that. And your third one, you take profit there. Now, you missed out on all that if you just took the profit, which is why having runners is good. So if you can have like 3 of them and then just move your stop loss, like just trail your stop loss loosely, like you can just keep following it, right? Like every time it, like you see it's moving like real fast like this. Boom, right? Just kind of trail, even if you want to trail it by like 30 points, 50 points, 100 points, like you just start looking at these tails. You're like, how big is this tail, right? Take the time to measure it, right? Like that tail is about 40 points, right? You put your stop there. This candle closes. You move your stop here. This candle closes. You move your stop here. Eventually you get stopped out, right? You just keep moving it behind, like in a big move like this where you got all these expansive candles. Oh. And then you see you get near the end of the day, right? So do you want to put it here, or when you get, you know, at 3:30, do you really want to? 3:30, maybe you drop down to a lower time frame chart. Now generally you probably wouldn't be trading on a 15-minute. I mean, you could trade on 15-minute chart, but when you get near the end of the day, even if you're trading on a 15-minute chart, you probably want to drop down and just trail it a little more closely into the close. You could have gotten all the way down here. You definitely would have got stopped out, but still, you would have caught the bulk of the 1,000 point move right there. Again, this is all hindsight. I'm not saying I necessarily would have caught 1,000 points of movement. Possible. What I'm saying is that this way of trading, like you would have been on the right side of the trade, even if you didn't catch all of it. You know, could have made a hell of a lot of money. And I mean, we can also see right here that this right here, we've got like this is a low liquidity area, right? Like there's these areas in here, a lot of them, where liquidity has already been swept, and these are like low liquidity zones. This right here, this whole area right here, that's I call that like low resistance. You got low liquidity, low resistance, low liquidity. Because this is overnight. This is overnight. There's hardly any liquidity right here. Again, this is all overnight. So this is low liquidity, low resistance, right? So I mean, like even just looking at this, if we come back to liquidity daily, right? Let's go find some daily liquidity on here. I'll just make some new ones. I don't feel like scrolling around on the chart. Boom, right there. We'll say this is liquidity pool low, right? And then we'll do another one of these and we'll call it liquidity uh, resistance, low resistance, right? I'm going to change this so it doesn't extend right. And I'm going to show you how all this, you can predict this fast action. Once you see it, you know there's going to be more of it if you have liquidity drawn out on your charts. So like right here. Oh, also this right here, I'm going to put this under liquidity daily. Then I'm going to put this under liquidity daily. Okay. So right here, this is low resistance right here. Okay. Bring this up to this whole area right here is low resistance. And then this is pre-market right here. I'm just going to include that in low resistance. Bump this over. All right, we see that got taken out, so we're going to shrink it down to what can actually extend. All right, so we got that. That's low resistance, right? And look what happened. Did the price resist going through it? No, it did not. Okay, let's do this again. Again, this is all pre-market right here. Okay, so this right here, all the way down to here. I mean, technically, you could say this is like low liquidity right down here. I'm going to call it low resistance. Now I'm going to bring this down to the bottom of these wicks. Now normally it'd be over here, and then I draw like a bunch of smaller liquidity pockets, liquidity pools or whatever. But there's that. This right here, I would put this as a liquidity pool, because it was formed during the day around like 11 to noon. That's like actually a valid time. Uh, so we'll come over here, grab this, drag it down, shrink it up. We'll say liquidity pool, no extension. Right? We'll shrink this down, and then we'll put that like right over here. That goes right there, down to here. So there's a little bit of liquidity there. You know, like I guess technically it comes up to like that candle. But this right here, also low resistance. So this could actually come down even farther. Basically to there. This right here, also low resistance. So this I can actually afford to bring this up more. So like you got this little bit of liquidity sitting in here amongst a low resistance area. This right here, low resistance. So like this, you could actually bring this whole thing down. There's some liquidity sitting here, but this is at the end of the day. People exiting their trades and just all that kind of like type stuff, balancing their books. Um, this whole area here, low liquidity. Like there's liquidity here. This is like pre-market liquidity, all this liquidity. Now this liquidity right here is from the day, but it's really fast moving. Um, and like they swept most of it and then they left like a few peaks. So there's liquidity here, which is why I'm not calling it a low resistance zone. There's liquidity here, but it's not dense. It's not dense liquidity. That's why I put low liquidity. It's either overnight or it was fast moving and frequently swept. So that would come up to here, right? And then this whole area, there's no liquidity there, right? So we come over here, boom, drag this. So this whole area here basically has no liquidity. or virtually none. There's like maybe a little on that candle all the way to here, practically nothing. And then you've got low liquidity down below it, right? So down here, you do have some like liquidity there. Down to here, it's like pre-market liquidity, not a lot. And then again, you have another like basically no liquidity area right down here. Like just really expansive moves. Right down here, you've got some liquidity spread out throughout the day. So I'd go, and because it's like during the day, I will use a low liquidity to mark it as an area with liquidity, but it's just spread out. And it moved so fast. They didn't really sweep all that much of it. This one didn't even sweep this. So this does, I mean, this could actually just be a liquidity pool, right? None of this was swept. It just moved really fast. I will call this liquidity pool no extension. Not liquidity cloud, liquidity pool no extension. And then even up to here, there's actually liquidity. It's like all the way up to here. Now that's like into the close of the market. I don't really know that counts so much, but I'll put that there. This liquidity was generated in the middle of the day, and none of it was swept. It's just not dense. But if people were buying here and they put their stops at the bottom of the day, this could be a decent area to provide some type of like support. Down here again, basically no liquidity. Well, I'd say low liquidity for all of these. So like this whole area, like they're all during the day, or like this is New York session at 9 a.m. New York pre-market, New York open, New York open. So this whole area right here, from this down to here, I would say has low liquidity. Just because most of the day was not down here, and so this would go to low liquidity pool low. In this area right here would be low resistance, right? So let's expand all of these out and see what we get. Right, like this whole area. All right. This was not an accumulation phase right here. This was a distribution phase, and they kept on sweeping liquidity, leaving very little behind. Dude, holy crap, look at that. The one that I said this one actually has liquidity, look where it finally turned around. I wasn't planning that. I didn't memorize what levels things bounced at. Look at that. Like I just showed you how, like, bro, you see all this low liquidity, right? Low liquidity, low resistance, low liquidity, low resistance, low liquidity. Where does it fall down to? To the zone that actually has some frickin' liquidity in it. How about that? Who would have thunk it, right? Who'd have thunk it? And then this one, also, remember, this didn't tap into all of it. This one actually came down to the same pool, right? Like this right here, another low resistance area. Like there's nothing right here, all this space right here. Ain't no resistance in there. There's no liquidity in here. So when the price falls here, it's fast. I don't know what it hit there, but people finally stepped back in. There's nothing over here on a 15-minute chart that I can see. Maybe if you go to 5-minute chart, there's some liquidity down here. I mean, there's something right here, right? I mean, we didn't even hit that there. We hit it here. Like all of this is low liquidity. This is low resistance. So we can come over here. Boom. Now this is going in a small tight space, so I'm just going to rename it to LLZ, low liquidity zone. It's like this whole area right here, from pre-market through the expansion up, low liquidity, right? And then like right here, all this is expansive. You could see like the liquidity, they did build up liquidity right here, but they swept it. So what does that mean? It means there's low liquidity there. This stuff, the liquidity that built up here also got swept. So there's like one candle of liquidity there. There's a little bit here, but it moves so fast. That's also a low liquidity zone. Now none of this got swept. So I'd say definitely at least to there. There's potentially some liquidity like right in here. Not a lot though. There's hardly any. So we bring this down. And we come over here. We can say that this is a liquidity pool, but I'm going to say it's got hardly anything in it. So let's do a volume profile analysis and just see how much is actually there. We'll count this candle. Well, no, we'll just do the exposed ones here. I guess we can count that one. We're only looking for the buyers though. We just want the buy side liquidity for the exposed candles. So 77K. It's right here. We'll say LLZ 77K. All right, there we go. Delete that. All right, now let's see. I don't know if anything would have bounced off that, but it did. Okay. It's low liquidity, but you know, oh wait, I didn't rename it to an actual liquidity thing. But we did get a bounce there. Like I put the number there because like this would be a liquidity zone, but it's so sparse that I wanted it to stay LLZ. But because there is like actually stacked liquidity that wasn't swept, I put a number on it. So I want you to see my thought process here when I'm doing this. Like LLZ, it's low. Like this is Asia session, doesn't represent a whole hell of a lot. This right here though, I could have made this a regular liquidity pool, but then I would probably in my mind give it more merit. I mean this probably could afford to be a regular liquidity pool. But because it's so wide, I kept it a low liquidity. But I still wanted to designate that it does actually have more liquidity than a normal LLZ, which is why I put the number on it. So you see this, it falls down through here. We come into this one, boom, we get the bounce, right? Again, I'm not focused on like, I wasn't thinking, okay, I know it bounces here. Let me delineate that this is a special pool. I'm not paying attention to any of that, okay? Whether you believe me or not, I don't care. But this is exactly how this is how I draw them. So it happened and bounce there, and then you come down, low resistance. Again, there's nothing here that says it's going to bounce. If anything, you could just look at like a target for this. Be like, okay, it hit at 200% retracement, right? Like you came down here, you got your, now this right here, this is the perfect example of what I was saying before, extended manipulation. Okay. So you see that Asia session builds liquidity, right? It's building short liquidity on the top. 2 o'clock comes. London does not take it. It does not take Asia's liquidity. It just keeps on going, right? It goes down, it comes back up. It snags their own short liquidity, right? It snags the 2 o'clock short liquidity London built. And then what does the US like pre-open like do? The pre-market traders, they drop it further, extended manipulation. So now down here, they did take all of this liquidity right here, this buy side liquidity. Sorry, this long liquidity. And then over here, um, like there's not a lot there. It's like if you saw this and you see that London is still manipulating, then instead of trying to like time a bounce, right? Like you wouldn't look at this and be like, "Oh, we need to bounce." At 3:30, looking for a bounce. No. Um because you didn't swipe this, like you're not there's no manipulation going on here. It's still just the same thing. So you would just trade with the trend, right? You just keep shorting, and then there's your short playing off, and it doesn't stop at 127, doesn't stop at 150, 140 or 160. Goes all the way to 200. That's like a very much overextended move, right? That's probably whenever their orders got filled. Um right, or someone finally stepped in and put like a big order here or something, or their short position got filled or something like that. I don't know. But still, if you would just have exited like 1, 2, and then left a runner, you know, and you'd be fine. Um, and like trying to time the bounce for this, like to come back up if you wanted to swing it, that would have been, kind of hard. Like you might see this, and then you see this, and you're like, oh yeah, here we go. I want to get in long with this. So you go long right here, you put your stop back here, and you get stopped out, right? But I mean, you're right more times than you're wrong. Um, and then you come down here and you hit 200, it bounces. You could try it again. Boom, boom, enter, put your stop here. You get stopped out again, right? Eventually, you're gonna be like fed up and be like, you get this expansive move, you're like, am I gonna do this a third time? Get in on the pullback, put your stop down here, right? Like for this, because this candle has the low, I would have put the stop here, right? You're not gonna put the stop here if the because just the way the time overlaps, like the pattern that formed on a 5-minute candle, you would have put the stop down here. Okay, this is where you would have seen that candle. So on a 15-minute chart, you're not actually going to put your stop down here. You're going to put it here, right? This is the expansive candle that engulfs that one. So I'd actually just do like a 21% of this whole candle. Um, so enter on the blue, stop back here. So you wouldn't have actually gotten stopped out here, but that is something to keep in mind. If this candle has a wick lower than this is the real low, right? So this is the one that you want to be focused on, either the low of this candle or the low of this candle. If this candle's low is lower, then this is the one you go with, and it could be the candle body or the wick, right? I try to do the wick if I can. If my 3-to-1 risk reward will allow me to put it behind the wick, I will. Otherwise, I'll come to the back of the body or even slightly inside the body if I need to adjust to get my 3-to-1. In this case, this actually comes lower, so this is where you put your stop. So that's how I manage that. And so you would have got stopped out once. Then right here, you'd have your trade. Your entry would have been somewhere, around this area for the reversal. Your stop down here. Your long, 3-to-1, 1, 2, 3-to-1, right there. Would it have ever gotten hit during the day? I do not know. Now we would not have hit the profit target. But you don't do stupid just numbers 3-to-1, right? In this case, what we'd be doing is we know the loading up, like we know that they were shorting, over here. They've been doing a lot of it. Right? And they're exposing shorts, like they're accumulating shorts now. Over here, like we can see accumulating shorts. Now you couldn't actually see that back here when you're trading this day. Um, but like right here, all these shorts exposed, right? So they're going short. They're exposing more shorts for later. So like they're in a downtrend. You're in a, like they're exposing the shorts and you don't see them. They're in a downtrend. Eventually, it'll turn around. You'll know it's turned around when you start seeing them manipulate into these shorts. Um, so right here, you would look for maybe a pullback target, right? So you come over here, and there's a 68% pullback, right? Right here, there's a 68% pullback. It says 38, but that's just because I have it backwards. If I did it this way, you'd see that like this is 0, and then we pull back to the 61. Did I say 68? 61. Um, so it pulls back 61%. It pulls back to the 38. Uh, right there. So that's, and I wouldn't have even targeted that, honestly. I would have targeted this liquidity right here. So I would have brought this down to this liquidity and not even like all of it. I would have just gone like conservative, like inside the wick. And now I would have adjusted this to be 3-1. So I would have just entered the order, right? Just get the order. Like that's the hardest part is getting the order. Like, cause if the thing moves away and you don't get your entry at your pullback, your 21% pullback, like you're not even in the trade. You can't manage a trade that you're not in. So get in the trade. And if you need to end up closing it because it doesn't make sense, I mean, hopefully it moves into the money and you're looking at it, you're like, I don't really know how to manage this trade. It's not giving me like projection profit targets that can manage my risk to reward. You don't need to exit it. Just bring your stop loss to break even at that point. Okay. And then if you get stopped out, whatever. Um, it beats closing your trade. You know, you could let it run farther. Um, normally I wouldn't bring my stop loss to break even right away because it can come and get retested. But if you don't have a valid 3-1 target, like you try to target this and doing 3-1 puts you like way up here like in the money, um, and that's not where your entry is, then just go in the money so you don't lose. Um, but like right here, if we want 3-1 on this, we could put it like there, right? And that fits. It's like basically at the back of the candle wick, right? So do we miss out on some of the profits? Sure. But again, this if you were doing like a 2-trade thing, um, you could do 1, 2, right? If you want to put your second one at 38%. But I mean, the difference is all of, let's see, that's 88 to 13. I mean, 88 to 11. That's not that much. You're talking about what, an extra 20 points? If you want to go for an extra, I mean, 20 points times $20 a point is $400. I'm not saying $400 isn't, I'm not saying $400 isn't $400. What I'm saying is if you already made 200 points times 20, if you already made 4,000 in that context, what's another $400, right? Um, and I mean, that's 4,000 on one contract. You're talking about the second contract. You can guaranteed sell that second contract right now for 4,000. Right now, you're up 8,000. You're really going to hold out for 8,400? Like you know, you can lock in an $8,000 profit today on this trade. What you're really going to risk losing that? I mean, 400. You're going to risk that? No, just cash out here, or at least move your stop loss. You know, if you, I can't see inside this candle. We can't drop down to 5 minutes or 1 minute. Maybe this got hit before it pulled back. We don't know. Maybe it would have hit that. Or maybe it would have just pulled back. Maybe it would have gone up to here and then pulled back and then gone up. Like, we don't know. Maybe it would hit it, maybe it wouldn't have. But by at least moving your stop loss up here, right? Um, you can guarantee that you get out at least your take profit one. I know there's some other times where I've said, you know, just move it to break even and let it play out. Uh, like if you're trading with the trend where you know there's like been a lot of you've seen them stacking up a lot of positions for that. But like here, the trend is bearish overall. Like, it's a bearish trend right now that we're seeing them stack up, preparing for a big bearish move. Or they're preparing for, they're going bearish. They already have their shorts. They're not harvesting these because they already have their short position. Like the market people are bearish. So like this right here, trading into a pullback, like I'm not gonna hold out for high hopes that we're gonna hit exactly at our target. That's why I'm saying go for the guaranteed liquidity hit. I say guaranteed, the higher probability liquidity hit, right? That's what I'd be targeting. Now, if you had again, I wouldn't do 3. I'd probably only honestly just do 1 if I'm doing against the overall trend, like right here. We're going down and we haven't shown like any higher highs or anything like that to suggest that we're turning around. I just trade 1. I just do the 4,000 be out. Or 400 if you're doing micros, right? So really you want multiple if you're planning to scale because you're trading into the trend. Like a downtrend play, like if you're trading this, let's do the next day, right? So the next day comes over here. What do we see? We see they built shorts right here and they manipulated all those. They came up and then like this again, this is 3:30 in the morning. What I tell you, you get a low around 3:30 in the morning. It's like clockwork, right? Now it's not like the low was down here. But you come up and all these shorts that were built during Asia and even in the beginning of London around 3:30, they got the low, and then boom, right here 3:30 you get the manipulation up right into 4. 3:30 to 4 o'clock is a manipulation window. A lot of times it does kick in early, like around 2:30 to 3, but not always. And then boom, it manipulates up, and then we take all this liquidity here too, right? And they even come up, and then I'm guessing if we were to drop down to a 1 minute or 5 minute chart, we'd see more liquidity up here. And then like there's a gap up to this liquidity. But again, we know they leave some liquidity every day, right? Like they leave it, they let it build up. So we can't really expect them to take all of this. Like at least this stuff here, they're not going to take it. Maybe they'll take this, right? But they're going to get the low hanging fruit and like leave the juicy bits for later. That's what they've been doing every single day, right? They didn't take this. So if you expect them to leave this and maybe leave this, then you know they're going to take this. So this is kind of your target. So when you're looking at your fib levels, right, we want to see, okay, what's a pullback for the day? From low to the high. From this to this. We're looking at the pre-market. So from the low that we got here to here, like pull back to like 38%, or like a 61% pullback to the 38% would be like right here. Say what liquidity is sitting here? Well, this right here, right? This is what I'd target right here. So once you start seeing this expansive move and it covers all this, now inside this candle, could it have pulled back? Maybe. If we were looking at a 1 minute chart, maybe we would have gotten an entry. Here, you're not going to get an entry into this move. You just miss out on it. Okay. Sometimes you don't get the entry. On the 15-minute chart, you don't get the entry here, right? You can't get in on this move unless you just bought down here because you're like, I mean, this could have been an extended manipulation. I would not have bought right here. This is, we came up. This is going down. It's just going down, 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 down. Like there's no sign that this is going to reverse, right? It's not like it went up, 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 and then like if this right here, if this move came during London, if they had been building up and then London moved down and then hit like a fib level, then yeah, I'd say trade up. But that's not what happened. So I would not have taken this trade. Like I would have missed it. I would have missed it. Now if I was I'm saying I would have missed it if I was looking at a 15-minute chart. I don't know what this would look like on a 5-minute chart, maybe, or a 1-minute chart. Maybe you would have been able to get the trade. Once you see that you've cleared these, like you probably, I mean, this is expansive candles. It's probably made up of other expansive candles. If they have any wicks that would have given you the 21% reentry, then maybe you would have been able to get in part of it. But you'd be targeting this. I would be targeting this right here as my my profit target. So I'd get into the trade, and then I would check to see, you know, I don't know where I get in. Maybe I get in, you know, here, right? Maybe that's my entry. Whoop. Maybe this is where I entered the trade. And then if I have to put my stop down here, and I'm only targeting this, I say, oh, that's not even 1-to-1. I would immediately just start trailing my stop. I would not let my stop sit down here. I would trail it to break even. If I get stopped out early, I get stopped out early. Like I might trail it and I might get stopped out by this wick, right? But if I can't have a 3-to-1 or at least a 2-to-1, I'll take my thing to break even, right? At the bare minimum, I'll take it to break even, if not trail. So here, I mean, you could have just broken even or just like brought it like right into the money. You know, you could have brought your stop loss. Whoop. In this case, with like a 1-to-1, I would have just brought my stop loss to break even right away. If it gets hit, it gets hit. I'm not going to risk this money if I don't have at least 3 times the reward available to me. So I enter the trade. Like if I look at it and if I look at it and visually it looks like it might give me a 3-to-1, I'll enter the trade. I mean, looking at this, I'd say probably not. But if it's moving that fast, I might just try to get in and then like get to break even real quick. And then if I get stopped out, I get stopped out. I'm not saying that's the way you should trade, but I have done that. You know, I'm not saying I'm proud of it, but like it's something you could do. But I mean, you generally don't want to chase these things, especially if you're already halfway there, right? And you come up and you know that once you get here, like it's going to turn around and it's setting up for a short. And you know the directional trade is short, right? I mean, you see the day before, I mean, how big was that move? How big was this? That was like 400 points, mostly in the pre-market, right? Like that was before the market, like the market opened here and moved down a few points. All this was in pre-market, right? And that's not even including this. Like the whole move down, you know, to where the market opened was like 327 to the low, 466. Like we know we're bearish. So instead of trying to chase this for like a few points, I say a few points, that could have been 100 points. I don't know. What do we have here? This is 90, and that's 144. Might be 150. I mean, you're talking about 60 points. That's not bad, but if you know you're likely to get something in the 100 plus points on the bearish move the next day, you don't need to be chasing this, okay? If you see the manipulation is like gonna go in the direction of a trend, like for a counter trend day, like that's amazing. Because you can trade in the direction of the trend, right? And then that means you're gonna get a counter trend likely when the market opens. So the market's gonna open, pull back into some more liquidity, and then probably go in your trend direction, depending on, you know, how things are setting up. Like if there's some extra like liquidity from the pre-market the previous day that they can snag. Like if you do your fibs and you're like, oh, they could target that if they manipulate down to here, then it might be worth taking, you know, those kind of trades. But like this, if you get in late, like if you were able to get in down here, I'd say it's fine. You know, you can get 100 points, right? Over about 100 points. That's not bad. But if you're only getting like 40 or 50 points, I just pass it up. So now, like for the next day, right? You got this leg here. Nope. You got from here to here. So now your profit target right down here. So you know you're going to go from, you look for your expansive candle right here. Boom. You got your candle that expands away. You do your 21% pullback on that candle. So your entry is right here. This is your entry. So we'll do a short position with an entry right here. Stop loss. Right back here. Now we'll get this Fibonacci and we'll put it back. Nope, this one goes here. This one goes here. Okay. Now we could put this all the way to the low of the day. Right there. I kind of would do it to both and just see what lines up with liquidity. So I'd kind of like just draw out some liquidity levels here real quick. And then see what overlaps. They're pretty close. Like this one overlaps, right? With the 141. So I'd say this is probably like a key level. This one is close. I'd pull this one back a little bit. This was the 161. So I'd say those are the two most likely levels. Then I'd go back and I'd see what lines up with liquidity. I'd say this one, there's no liquidity really here. I'd get rid of that one. This one, it kind of targets up here. I'd target that, and then I'd move this up, and I'd target this. And that's how I would manage that for my profit targets. And then I drag this down, right down here. Again, if you see that right here, there's also this. I mean, you could have, again, you're trading in the direction of a trend that's giving you a lot of moves, and you know it overshoots targets. So if you want to take 3 trades or 3 positions, you know, you could do that. Sell one, sell the other one, and then leave a runner, right? And your runner just, you can keep moving to stop. You know, when you're trading in the direction of the trend, just bring it to break even or whatever, or just kind of trail it behind some other candles, and then just target it based on liquidity, right? Like we know there's some liquidity sitting here. You know, you go back, say, where's the next liquidity? The next liquidity is, you know, we got some liquidity sitting down here. We've got some sitting down here, right? So as you start getting those, I just trail the stop based on the liquidity, right? My gosh, it went even farther. Oh no, it actually did come down here in the pre-market the next day. So like you see this, and then you see it's like it's coming down here, and then it's pulling back. Like you could trail it. Now you get stopped out at some of these. Well, this one it expanded down here, and then it went into here. So if you had this one here, and then when this one hit, like when this hit this liquidity, if you moved your stop back, like imagine you moved your stop, you're just kind of trailing back here behind these candle wicks, and then it comes down here and it hits this one, and you put your stop here, and then like it comes down and then it hits this one, and then you put your stop here. It didn't get stopped out. And it comes down and hits this one. You put your stop here, then you get stopped out. You get stopped out at basically TP number 3, right? That's not bad. Or you could say, well, this one's far. Maybe you're also looking at RSI or MACD, and like maybe it shows some fading. I mean, this is actually pretty strong. I don't think you're going to see much fading. But if you're like deep oversold, or you just like, that's a big gap. Like these are close. It makes sense to target them. This is a big gap. Maybe you just want to get out right there. Or maybe you just move your stop loss here, right? You're like, that's a big gap. When that gets there, I'm going to move my stop. If it keeps on going, great. But like most of these, like this one right here, when this hit, the stop didn't get hit. This one, if you moved your thing here as soon as this hit, yeah, you would have got hit. There's just some things to keep in mind. There's no guaranteed way to know exactly where this, that, or the other is going to happen. You could also expand out the previous day. You could, I mean, we did this for here. Say, what's the profit targets for the day based on, you know, the last swing and, you know, the overnight session. But you could also say based on the previous day, right? Based on the previous day, you can draw those out and you can say, well, we've got, a profit target of here and here, right? And then you can also say, what does the previous day itself give as profit targets, right? And then you can say, well, we got this and we've got this, right? Now, if we get rid of this and we scroll over, we can say, now these four, what lines up with them? And we could say, well, again, we want to be, let's see, this one here. I'd say for this one, I'd go for this liquidity right here. And this one here, I'd basically be going for the liquidity down here at this pool. I wouldn't do that. So those will be my two targets. Now, I don't know if those get hit. But those are the only two I'd keep. Okay, so this one gets hit in the after hours, doesn't get hit during the day. So you would not have hit that target during the day. Now, the exact fib level would have gotten hit. So if you're just trading based on the fib levels, and you see this get tagged and then it starts to bounce up, I mean, you would have been gotten stopped out already. But because it's like on the day, you can see that and basically know that you're kind of done for the day. Although you already hit your other profit targets, so you kind of already know that. But doing the last swing is the most accurate because that's like the next move, right? These ones can get hit, but they generally get hit by other swings extensions from each swing. So like I'm sure that if we do this right here, like this swing low to this swing high is probably going to give us that profit target down there. There it is, 127 to 141. That's where we hit that. And this one down here, we never even hit it. So the one set, the fib level, it got respected, but that's not, to me, that's not tradable. I don't trade fib levels. I trade liquidity. And now maybe on a smaller time frame, maybe you'd see some liquidity here and you would have had a valid target. I'm on 15 minutes. I don't see anything there. So, now this right here formed at 1800 hours. We see an expansive move away. We get a pullback. You could trade into it. I don't generally trade right here in the when the market reopens at 6. Sometimes I'll watch what happens. Now, if I was watching what happened and I saw this expand away and then it bounced off this target, I might get in on it like an upswing trade because I'm going to expect in this bear market they might want to catch some of this. Now, like we said, they're going to want to leave some of this exposed, right? Especially like the high value stuff. So like this stuff here, they might take the bottom and then leave the top. So I'd say they'd probably leave these ones. This one here is like doji. There's probably a lot of buying and selling. It's kind of neutral-ish. I'd say these are protected and I'd look for pullback maybe to this level. So I'd look for fib for that. So I would go here and I'd say, what are the targets for this pullback right here? And we see 141 comes to this, basically right here to this doji. So that's where I'd kind of look as my target. And this one here, 127 comes up to this. So I could take that trade right there, right? I could trade that. It does actually go higher, and they actually do take all that liquidity. Wow. And they left the pre-market stuff. That was unexpected, but still, it's decent trade. Now, as far as trade entry, you're not necessarily going to get the pullback, like right here at the open of like 8 a.m. or sorry, 7 p.m. I'm thinking 1800 hours. right here, 1800 hours when the session reopens. On a lower time frame, you might have been able to get that. Here, you wouldn't necessarily get it. You just have to buy into momentum. Like you could look, you didn't get the fill. You come back, you see this comes up, it comes back down, it starts over. You just like, I'm just gonna get it, right? You can go in here, and then you can manage the trade. Again, the same type of thing. So let's say you got the entry here, because you're hoping to get the pullback here. It closed here, you didn't get it, but it closed low, right? It's not that much above your, like you were hoping to get an entry here probably, but you missed it. So you get here instead. The difference is, let's see, that's 126, 94. It's like 30 points, right? It's a 30-point difference. But you're trading up to here, right? And that's 146 points up. And then you got your stop down here. That's 1 to 4. Now, again, you can put it anywhere inside this candle body. So we'll bring that up to 3 to 1 right there, halfway into the body. That's a viable trade. Right there. If it wasn't a viable trade, then as soon as you're in, like if you realize that in order to make this trade work, you have to bring your thing into the money, then bring it into the money. If you get stopped out, you get stopped out. That's just part of the game. But like if you did this and like the candle was down here and now you're not behind this candle, then do not put your stop here. Like if the only way to get a 3 to 1 was to put the stop here, my stop is not protected. I'm taking a risk. Like it's not a big risk, it's 8 points. But imagine that was like 20 points or 40 points, right? Imagine the only way to get a 3 to 1. Let's imagine that's not 13. Let's imagine that's 3 to 1. Imagine the only way to get a 3 to 1 was to take like a 30 point, like a 30 or 40 point risk. And you're not putting it behind any structural support. You're taking a risk that has a very high chance of getting hit. Like that's stupid. So if you can't put it inside the candle body, then bring it into the money. Okay? Eliminate the risk. Yes, you also eliminate profit potential, but you eliminate unnecessary risk, right? This right here is not unnecessary risk. This is warranted risk. This is calculated risk. This is stupid risk. You're saying you're like, I want an 18 to 1 profit, risk reward ratio, but you put your stop somewhere that you can actually get hit relatively easily. This thing could wick down and hit you. And then now you basically just gave up 8 times 20, $160. No. Yeah, $160 for nothing, right? This right here, safe. This right here, unsafe. So if you do this and then you realize that, oh crap, I only have a 1.7 risk reward. I have to bring it past the candle body to get 3 to 1. Just wait for it to go in the money and then bring your stop in the money. If you get hit, oh well, right? Oh well. If you don't get hit, then terrific. You can wait till you hit your profit target and reach 150 points, right? I have gone long enough on all this. It is now 7 p.m. Holy crap, I've been streaming since 9 hours now. I still haven't gone to the gym. I haven't eaten dinner or lunch. I'm hungry. I'm going to go to the gym. I'm going to eat. Probably go protein shake, and then I'll go to the gym, and then I'll come back home and eat. And then I'm going to go to bed. My goal is to be in bed before 10. 11, 12, 1, 2, 3. It'll only be 5 hours. I'll try to go maybe by 9. Maybe I'll just lift my weights I have here at home. I just do a little bit of stuff, do some push-ups and weights, and eat dinner here. And then tomorrow morning, I'll do my early stream, do a little bit of analysis, and then I'll do another stream starting probably around 9 a.m. So if I do wake up in the middle of the night, I'll do a stream probably around 3 or 3:30 to maybe 4, 4:30. So maybe an hour and a half at most. And then I'll go to the gym proper and do leg day and all that kind of stuff. So all of this I can hide now. I can hide liquidity daily. Boom. Oh, that's so nice. And I can go ahead and get rid of these. These were just examples for profit targets. And that's how I trade. Man, look at all this, just sideways action here. Now, I don't know if you noticed, when I said that other day, like, wow, they actually did come up and steal that liquidity. Like, what day was that? I don't even remember. Let's undo this. Control Z, Control Z, Control Z. Okay. I need to see where okay, right down here. This one. Control Y, 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 Y. So this is around January the 3rd. Okay, so January 3rd. I was saying that I didn't think they would come up and take that liquidity from the early morning like this, and then they did. When I said that, I was like, wow, I wonder if things are changing now, right? Because I mean that's a change. They weren't doing that. They were leaving it, and now they're willing to take it. What that tells me is that they're willing to take it because they're getting to a place where they're going to be able to start taking it again, right? Maybe after the next day or two. I'm not saying they're not going to keep going down, but if they're expecting to start going up soon, they'll start taking this. And look at that. We do start coming back up. Like, I didn't say that at the time, but I was thinking it. I was like, what? Man, I wish I would have said it so you'd believe me right now. Maybe you might believe me. But that kind of, I was like, what? They did that. Like, you saw me said that I didn't think they'd take it. And then it just dawned on me that, like, that was actually a valid thought. Because, so that's something to also notice. Let's go look. My gosh, I thought this was over. Like right back here. Let's see, we got pre-market, we got cash session. So right here, some liquidity from a few days ago. Let's draw a box here. Drag this out. Boom, they take it. It's like they're starting to take it. So once you see this, like, they're going to start taking more liquidity. Now, over here, they didn't spend a whole bunch of days doing it. They did it all in one night. They took basically all the liquidity that was left on the books, right? But like even here, right? The stuff that was formed yesterday during the session, they took it in the pre-market, right? Like, I noticed that. I didn't realize how significant that was when I saw that the other day. So when I just saw that other stuff recently, I was like, wait a second, right? Now, this is also, we got this, we know we're in the distribution window here too. And then they took it, like, double confirmation, right? Now we know this is like they're loading up on shorts right here, but they're wiping the shorts off the book. They cash in on them, and then they go bullish, right? Now they go bullish for the purpose of loading up on more shorts. But yeah, that's interesting. It's interesting. Good to know. When you start seeing them like leave liquidity on the table, and then the type of liquidity they leave on the table starts getting tapped. Like, literally, they came back to the stuff that was generated during market hours. They took that market hour liquidity, boom, came into all these longs that they built up, and they shot off, and then they took this market hour liquidity and then this market hour liquidity, and that's right where they turned around. And this is the thing I was talking about when I said, I wonder if they're going to come up to the all-time highs, and they didn't. That's also something to keep in mind. They're not necessarily going to come up to the all-time highs because this is their position. Like, they did this in the after hours, right? They did this in the pre-market when most people aren't trading. You got Asia, London session. They're the only ones kind of really trading over here, and a few people from US, pre-market. So most of the liquidity up here belongs to the institutions, most of it, and maybe some people living in Europe. That's where most of the liquidity up here comes from. They're not going to tap into their own liquidity. So when you see that at all-time highs, just in the future, just know that this is the premium target, and don't expect an extension up. I wasn't aware of that. I wasn't thinking about it quite like that at the time. I did have this mapped out like very precisely. Forecast, let's see, liquidity. Oh, let's drop down to a 5-minute time frame here. So if I show liquidity here, what's this? Oh, that's daily. Active and old, whatever. Yeah, right here. The spent liquidity. Like it literally came up. Now this would actually be a cloud. It's the wrong kind here. Liquidity cloud, no extension. I don't really need to be changing this right now, but it just kind of bugs me because it's all the wrong color. Whatever. I'm not gonna. No, I do. I am gonna change it. There's not that many of them. I might as well just do it now while I'm here. Sorry, bear with me. All right. So right here, I drew this out, and it literally came right to the top of it. And I didn't short right here. Like I wanted to, but I didn't do it because I saw this up here, and I wasn't thinking about it in the way that I just framed earlier. That this is the institutional liquidity. They're not going to hit it. That's their position, right? Think of this as a giant order block. That's theirs. They're not going to hit their own stuff. So I should have shorted here. I got a short, right? I got my short like right around here, I think. And then, I did pretty good. But I could have done better. That's all. That's all I'm saying. So just things to know, things to keep in mind, lessons I've learned. So that was actually yesterday. That was yesterday. So yesterday, I traded down here with micros until I made like I think it was like $200 or so, and then I used that to basically fund an E-mini, and then I would scalp E-minis like on the 1-minute chart. I'd wait for like a pullback, and then I'd scalp like a maybe 10 or 15, 20 point move on a E-mini. And then I did that like 3 or 4 times, and then I built up like another like $600 or $700. And then now I was up like $700 to $900. Then I used that, and then I actually waited for a pullback, and then I bought an E-mini on the pullback, and I just held it. Once I like had like not a pullback, but like when I had like the expansive move with an order block and all that stuff, I got in with like an actual trade on an E-mini, and then I caught like another I think like $800 or $900 on that move. And I closed the day out a little over $1,800. All started by using micros to give me a cushion, to scalp E-minis, to actually go in with a real position. Yep. But I would have loved to have gotten even a micro or two right up here, right? I could just put my stop loss back here in the void, right? Because like this whole area is like a no man's land type thing. So I could just put my stop loss back here. I could afford that on micros, right? I couldn't necessarily. I didn't want to put a stop loss like way back here, like 50 points. That's like $100. It's not that I can't afford it. It's just a little bit over my risk level for the account at the size I had it at the time. So I couldn't justify that. But putting it just a few points up, like putting it back like 10 points, um, would have been fine. Like this is the level, it breaks through, and then I just put my stop like 10 points back in an area that is like the low liquidity zone. Where, this is low liquidity, and then like right up here is the other liquidity. If I show it again. It's not showing it. Oh, because it's still intact. Yeah, so this right here, and this actually comes down right there. So that's the intact liquidity. This is basically a low liquidity area. And they actually, did they come to right here? Is that where they actually hit? I'm curious. Yeah, that's the one they actually hit. So I would have basically just tried to short right here, and then I would have looked back here and then just said, okay, where can I move my stop to? And I see this wick, right? It's kind of close to these. And then there's like a gap up to this one. I think, okay, there's a pretty big gap here. I probably would put my stop like around here. So let's see, how big of a stop would that have been? So this area right here would have been about 20 points. That's only $40. That's totally within my risk parameters. So I totally could have done an E-mini there. Or I mean a micro E-mini. And then from there, instead of like scalping all those things, like I didn't really, let's see. So if I would have done that, because I had the levels. And then if I put this back, like, what would I say, 20 points? Like 50 points, like I'd be up $100 right here before it even broke like this level right here. And then I think I got in on like one of these bounces around here or something. Or no, I was shorting this or something like that. That's $100 on one contract, on one micro. Now, like that right there, like this play on an E-mini, I basically got like half of that on an E-mini, more or less. Like 50 times 2, yeah, that's $100. Uh, I don't know where I entered during the day, like for the other play. I think I just kind of bought into momentum with it. Like on a like pullback on a lower time frame on 1 minute. So if I go back to 1 minute, how did I do that? I guess I got look at I got a bunch of executions from all the scalps. It's gonna be messy. It might have been like around here or here, something like it was probably around here where I was scalping them. Um, yeah, I think I was scalping these right here. It's like here to the pullback and the continuation. I think I probably got in here. It's like this right here. I mean, like this risk to reward right here. Like once I see it moving away, and that like I realize that's the end, I could just bring my stop loss down. Um, and like a 3-to-1 would be insane. It's not much like this, and then you start to see it bounce up here, and then like this swing, uh, like you see it bounce off these lows right here, exiting that with like $100 right there, and then it comes back up, and then you see it reject off the level again. Like I could have used that $100 maybe. Let's see, could I have done that? Like if I would have come over here, we get right there. This one moves away. We do get the entry with the pullback right there, 21%, or right here, 21%. No, wait. 21% would have been from here to here. It would have been this blue line right here. Oh, it's in the money, so I would have just been able to enter market because we're already below that. So I would have been able to actually just enter directly at market right there. This would go back behind that candle there, this one, and then I could just hold that. How much risk is that? 13. 13 times 20 is like $260. that's not bad. Basically $100 of that is already funded from profits. Now, really, maybe not all of it, because like we said, up here, would have got in there, and then I probably would have gotten out here, right? Or maybe after I saw it like bouncing. So maybe only 37. So like $75 is what I maybe would have made. Because I wouldn't have been able to exit right there. I wouldn't have known that was where it was going to bounce. Let's say I made $75. Let's think this through. Would I have been able to afford that? Stop here. Oh my gosh, this is so big. Let's bring this in. 13.5 times 20 is 270, right? Yeah, 270 minus like 75. That's basically about $200 of risk. Um, but after I see it moving away, like I've kind of got my confirmation. Um, it's more than I can afford still. I could get in with another micro, but I mean, I might as well just hold this micro. If that's the whole point, is to I could get in with the mini, like do what I was doing, like scalp them. Um, I still feel like what I did was actually really good. Now my account balance is higher, I could afford it. Um, I could afford the $200. It's within my risk tolerance now. But yeah, no, I think what I did was really the best. There's no other way I could have managed that better. I don't think. I know I think I did pretty darn good. All right, now we can go hide the spent ones, keep the active ones, and then targets. We'll go ahead and delete all the targets because those are old from a previous day, previous session. I mean, they're from today, but they're no longer valid targets. Go to that. Let's see what we got here. Oh, that's the spent stuff. Fib time. All right, we don't need any of these little mini ones. I never did go over that other stuff fully, but let's move this. Go ahead and unlock that. We'll move this to 1900 hours. Whoopsie. I didn't mean to put that exactly on the overlap. 1900. Right there. Perfect. Now this, I can change that again to template. Liquidity pool, no extension. There we go. Alrighty. This is, oh man, how awesome is that? Remember when we set that to liquidity pool plus? It taps it and goes. And we know basically this is kind of like in thirds, right? It hit this one right here and this one. No, what did it hit? Let's drag this up. You know, it was snagging this one here. This is the one it was targeting right there. And then the first one targeted these candles. That candle right there. I was like, boop, boop, boop. Like this one almost got it, and then it didn't quite, and then this one got it. That's so cool. Liquidity Pool Plus, brought to you by me. All right. I think I've said I'm done now like too many times, so I'm not gonna say it again. I'm just gonna end the stream.